my friend.
All right. Hello, everybody. I'm Jeff Gibby with Metastock. It's good to have you. Thanks for coming. Welcome to the day 3 of the Metastock Online Traders Conference. It's good to see you. If you are joining us from YouTube, make sure to like and subscribe and comment. And if you have any questions at all during the event this week, go ahead and ask them. If you're in GoToWebinar, the questions box, your future is going to be over on the right. I had to pause that. And same with GoToWebinar, there's a little questions box. If you ask a question, we'll be happy to see it. You should be able to hear me great. You should be able to see my screen and me. So let's go ahead, and without further ado, we're going to go ahead and kick it off. And we're going to start it exactly how you'd expect, with a little bit of a legal disclaimer. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse a purchase of a security, nor are they paid for the promotion of any security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So I say this every time I read the legal disclaimer, but I do just what my goal is here is to provide a lot of really good speakers, a lot of really good education, and really help you learn more about technical analysis. We're not really more, what I hope you get out of it is some knowledge and a little bit of fun too. So welcome to the event. Let's go ahead and kick it off. As we get started, I do want to kind of say thank you to all of the sponsors that we've got. We've got a number of sponsors this time, so I'm going to go a little bit quick, but we'll talk a little bit about them between all of the breaks. AAII.com has been a sponsor of the Metastock event. They're a hugely well-respected, well-reputed organization. They started in the 1970s. You can find out more about them at AAII.com. Stocks and Commodities Magazine is a great magazine. They've been publishing articles since 1982. They've been sponsoring our event since we started our very first online trader summit, which I think was maybe 12 years ago now. So great partner of ours, great magazine. If you have a subscription to Stocks and Commodities Magazine, it'll give you 17,000 articles in their online portal. Great magazine. www.traders.com. Hopefully Greg's able to keep up with all of these. And we do have a little bit of a new community. It's a little bit of a partner site. We'd like you to join it. It's thetradersforum.com. You can go up there. We do interviews with experts. We do lessons on indicators. We have a lot of active market chat that goes on up there. It's all free. It's all available. You can join it at thetradersforum.com. So, and then in addition to that, I want to say thank you to the CMT Association. Our first guest today is an actual CMT. The CMT designation is a big deal. If you're interested in getting having assets under management, you might want a CMT. If you're interested in if you work for a bank and you're interested in having more assets under management, you might want a CMT. A very, very good accreditation process that they've got, very rigorous, very thorough. You can find out more about that at cmtassociation.org. Last but not least, and then we'll get on to the show, I do want to say special thanks to Trade Thirsty. Trade Thirsty has been a partner of Metastock since they started. They started in 2013. I've known kind of the owner of, and she's just been amazing to work with. If you're interested in getting a free ebook from them, you can go to tradethirsty.com/free. It's going to talk about ETFs, and we do appreciate all of our sponsors. Trade Thirsty is a great company, and we love working with them. Whew. Of course, we're Metastock. I thought we were done yet. We've talked a lot about Metastock yesterday. It's been rated #1 in its price category by the readers of Stocks and Commodities 31 years in a row. We're doing a special offer where for $75 you can try Metastock for 3 months. Very, very easy. Metastock.com/conf promo. If you have any questions about any of the stuff that we're talking about, you want to talk to one of us, 800-882-3040, metastock.com/sales-chat, metastock.com/conf promo. Greg, you're doing amazing in getting all of this stuff into the chat. Our very first guest today is Martha Stokes. Martha Stokes is a CMT. She has done a lot of work inside of Metastock to help you identify what's going on in the dark pools. A lot of times, like a lot of the work that she's done is in dark pools. She runs a company called Technotrader. You can find them at technotrader.com. And it's her company has A+ reputation with the Better Business Bureau. It's also hugely well respected, and that's why that's one of the reasons. I was going to say that's why we invite her in, but that's not the only reason. We absolutely love Martha. She always does a great job, and she always has something that's really interesting and topical to talk about. So without further ado, Martha, whew, how you doing?
I'm good. Can you see my slide?
Not yet, but I just sent the thing. It should be asking if you want to share the slide.
Okay, there we go. Okay, show my screen. Alrighty. Hi, everyone. It's great to be here. I am very excited. I think Jeff Gibby and Metastock are just simply awesome. They're great partners for us. And I always try to come up with something new and different that you haven't learned before from me. This does include the dark pools. They're very important. You have to remember that 80% of all the market activity is transacted off the public exchanges. It's not visible to you during the day. It does come down on the Metastock charts after the market closes, usually about 30 minutes after the market closes. All the data for the day is there for the swing traders and those day traders who actually study stocks before the market opens. That's all there. But you have to remember that you're only seeing 20% of the activity if you're day trading and looking at charts during the day as the market is open. You have to be very concerned about that because it is not enough information and you need more. That's what I try to provide. I'm a buy-side professional. I'm in retirement. And I do this because I love to teach. We're going to talk about cycle analysis for stock trading today, how to capitalize on key cycles of the stock market to optimize your trading strategies. I chose this one because it seems like everybody thinks we're ready for a bear market or volatility. This is my disclaimer. It's basically the same thing as what Jeff Gibby said. We're an educational program. We're not recommending anything. All the charts are provided by Metastock with our thanks. So cycle analysis for trading stocks. This is me. I'm a chartered market tactician for many, many years. I'm considered a brain trust at this point. I'm a member of the CMT for many years. I'm the CEO and co-founder of Technotrader with Howard Johnson. And my cycle evolution theory, how to identify evolutionary cycle deviations, is the topic for today. And you want to wait and hold on because at the end we have a very special offer for you. And it's you're going to want this. It's free and it's rare. And it's going to help you a lot with information about the inside of the market, the inner workings of the structure of the market. So you'll want to hang on in there and have that going for you. Okay, introduction to stock trading cycle theory. Cycles are one of the most important aspects of stock analysis that traders need to learn and use. However, it is often one of the least used or understood parts of your technical analysis. Without understanding how cycles define opportunities for trading stocks, traders often miss out on the biggest gains and the easiest stock trading. You're making it harder than it has to be, and you need to raise your expectations as far as the income you can make from the market. Today is an introduction to stock cycles and where we are in the bull market cycle that has been underway since 2023. Okay. So cycle theory basics. I wrote a cycle theory that was completely different than what everybody else had been doing. Early stock market cycle theorists were focused solely on proving that the stock market was actually had cycles. In 1890, Charles Dow wrote the theory, and he started writing and designing charts to show that there were cycles in the market. Everybody at that time thought it was all random. You couldn't guess, you didn't know. There was no way of finding out what was going on in the market. It was all random walk. Random walk theory is like, throw it out the window. The cycles are proven. We know the market cycles, everything cycles. And so what I did is I wrote a paper on the deviations, the extreme deviations, the reverberations, the changes, the cycles that collapsed and failed and don't come back. Things like that had never been considered before because they were so focused on cycle. Proving cycles worked in the 30s when they really started serious work on cycle theory for the market. They ignored the deviations, the mutations, the changes that go on in a cycle that either make it stronger or weaker or collapse or disappear or completely change. And that's what I focused on. That's why I won my CMT, because I had to send in a synopsis, and if everyone didn't agree that it was worthy of the professional doctoral thesis to apply for a CMT, that was the end of the road for me as a CMT. So it was a big gamble. Then they said it would take 2 weeks to find out whether I was approved for the thesis to send in the theory. In 2 days, they called me and said, we want your thesis. We want you to send it. I sent it in. And they said, it'll take 6 months for us to review this. And if everyone on the panel doesn't agree, you won't get your CMT and you can't try again. Well, 2 weeks later, I had my CMT. That's how important it is. It is an evolutionary thing that goes on. And I'm going to share some of that with you today. And students have access to the cycle theory because I did a whole course on it recently. And so that is also available to students. Industries have cycles. Stocks within each industry have cycles as well, but the majority of companies within an industry will tend to have similar cycles. Not all of them, but there will be a group. Identifying key industries is important for new technology cycle analysis. I'm going to harp on new technology cycles because we're in the mega cycle of mega cycles for new technologies, and there's a ton coming at us like a freight train. My cycle evolutionary theory, how to identify cycle deviations, was a huge shift from proving cycles existed to actually understanding the ongoing cycle changes as cycles evolve. Deviations of cycle patterns are crucial as these warn early of major market trend shifts from bull to bear and speculation to intermediate term corrections. We're in a velocity market right now. We have this thing going ballistic. It's not volatile. Volatility is like unexpected, unprepared, and inconsistent activity. It's not something. Velocity is very consistent for a specific period of time. So we're going to talk about product cycle because you have to understand product cycle, which is related to the stock market cycle. So every business has a product cycle. It can last 1 to 3 years, or it can last 20 or 30 years. AI has been under development for almost 40 years. It's finally at a point where we actually can start to use it, but it's imperfect. It's flawed because it's down here. So let's say we start here with innovation phase. We can do the iPhone or AI, either one. Somebody came up with an idea and said, hey, why don't we create something that can do this or that? Why don't we create AI that can talk and communicate like a human being, or fix phraseologies, or do other things, or do analytics for us? Okay, and then there's an R&D phase. Now the R&D phase can be, this is a real fast phase. Come up with an idea, okay, how do we implement it? Then the R&D phase can last anywhere from a few years to 20 years or longer. Biotechnology takes a long time for R&D to develop. That's why a lot of them IPO too soon, because they're desperate for money. But the NASDAQ private market is fixing that problem, and that's really important also to know about. I've talked about that in other webinars. The introduction phase is where they introduce the new technology to the early adopters, of the people who would buy that product while it's still kind of in development phase. They get a lot of feedback from the company and from the people that are early adopters. The secondary adopters come in and give more information. Then all of a sudden we have mass market acceptance. Boom! And revenues and earnings escalate, and 3 companies out of that industry will dominate. And they're all fighting for dominance. They're all just at each other trying to dominate that market, and one will make it. In 2010, when the new technology was cloud computing, we had Amazon, Google, and Microsoft all trying to be the dominant cloud technology. And when I gave my virtual course at that time in 2011, talking about it, I said it's going to be Amazon, and it was. Amazon was number two, Amazon was number one, Google was number two, a distant number two, and Microsoft was a very distant number three, but you could have made money trading stocks or investing in any three of those. So you're always going to have three that are the top key ones in every new technology, very important. Market dominance phase is where they emerge and you can see the stock and it's running like a bandit. You're making lots of money trading stocks, or you're very happy because you watch your 401k or what other retirement you have going up and up and up, and it's just amazing. Then we have market saturation phase. There's only so many people who will buy this product or service. And when all of them have bought it in this huge rush of maybe 8 or 10 years or 15 years, then all of a sudden revenues start to decline. Earnings will stay going up a little bit because there's clever ways to make earnings look great and wonderful. It's the revenues that matter most, but there's a market saturation phase. So the company goes into enhancements. Apple, oh, let's enhance the iPhone. Let's enhance the iPhone. They've been enhancing it for a while, but they're still in market decline and going down because they haven't really reinvented it. And this causes the bear business cycles of individual companies. So it collapses. And then they have to reinvent. Microsoft took 16 years to reinvent. It's like driving me crazy all that time because it didn't do what it was supposed to do. It didn't reinvent quickly enough because it had lousy CEOs. You have to blame the CEO when the company isn't performing. So new technology in the stock market cycle. We have the R&D phase where it's slowly being introduced and developed into a product that can be sold or serviced. You have the market introduction phase. This is where the early adopters come in, they test it. These are the techies. Right now with AI, the techies are pretty much all gamers and things like that. They want all this fantastic, beautiful scenery and all these fast things going on. And they're so in love with AI, but it's got problems. AI can be going along, learning, and then all of a sudden, oops, I forgot everything. Just like a child that has a short memory pattern, and they have to fix that. Market acceptance phase has a secondary adoption going on, and this is a larger group of people who are going, oh, well, my neighbor has this, I have to buy it too, and so on. So it goes into, that's where we're about where we are with AI right now. We are not at mass market phase, which is the longest trend up that will be going on and on and on. And we have the late adopters that come in very late, and they're procrastinators. They don't like new technology, or they don't have the ability to have new technologies because of the economic conditions of their country. Some people, not all countries are at new technology stage. The United States is leading new technology, make no mistake. We have the largest stock market in the world. We have the largest financial markets in the world. We developed the cryptocurrencies. We are the leaders. So everybody is going to be chasing us. Late adopters come in late. They finish that peaking cycle in the price. This is price. This is how price is going to move on a stock that's dominant. There's three that dominate. Pre-market saturation phase, their revenues slip a little bit. We didn't have as many revenues, but our earnings are great because they manipulate the earnings and move expenses to the balance sheet as depreciable items. Mass market saturation phase, the earnings start to show the sign that there's something terribly wrong. So they split the stock, or they do buybacks, or they have all kinds of things to try to keep that stock price up. Right now, everybody that's in mass market saturation is in buyback mode, and buyback mode is great. You can be buying back stocks all the time. Market decline phase is they can't do anything about it. It's over. The huge new technology cycle is ended. They have to reinvent. If they do it right away, they'll be fine. If they wait and they have problems with CEOs and stuff, they will start declining, and it will be very rapid bear cycle for that stock. It may be a bear cycle for the industry. It may not necessarily be a bear market for the stock market because we have so many new technologies coming to market. Why are cycles so important? In the late 1980s and into the 1990s, there were 6 major new technologies. Semiconductors, brand new. Intel led. PC computers. Dell Computers and other companies like that led. Software for business and consumers, Microsoft led. And then the young internet, we had Yahoo, we had Google. Communications, we had all kinds of new communications companies, some of them are long gone. And we had stock trading online. Woohoo! All of a sudden, we don't need to spend $75 to get into a stock and try to trade it when we can't even see what the chart says. New technologies that displace and disrupt older technologies are the major force behind every great bull market. I am sorry, but the government doesn't control the markets. The markets are in control of themselves. It's new technology that drives the market. You have to keep that in mind at all times. You may hope that somebody can fix your problems, but it's the market that fixes your problem. The stock market is poised for a massive displacement technology revolution that is already underway with the first of many new technologies, artificial intelligence. It's still very primitive. It has problems. Healthcare industry has gone bonkers on AI. Oh, we're going to have it analyze this. Oh, we're going to have it study this and that and this and that. Well, it's too soon. It has mistakes. It makes false positive and false negative on cancer. So somebody's getting a treatment that they don't need, and somebody else isn't getting the treatment they do need. It's going to cause some lawsuits there in the healthcare industry. Knowing this in the cycle prepares you for, okay, you have to be careful investing in healthcare in the United States, and I have to be careful when I'm trading it, because all of a sudden it may crash and burn because there's a sudden of huge class action suit. Why the stock market has cycles. Cycles are everywhere in nature, climate, social interactions, wars, pandemics, business, and everything people create or do. The universe is cycling. Everything has a cycle. The cycles of the stock market start with new technologies that disrupt and displace older technologies. When in the turn of the 20th century, when automobiles were being developed, all of a sudden horse and buggies went gone, and we don't have any horse and buggies stocks anymore, do we? This has been going on since humankind first started forming societies, cultures, cities, and countries thousands of years ago. Industrial revolutions are cycles. We're currently in the fourth industrial cycle with the advent of AI, robots, hyperautomation, augmented reality, cyber technology, and virtual currencies. And it's the biggest I have ever seen, and I have been investing and trading since I was 12 years old. Okay, I had a great grandfather. Here's the NASDAQ 100. We're talking about a detrending oscillator that we want to take care of, and watch and see that we have a low here that's coming up, and we are a long ways from a peak. So this can go on for a long period of time. We also have volume, a line volume that's going up and up and up, and that's very important also. The new technology cycles that are underway that you need to watch for, eventually these will be industries. There'll be an industry for artificial intelligence and integrated artificial intelligence. This is coming next year, integrating it into everything. Augmented reality is underway. Crypto technologies, coins or securities or tokens, non-fungible tokens. I'll be giving courses on these, so how you trade these and take care of these things, because they are becoming very prominent. Bitcoin tends to follow the stock market, so those people who are in Bitcoin often are also trading stocks, and they react the same way. Integrated advanced robotics. The US major corporations, Apple and all these major corporations, are quietly moving all of their manufacturing back to the US. You don't hear about this. They're just doing it quietly. They have this, Apple has this massive, huge facility somewhere in the South. And what they're doing is they're putting it all fully robots and robotics with just a couple human beings managing it. So that's going to be a huge shift to the manufacturing. It's not going to supply more employment for manufacturing, people who want to be in manufacturing as an employee, but it's going to help the companies, robots and replacing human workers. Amazon had 250,000 robots in place in January of 2024. Currently, I checked on it, there's 750,000 robots and robotics functioning in all the various facilities and warehouses and fulfillment centers of Amazon, and they're expecting to be at 1 million before the end of the year. big shift. We want to be trading these stocks. They're going to go ballistic. Sensors and image sensors and technology, there's going to be sensors in everything. Hyper-automation of corporations has been underway since 2022. It is reinventing the infrastructure of all the major corporations, and it's now going to the secondary corporations and small businesses. 8 types of biotechnologies are coming to market. Every type is important. They're all extremely different. It's not just about healthcare or fixing cancer or fixing fixing pollution. It's a lot of other things as well. Stay tuned because we have a very special offer for you. And supply chain reinvention and platooning. The supply chains crashed and burned during the pandemic, except for Amazon. And now all these other corporations are going, how did Amazon do that? Well, Amazon had its own ships. It has its own facilities. It had its own ports. It could get into little ports. It could get everywhere. And it just kept making more money and making more money. And so it's changing how the supply chains are going to be working and where they're going and coming from. So that's a big deal. So we have coin. Coin is part of the currency changes and going on. It's considered a public exchange at this time, and it is showing its early stages of a very young cycle. I wanted to show you this because this is a very young company. It's IPO'd and it crashed and burned, and then it started building a strong basing bottom. This is a basing bottom, and now it's starting to move up. The cycle we're at, it had started up, and then it went and formed a very nice deep trough. That's excellent. And then it's been slowly moving up, even though price was pretty consistent here and flat. It continued to move up, telling us that a cycle is starting to go underway. It has a little tiny bump here and there, but it has a long, long, long cycle underway that's going to last for a very long time. So you have many years where you can be trading coin, and it will settle down and it will stabilize. This is a very comforting thing to see because we know that it's starting a long-term bull business cycle. It will have intermediate corrections. It will have short-term corrections. It will have retracements, but it's going to be a stock that can be watched and monitored. Here's a little pro traders nudge, and they push that price up. And here's another pro traders, another area where you could get in. But this is a warning sign that it's time to sell that stock if you're a swing trader. So I teach all these specificities about candlestick analysis and candlestick charts. And I have a brand new candlestick course coming out in December that is going to teach the Western candlesticks and how the candlesticks in our modern markets work in relation to dark pool accumulation and pro trader nudges and so on, which are very small candles. So that's something to look forward to. The new technology industry cycles, we also have advanced connectivity technologies, voice user interface. Solid state batteries are going to be massive, and they're coming down the turnpike very, very fast. Whatever company gets solid states out there first is going to be one of the top 3, okay? So there's going to be top 3 solid state battery companies that you want to watch. These are cycles. These are new technology cycles that are coming throwing at you that you need to be aware of now, so that when that little solid state company comes, or if it's one of the auto companies, the auto company is going to make more money on their selling their batteries, like Microsoft made more money selling its software connected to IBM computers. Done deal. Advanced integrated dark data mining. If you are participating in anything that is public and you're trading stocks, or you're learning to trade stocks, or you're listening to a webinar like this one, the professional side is cued in and they're listening. So your chat rooms are being monitored every morning. What are you talking about? What stocks are you talking about before the market opens? All right, let's get in there, buy, push our orders through before the market opens, gap the stock up, and then we can sell into this retail buying spree. Yeah. Need to know this stuff because you have a big blind between you, the 80% of the market, and 20%. They do it all the time. Personalized internet technologies that will displace Google. machine vision and scent identification. Machines are soon going to be able to have better vision and be able to smell. Machine facial recognition is primitive. It will get better. Right now, they're making a lot of mistakes, and it can be a problem if they identify somebody and they say, oh, this person did this criminal event, and they didn't. They just happen to look similar. Machine advanced language and audio interpretation is still primitive. We've been using it to have everything that I say available to the deaf, and it really is a mess. It will enhance in time. And machine pressure recognition, it'll be able to feel pressure. That's very exciting. Also expands the use of robotics. Personalized healthcare using AI and other technologies is already underway, and it's a nightmare because it makes so many mistakes. So that will have to be fixed. There's going to be a lot of fixing. We're in the early adopter phase of AI, maybe secondary adopter, and that's when they fix all the messes. So be careful, because it's going to be an up and down situation. And decentralization of the monetary systems, the banks as we know it are going to be gone. They're almost gone anyway. So we can just move on with that. And they're all doing buybacks. All those big banks are buyback, buyback, buyback. You can play buybacks. How to see the cycle in stock chart. We're going to go through some charts. For most traders, the easiest way to see a cycle is to use a detrending oscillator that removes the trend and reveals the cycle within the trend. This allows the true cycle to be seen and analyzed. Peaks, we call it peaks. The peak is the end of the upward pattern of a cycle. As it starts to peak and turn down, that's the end of that pattern cycle. Troughs are the end of the downward pattern cycle. So you have peaks and you have troughs. And that's how we study things. There can be deviated peaks, extreme deviated peaks, which happened often during the pandemic, when a stock or industry reaches the end of its cycle or has a cycle totally disrupted because of a pandemic. 100-year pandemics are rare. Nobody remembers the last one, so nobody was ready for this one. This extends the peak, but also requires an extreme trough to form as well, or the cycle may break or collapse. So you can have this extended peak. Apple had this extended peak. Oh, let's reinvent electronics for people. We'll have a iPod. Then we have an other thing, iPad, iPhone, and on and on and on. And their cycle went up and up and up and up, and then finally reached a peak and it's just collapsed. And that's what happened with Apple recently. During the pandemic, many cycles began reverberating. This is going sideways, rather than cycling from trough to peak and peak to trough. That was the pandemic made a mess out of cycles. Each time there's a major disruptive force that impacts stocks and the stock market, a major deviation is likely to follow. So people who are trying to use cycles right now that haven't taken my training are trying to force fit these cycles into something that doesn't exist anymore. Being aware of the deviations of cycles helps to identify well ahead of the time the risk for a major market correction. So we have NVIDIA. I chose all of your favorite stocks to talk about today, or some of them at least. Okay, so we had a shallow trough over here. So we knew that something was going on, and it had soft peaks that lasted for a long time. This is a weekly chart, so these soft peaks, it was a very soft peak. It kept going up, and we could see that the cycle leads the corrections. Cycle troughs and troughs up and moves up before the price moves up. This is a leading indicator. It leads the cycle. It leads the trend. This trend. We detrended. So when we take the trend out of the price action, we can actually see the cycle that is going on. The center line oscillator is critical if this is a nice deep trough. And when it crosses, then you know that you can start getting into the stock and expect a long, healthy run up. It does have short-term corrections, as all stocks do, or a retracement, minor retracement, or another correction going on. But look where we are right now. This is not a decline. This has far more room to move up further and further. It will correct. It will always adjust back because it's necessary to maintain the integrity of the trend. So you're always going to have these little corrections. Sometimes they'll be intermediate, sometimes they'll be short term, sometimes they'll just be retracements or profit taking, but they're always going to be there. And what you need to learn is how to get into a stock and how to identify with TechnoTrader's leading indicators for MetaStock when's the time to sell the day before the stock goes down. It's just fantastic what we have. And so we also are looking at a long-term volume. We want to make sure that we use a line indicator that can confirm that volume is continuing to move upward in this stock. Now, this is NVIDIA's growth cycle. This is a monthly chart. And so the cycle is just the last part of this, and we can see it troughed nicely, and now it's running up. But the price is going faster, so the cycle can continue. There will be these little corrections, little corrections, little corrections, but the cycle is far from over. The semiconductor growth cycle is not over like so many retail news people are telling you. They just want to sell short in your panic mode, so don't go there. Detrending price reveals the action that's going on. This stock is, I believe, Apple, and it was going up and down and up and down. And so we have a peak that is a strong, slightly deviated peak. We have a trough that's a bit shallow. So then our lower peak tells us that this stock is going to need to correct a little bit further before it can resume another uptrend. So it's actually in a downtrend right now, even though Apple has been going up a little bit. So potential deviation of a peak, we're looking at the cycles again, and this is a shallow trough that failed to trough. It failed to trough. It has to go below the center line. It did not. So that's a failure to trough. It had a reverberating trend line pattern and a reverberating peak that is slowly slipping down rather than a nice round one. Look at this nice, lovely round trough. Okay, that's a strong trough. And even though this is going extreme right now, it will correct a little bit, but then it's going to continue. This peak will be higher than this peak because this was a reverberating peak. And it was adjusting and patterning out all of the strangeness of the pandemic. It did it that year. So now this beautiful trough, and we're going to continue moving up. So cycle in decline, this is a stock that has been moving up and up, but it's forming lower peaks. So it's going to continue. This is slightly higher, but it's already in a correction mode up here. And look at this flat line. This is like death of a stock price action. Volume has just flattened totally. Volume is always part of a cycle analysis. And so this tells us that there isn't enough dark pool activity buying this stock. They're actually slowly rotating against retail investors buying this stock. Okay. So these cycles tell you a tremendous amount of what's going on. There are many new technology stocks that have emerged this year as big name, highly popular stocks. Often retail news is negative, warning that the stocks are at risk of major declines. Retail news is trying to convince traders and investors that these stocks are at the end of their cycle. But are these stocks at the end of the business cycle, or are they at the beginning of that cycle? Cycle analysis of weekly and monthly charts reveals where the companies are in their individual business cycles. This is critical information that is empirical, meaning it's undeniable, it's factual, you can take it to the bank. Retail news is simply gibberish intended to make whomever stated whatever money trading against the retail groups who believe that the news is actually true, factual, when it is not. Retail news is always sponsored by entities who use the news to manipulate the emotions, opinions, and actions of retail traders and retail investors. They want you to panic because they can get into the stock on a sell short, have a buy to cover, points way down on the line, and you come in selling, and so it drops the price even lower and lower and lower as you're trying to get the heck out of it, and they buy to cover and make a huge amount of profits. And guess who is that one? Guess what institutions do that? Yeah. Trusting such news causes most of the losses for retail groups. So that's just a reality. Amazon's weekly chart. Amazon is under pressure, but it has a brilliant CEO. He's reinventing, and we can see that it has troughed, a double trough, perfect. This was lower, but this trough is higher, and it's starting to move up, and it's starting to form a new uptrend because it is going to robotics like a bat out of hell, and is going to dominate the robotics in many areas. It's a little bit flat on the volume right now, which implies some speculation by smaller lots. This tells us whether large lots, large lots, large lots, large lots, smaller lots, and a little correction going on here. This is Amazon on the monthly scale. You can see this beautiful trough and the strong potential for a nice long peak. It will be higher than this one. This reverberated. This is one I showed you earlier. Intel weekly chart. Oh, we had a little buy entry signal there. That's why I chose it, but today it's down a little bit. And we have volume that is just hysterical. This is all retail. They're not in the buy side dark pools. They're not interested in this company. Why? Because it hasn't reinvented. It was once a great company. It isn't a great company anymore. And this stock is troughing down. It's not over, and it may take years before it's over. I know it was a great stock in the 1990s. It was awesome. I remember growing up watching the company develop and grow, and it's amazing. But it has a CEO that needs to be kicked out and find somebody that can reinvent and have an innovation. So look at this. It's just terrible. And people are buying this thinking, oh, it's going to be good because the semiconductors are hot. It's ancient history. You can't be trading this stock unless you want to sell short, unless there's plenty of room to sell short because it's going to reverberate and go down. Volume is terrible. The trough is retroughing. This is a peak and it's below the center line. Heck, you don't want to do this. These cycles are important. Summary of cycle analysis. Cycle analysis is the study of the business, industry, or index cycles over time. Cycles always lead price in terms of future price action and trend patterns. The detrending price oscillator is used to remove the trend from the price action to reveal the cycle for the stock, industry, or index. All businesses have cycles. CEOs know these cycles and tend to attempt to mitigate the impact of stock prices. They can split a stock or offer a dividend or do buybacks or reinvent with new technology. When they reinvent with new technology, then they're going to be a hot stock to trade and invest in. We're on the cusp of a major new industrial revolution that has over 20 new technologies starting a new technology growth cycle that is phenomenal. The more new technologies, the longer the great bull market will last. It's going to last more than 10 years. There's just too much new technology coming down the turnpike. Yes, we're going to have intermediate term corrections, but the buy side dark pools have support the market, and they're not going to let it go into a bear market if they can help it. It'll hit the 20% mark, and those support the market dark pools will start buying that stock at a bargain price and push it back up. And it's legal, because the only thing that's really illegal is try to push the market down. Everybody wants stocks to go up. The stock market is at the beginning of a new era with many new young companies poised to dominate in the future. The NASDAQ private market is a great place to study to see some future IPOs. In every new technology, there will be 3 companies that battle for dominance. Any of the 3 will generate high profits for trading and long-term investing. Identifying the top 3 requires understanding of new technologies and cycles. So you have an opportunity to identify the top 3. All my students are. Technotrader tools are consistently successful in trading. I'm going to promote Technotrader right now. Just hang in because this is going to be a really great gift. Market condition analysis and cycle analysis. Relational technical analysis is my second professional doctoral thesis. It's been recognized by the CMT as advancing technical analysis beyond the standard stuff that you learn from everybody else. Trade management planner. It's crucial to have a trade management planner. We have one. You can come on my website and check it out and see how it works. You have to have this if you want to be trading as a business or trading under the IRS tax status. Trading as a business is something all of you should try to do. A daily training journal is important for that also. A Metastock charting software that includes our sorts and scans is awesome. Metastock is an awesome charting software. It is the only software that is international where anywhere in the world you can be trading any stocks at all, except if you're a US citizen, you can't do that. Hybrid leading indicators are written specifically for Metastock that we give with our courses, including the cycle analysis, controlled bracketed order types that control your orders with payment for order flow so that you don't get ripped off when you enter your limit order is a bad idea because they'll take advantage of it. Buy entry signals, sell short entry signals that are modern in our modern markets, the nudges, the pole vaults, the hurdles, the pushes, all of those are taught in a new course. Exit signals for trailing profit stops, for taking profits. If you're using a percentage stop loss and you think the stop losses work, stop using percentages. We all can see you. We can see where you're putting that stop loss. So let's just take that guy out. Boom. Run gain, plus all of you tend to group and trade as groups instead of and separately. Run gain potential calculation. How many points are you going to make in this stock versus how much risk are you taking? Are you calculating that? It's in the charts. Trade calculator for accurate risk analysis. It does all the work for you, all the math. Stop loss placement does all the math for you. Entry price, share lot size, what size lot shares should you be trading based on your capital base. The price range that you should be trading, the risk to profit ratio, estimated hold time, and exits. So you have to have a lot of information to do really well. We have all these chart layouts and all these scans for our students so you can pick and choose what's right for you. Instead of following and being a groupie, you can trade individually like professional traders. And yes, professional traders make millions of dollars a year. I have someone that was managing a hedge fund that made $100 million. So you have to be very aware that there's a lot of money in the market and you have to raise your expectations. They're way too low. So market condition analysis tells us what's going on in the market. I have the momentum to the buy side versus the sell side, which is where is the bias of the market? It's not what retail news tells you. Institutions, what are they doing? Where are they? Bottoming stocks. Institutions are always in bottoming stocks. They bargain hunt. Consolidations, that's your pro traders. That's where you find them. Overbought tells us that we're cycling into a trading range. And the strength of the price over time is essential for determining whether price is improving over time. So you want to keep an eye on all of this, and this is all embedded in Metastock. These are written specifically for Metastock. That's where you get them, and they're very, very important. We have our custom hybrid leading indicators that we also have, and they lead and tell you when to get out before the downtrends start, the little corrections start. They're very important. They were written specifically for Metastock. So let's summarize. Technotrader's difference is you are learning from professionals rather than other retail traders. It's important. We have been in business for 26 years, going on 27 very shortly. The Technotrader staff continually updates and improves the quality of our education. I'm updating one course right now, and I will be updating another soon. We keep our students up to date with all the new trading instruments, changes to the internal market structure, and how professionals are trading the market. We have many communities and discussion groups where professional level students and beginners can share ideas. There's nowhere else on the planet that has professionals with beginners, so the beginners can look at what the professionals are doing and going, wow. And these professionals are taking from me because I have a knowledge base that they desperately need. Technotrader has the most extensive support, bar none. We even answer stuff on the weekends when we're not supposed to because I just love to keep in touch with the students. We have guidance and student mentoring sessions with access to vast library of help files, articles, and the evolving market structure so that we keep you up to date. I have a annual sector and industry report, a secondary report in the mid-year. I have the barometers of the market. We offer 3 different courses designed around your individual training needs. Everything you've learned is fine. Everything is good. What you have, but it's not enough to take you out of mediocrity in trading to the level of income you deserve. And I want you to have this because when you make money, the market makes money and everybody does better. When you lose money, that's a bad deal for everybody. Some students advance to the professional level and work for institutions. The course can be taken at your pace when you have time and when you are ready to learn. So it's self-paced, but we're here. We answer questions while you're taking it. You have access to the help files. It's really, really great. They're all laid out online, so you just go online. You can do it in an air when you're traveling in an airport, or when you're going somewhere else, or when you're waiting for a commuter train or whatever. Our courses contain the body of knowledge, experience, and expertise of our founders. This foundation of knowledge is taught nowhere else because we were professionals. Most people who teach are retail traders, and it's fine that you can learn a lot from them. Okay, from Steve, I am the front few months volatility curve setter for IMC for their SPX group, the second best profit producing market making group currently in the world. I worked for Consolidating Trading, a smaller prop group, for 14 years, mostly an SPX floor trader, before working for IMC. These Dutch firms both profited over 1 billion last year. Actually, this is a couple of years old. They made more than that these last few years. The skills you have taught me have made me, I think, one of the most elite traders in Chicago. I think you are the best educator I have ever learned from. The respect I have for you cannot be told in words, but God bless you, and you do this what you do for this community of professionals and retail traders. You really are one of a kind, and I have never learned more from one person so driven and passionate. I try to share this in motivation in my own career. So that's one. And then we have another. Prior to doing TechnoTrader courses, I almost gave up on trading and just started investing in mutual funds, but I knew other people were making more than an average returns from the stock market. And if they could do it, then I could too. Well, the reason I keep buying TechnoTrader courses is because with every one I purchase, my skills improve. I've paid off my courses just from the gains that I've made in the market. So essentially, they've cost me nothing. And if you trade as a business, you can deduct all of your expenses, your metastock, your courses, everything. So let's get on. So we have our 3 mini courses that you can come and register on, and that's technotrader.courses is where you want to go. So if Jeff can type that in. And we have the trade management planner is what I would recommend for most everyone. And then we have our 3 methodology courses. The standard is for beginners to novice with less than 2 years experience. Premier is for 3 to 5 years of experience, and the elite is for people who are professionals or who want to become semi-professionals or professionals and make $1 million or more a year. So it just depends on what you want and what you need to learn. Now, for the big event, your gift for attending. This bonus comes with the Premier Elite Methodology Essential Course packages only. The Market Structure Report. This is a white paper to help you learn about today's market participants, how their orders are routed, their intent, and more. Understanding the professional side of the market helps to start understanding where you need to position yourself to profit from the market rather than just getting by. So that's the HTTPS address, if you could type that in for me. It's a $995 cost if someone is not my student. Professionals will come and buy this from me, and that's what they pay. So you're getting it. It's free for 1 hour, so you have to register right away to get this. And you go here, or you can use your smartphone and click there and find out. This is the most important thing that I have to offer to you, because it will expand the body of knowledge that you have, and it will help you understand the cycle theory that I taught today. So I think we are coming up on the last few minutes of the meeting, and I would like to know if there's any other questions that I can answer for you.
We have 4.
All right.
And that doesn't mean it won't grow. But Tom wanted to know, what is the name of the large lots versus small lots indicator that you're using, the black and green lines?
We have 2 of them. We have the TTQA and the TTVA, which are Metastock designed. We customized them. I came up with what the parameters had to be, and I hired a programmer who understood, who could write the actual code for it, and we embed it in the Metastock charting software.
Cool. Contra wants to know if you have any opinions on the Indian market.
The Indian market will grow, but it's still in its infancy. It's very speculative right now. It will settle down over time, but you have a lot of very young, highly educated Indians who, a lot of them trained in the US or other universities around the world. I'm sure a lot of them went to Oxford and other things, and they've come back home and they're building small businesses and everything. This is a country that's in its first industrial revolution. And those are very volatile for a while. So the first industrial revolution is coming out of that. And it's I've been talking about India for years, but it's very exciting. So it's going to be more volatile rather than, and you're going to have to understand volatility and how it works, because you're really going to need to be very on top of the professional traders that are trading there and be right with them rather than trading against them. That's the simplest problem that happens, is you accidentally are trading against large lots versus the small lots.
All right, Mark wants to know, where are we in the gold bull cycle and how much time is left?
We just started it in 2023. Toward the end of the year, it started, the bull really started taking off. And so this bull market has so much new technology that it's going to last. When we had 6 new technologies, it lasted about 12 years. When with this new technology, and it's a baby still, it's got a lot of volatility in it from time to time. But this technology is building, one builds on the other. We have AI, so now we have integrated. Then we add the AI to hyper automation. Then we add the AI to more robotics. And so it's this building thing that's going to grow on and on. As a cyclist, it looks like it could last maybe half again as long, 15 years.
Okay. Stavros says, great webinar. Thank you for your teachings. Do you have an opinion on the upcoming 100-year cycle from 1929?
It's broken.
There you go. I agree with his comment about great webinar.
Thank you very much. Thank you. Yeah, I just enjoy, I don't know, it's such a nice, comfortable, relaxed atmosphere with Metastock. And Metastock is just a great partner with us. And I just always like the people who come, they're eager to learn, they're eager to make more money. And so I feel like I'm making a difference, and that's important to me.
We love having you too. Jason says, does your research spot the rotation of segments/industries to enter into?
Yes, it does. Yeah, the cycle theory, of course, covers that. Market structure report covers some of that because I go through and the sector and industry report also covers a lot of that because it's all part of the whole understanding what's going on. Because my students think I can see the future, and I can't. It's just that I understand the past, and that's why everybody's running to me, because I'm a brain trust. And since I've had so much experience over a very long lifetime, that I go, oh no, don't worry about that. Or yeah, we need to start worrying about that. Right now, the barometers are showing a very young bull market.
Lena says, yeah. Go ahead, Greg.
I'm sorry to barge in. I just wanted to let Martha know that I should mention that Martha, before the meeting, helped us come up with a poll to ask our YouTube our YouTube watchers. And the poll was, are the markets currently volatile? And currently that poll reads out 65% say yes, 30% say no, and 44% say I don't know. Just FYI.
Okay, volatility is an unpredictable, unpatterned situation. And sometimes the markets are going sideways, and that's when you're volatile. It's going up and down and up and down, and you can't grab onto a run. Velocity markets, which we've had recently, starting early November, is this huge run up. That's a velocity run. You have a stock that gaps and runs up. You have another stock the next day gaps and runs up. Another stock gaps and runs up. That's velocity. And velocity is like a jet taking off and going up as far as it can. Something set in motion will continue in motion until it loses the energy to continue in motion. It's a physics law. The stock market is not mathematical, it's physics, the laws of physics. So as it goes up, at some point it will have to tip and come down a little bit. But as we see more people coming into the market, and there's another big surge coming in, it's like then that will be a short-term correction or a retracement, and then it will surge up again. And so that velocity market conditions are the shortest of all the market conditions. There's 6 major market conditions. They don't last that long, but when they do, it's like, oh man, hang on for the ride. 50 points on a 10,000 share lot order, huge, huge. Most people are staggering. I tell my students when they've made huge amounts of money in one day, stop trading for a while because the euphoria blinds you and you need to settle down the emotional high of that much money in such a short period of time. But yeah.
It's a good advice, actually.
Yeah, it is. Because the next time you trade, if you're still emotionally high, you will gamble.
For sure. Lena wants to know if you have an opinion on where we are in the real estate index.
The real estate has gone through, it's a 20-year cycle. And we have everyone who can afford a house or can wants to buy a house, not everybody does, has done so. So we're going to see the cycle is already tipped. The peak is already heading down. So the real estate cycle is going to be going down. It'll start out slowly and then it'll kind of accelerate. And so housing prices will eventually, the sellers will have to take less money for a house. There's a little house in my neighborhood that's going for like $1 million. And I'm going, are you kidding? That's just a little box. And it's not selling. So the real estate cycle is heading down, and it takes average with real estate 8 to 10 years to trough, and then it comes back up.
Right on. And then lastly, not a question, more of a comment. Timothy says Martha is simply terrific and her style is entertaining too.
Oh, thank you. I try to be entertaining.
You did, yeah. Actually, not only did you start off good, you've gotten way better and more engaging, and just I think you do a fantastic job, Martha.
Oh, thank you.
Thanks for coming in. And
I wholeheartedly agree. Very much
you.
enjoyed Martha's presentations.
All right.
And if you are listening and you haven't taken advantage of the market structure report, I'm going to put that in the link again here. You should go get that. You have an hour to do it, so go do it now. Fill out the form, get it, all that kind of good stuff. Martha, I want to say thank you for coming in here today. We appreciate it. Good to see you.
Good to see you. Have a good whole week here.
All right.
Thanks.
Thank you. All right, let me do this. There's a few buttons to push here, and I'll get them all. Let's go ahead and make me the presenter here. Let's make sure that we're sharing the right screen. Where is that presenter view? All right, Greg, let me know if you can't see slides right now.
I'm looking at the Metastock 31-year slide.
All right, very cool. As we transition, I want to say thank you to AAII for sponsoring today's event. AAII has been a sponsor of Metastock for, I think, 2-3 years now. Well-respected, well-reputed organization. They've been doing stuff since 1978. You can find out more about them at AAII.com. They do sentiment research, they do stock rating, they do watch lists, they do all kinds of research. Ray Rondo works with their active investor division, where they work on trading methodologies and that kind of stuff. Great job, AAII.com. And then, of course, we're Metastock. Greg, I'm going to ask you to come back in here, and I am ready to do a prize if you are.
I'm always ready to get things away.
All right. So we're going to start with some books. We got the Candlestick Profits, Eliminating Emotions by Steve Bigelow. High Profit Candlestick Patterns, again by Steve Bigelow. And then also a mouse pad that talks about the 10 major patterns. This was also put together by Steve Bigelow. It shows you what a doji is. There's the inverted hammer, piercing patterns. It's just got kind of the major patterns that you should be aware of in a nice, easy to use mouse pad format. So these books are awesome. Steve was a great influence on me and my trading, a great partner in Metastock. We absolutely love him. We miss him. And somebody's going to win these books. So Greg, why don't you give me what I need from you is I need you to give me a number, and that number can be anywhere between 1 and 9,775.
1,775. Okay, first of all, that's a great prize.
Yes.
And the number I'm getting from the Google random number generator is 5812.
Okay. It's so hard to see behind all the chat windows and stuff like that. The winner is after Azel F in the US with, if you have a Verizon.com email address and your name's Azriel, you probably just won. And if you're in the chat, if you're watching live and you just won a prize, you should say something. Say, hey, I'm glad I won, or something like that, so we know you're there. It's really cool. I like it when people that are here win, not just because they registered. You don't have to be here to win because it's a big, huge, long event. We record the whole thing, all that kind of stuff. But it's extra cool when you're here and that kind of stuff. So
well,
let me
congratulations to the winner. And one last time, if you want to be eligible for today's prizes, just go to metastock.com homepage and select the banner at top and register. If you are on GoToWebinar right now, you likely already have registered and don't need to worry about that.
Cool. Thank you very much, Greg. Appreciate that.
Thank you.
All of our specials today, including if you want to try out Metastock's only been rated #1 for 3 decades in a row by the readers of Stocks and Commodities. But we've talked a lot about how you can use it to scan and identify trades, how you can test trading ideas, how you can use our patented forecaster to kind of help you predict price movement, how it'll give you real-time alerts, commentary, signals, all that kind of stuff. Pricing, we have really 2 different prices. There's a DC version, which we call the Metastock end of day version. It's only $75 a month. Our real-time version's $265 per month. If you pay for a month, that'll get you till December. We'll kick in an extra month where you can get January and February for free. There's no commitment with that subscription. We will also sit you down. We'll do a one-on-one session to try to show you all of the bells and whistles and all the useful things that are going to be helpful for you to trade. We'll give you a home study course. All that kind of stuff is going to kind of be included in that extended trial. So if you'd like to take advantage of that, go to metastock.com or any of the other offers that we're talking about all day long and all week long, metastock.com/conf promo. I've said this before. I'm literally just looking at some stocks right now. I'm going to run a scan in a minute to see if there's anything I like. I wouldn't be able to trade without Metastock. It's hugely valuable to me. And I want you to use it. I want you to give it a go. And it's $75 for 3 months. It's about $25 a month. You're probably going to spend more money than that in coffee. Metastock.com/conf promo, 800-882-3040, or metastock.com/sales chat. Timothy, thank you for that really good comment. I'm going to send it to chat real quick. And you also said the casual nature of the gems of knowledge are reassuring. Martha does a really good job. Michael, we all miss Steve. So from a perspective of that, let's kind of move on to our next speaker. I usually have a picture right here, but our next speaker is Jeff Tompkins. Jeff Tompkins I've known for a number of years now. And when he started as a partner with Metastock, he does a lot of training on Udemy.com to teach people how to trade and all that kind of stuff. In the time that I've known him, he's been really successful with the trade trend methodologies that he's using right now. But in addition to that, he's gone on to kind of trade a hedge fund. I guess he manages a hedge fund. I'm trying to find the right way to say that. I think that's close enough. But he's a good friend of ours. Has an awesome first name too. Let's go ahead and get you started, Jeff. How are you doing?
Hey, Jeff, I'm well. How are you?
I'm good. Let me make you the presenter here.
Great.
I can hear you. You sound great.
Fantastic.
And I can see your how to forecast market direction.
Got my screen. All
right, I'm going to get out of the way. It's your turn. Go.
All right. Well, thanks for having me. Welcome,
Absolutely.
Everybody. Lots to go over today on our session. So we'll spend about an hour together today talking about how to forecast market direction up to 3 days in advance. This is my proprietary Slingshot strategy. So you're going to walk away with an actionable strategy today that I think you guys will all love. And it's particularly timely for today's markets as markets become more volatile and there's lots to navigate. So let's dig right in. I'll read a quick disclaimer before we get started. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options, and must meet suitability requirements. We're going to be going over some various results on our session today, mainly to back up the methodologies and strategy that I'll share with you on the session. I do my very best to use real world, real money results. So I will be actually sharing some real money results out of my own personal trading account. But just know that anything that I do share, due to the time critical nature of trading, brokerage fees, activity of other traders, I don't guarantee that anyone will mirror that performance. All right, so we're going to start out talking about why the market is so difficult to trade, and there are obviously a host of reasons of why, various factors of why markets are difficult to trade. Really, a lot of it can be boiled down to psychology. So this is kind of a baseline difficulty that we all face, and this is an interesting psychological curve as it relates to the market. So I'll kind of walk you through this and explain how this impacts our trading decisions and overall results. But essentially, when we get into a trade or an investment, we generally are going to start out with some degree of optimism, enthusiasm, even exuberance, euphoria. And interestingly, and we're seeing this right now as markets are trading around all-time highs, we tend to experience this during a high level of financial risk. That tends to be where we become greedy. And as we all know, if you've been in the markets for any period of time, trades can move against you. Markets can sell off. We can get black swan events, and that exuberance and euphoria can quickly transition into anxiety, denial, fear, despair. And this is where we tend to see panic selling in markets. Now, when that occurs, and it inevitably will occur, it actually creates a lot of opportunity. So this can actually be the best time to invest when other traders are panic selling or they're fearful and unwinding their positions. And then that can then transition back into, from discouragement, dismay, into hope, relief, and optimism. So we'll come back to this, but I want you to keep this cycle in mind because it impacts us more than we probably realize. And we're going to take a kind of a different approach. And the slingshot strategy will actually help us overcome a lot of this drawback. So when we look at the psychology of failure, anytime we enter a directional trade, the goal is to buy low and sell high. Now, unfortunately, that goes against our human instinct. So instead, when a security's gone down, we tend to sell it. So again, this is where panic selling occurs. And then when it's already gone up, we tend to buy it. So often we're too late to the game. So we'll panic when the price is falling because we're, of course, afraid of losing money. And there's a lot of uncertainty around those situations. And then we buy when it's rising because we're afraid of missing out. So it's a FOMO mentality, fear of missing out. And this is often what happens when markets are around all-time highs. Now, to compound that problem, we're wired to repeatedly make the same mistake. So we buy high and sell low because that's what our emotions tell us to do. And without a solid trading plan, we're really vulnerable to our emotions. And if you're lacking a strategy that can identify momentum shifts, meaning you don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors. And even experienced traders and investors face this difficulty. So we're going to turn the tables today. And instead of being greedy or entering positions, long positions when there's a high level of financial risk, and panic selling when there might actually be incredible opportunity in the markets, we're going to flip this around. Okay, so the slingshot strategy is going to help you navigate markets. It's going to help you identify when markets are vulnerable to a sell-off. It's going to help you identify when other traders are panic selling, when there's actually opportunity to make a lot of money in markets. And so this is a contrarian approach, and it's based around that old Warren Buffett adage, be fearful when others are greedy. And this is, I think, a testament to how some of the world's most successful traders and investors like Warren Buffett, Carl Icahn, George Soros have accomplished what they have. Is they are aware of these psychological drawbacks. They're aware of this psychological curve and cycle that people go through, and they approach markets from a contrarian perspective. So that's our goal today. And what I'm going to give you to make a lot of this easier is, number one, you'll discover the slingshot setup that has worked 100% of the time in the market. Now, that's an incredible claim, but you'll see shortly that when you apply this slingshot strategy to the major indices, so the S&P, the NASDAQ, the Russell, right? Going back to the dawn of the market, okay, this plays out 100% of the time. I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top, how to apply the setup to any market, any time frame. This is completely fractal in nature, so it doesn't matter if you're trading a 5-minute chart, a daily chart. It doesn't matter if it's a stock, an ETF, whatever it is. Okay, this is how volatility works in markets. I'll also show you a really cool trick on how to eliminate a lot of your losing trades. This is a highly underutilized technique that can help you keep you out of trades that would otherwise not work out. We'll go through some trade examples together, and then stick with me to the end, and I'll show you guys how you can copy my success and get my trade signals that I use to make a living in the markets. So imagine if you could buy low and sell high without any guesswork. Okay, the Slingshot strategy is going to remove all the guesswork, and we're going to use a volatility study, right? So one volatility study has actually made this possible since the beginning of the markets, and it's a unique setup that I call the Slingshot. So it allows traders to buy low and sell high with 100% accuracy. So that's a bold claim again, but once you learn the strategy, I encourage you to apply it to the S&P, the NASDAQ, any of the major index products, and go back to the dawn of the stock market, and you'll see this play out, okay, without fail. It also warns us of potential market sell-off. So this alone can completely turn your trading around. If you have a retirement account, an IRA, a 401k, you're holding long positions in your trading account, there's always that, and again, think of that psychological curve. There's always that fear of an unknown, right? A black swan event, a major market crash, a full-on bear market that can do a lot of damage to your portfolio. That a lot of that fear is going to vanish after our session. You're going to understand how to, identify when markets are likely to sell off and take appropriate action, right? So you can hedge your portfolio. You can, book profits on long positions and go to cash. There's a lot of ways to manage that. Now, once these volatility bands of the market cannot be stretched any further, they have to bounce back. So this is an inevitability of markets. It's how volatility is incorporated into market movements. And I call it a rubber band effect. So this rubber band effect makes it possible to accurately identify tops and bottoms in the market, okay? So we're gonna look at some chart examples. This is a daily chart of the S&P 500 index. And we're gonna use some of the worst periods in the market. Okay, so I wanna demonstrate that this is effective in really bad period, or what most people consider bad periods of the market. By the end of our session, you're gonna desire to have these kind of situations, because the Slingshot creates a lot of opportunities here for us. But I'm going to walk you through what's happening here. This is again an S&P chart from back in early 2020 during the Corona crash. Okay, and for now, I just kind of want to walk through the psychology of what's happening here. So back in February of 2020, markets were trading around all-time highs, right? So think back to that psychological curve. What's happening amongst the trading community? Well, there's a lot of FOMO, fear of missing out. We've had an incredible run up in markets, a decade-long secular bull market. So people are, buying into the market, afraid, uncertain of how much further the market's going to run up and afraid of missing out on it. Okay, but markets are in vulnerable territory at this point. So actually, this is where we want to look at booking profits or taking speculative bearish positions. There's, again, a number of ways we can play this. All right, obviously we had a major sell-off in late February into March, right, of 2020. Okay, S&Ps were down over 30%. Now, when there's all this panic selling taking place, there's heavy losses occurring. In fact, as Jeff mentioned, I'm a hedge fund manager, and at this period of time, there was like an unprecedented percentage of hedge funds going under. Okay, a lot of hedge funds folded during this period of time due to margin calls, etc. And so a lot of people got caught in this, but it created a lot of opportunity. Okay, so this was a very swift sell-off, and we're going to kind of tie the catalyst into this. So obviously this was COVID. We had this major sell-off. Now, around the third week of March, okay, there was enough, and this is all supply and demand. There was enough demand to, and I can tell you that it wasn't retail traders that pushed markets higher from this point on. It's traders, you know, it's Berkshire, right? It's Warren Buffett. It's large institutional, players that have a lot of money that come in and take advantage of this panic selling, and they buy in at lower prices. And markets are right back up to the level where that sell-off ensued by early June. Okay, and again, so if you think of the catalyst here, there was no resolution to COVID, right? So the catalyst that caused this actually, unfortunately, was going to go on to get worse, and the market didn't behave in that, accordingly. Okay, so this is actually where we want to look at selling, and now most retail traders are going to be buying back in here, and I want you also to notice in June, right, on that right blue circle, see how the S&P start to kind of move sideways. Okay, so they lost their momentum right around that level, and there's a reason for that. We'll dig into that. Okay, but essentially it's all of the smart money that bought in back in March near the bottom were unwinding positions, profit taking. So the S&Ps moved sideways. They lost their momentum. Okay, we're going to come back to this chart. This is the essence of the slingshot, and we're going to apply that to this chart. So stay tuned. We'll come back to this. I'll give you a quick background on myself. So again, if you're not familiar with me or haven't attended any of my past educational events, I've done a lot with Metastock. Love Metastock. I love their team. And we'll talk to you a little bit about some of the collaborations that we've had as well. But again, I'm Jeff Tompkins, Chief Investment Strategist, over 2 decades of experience trading the stock options and futures markets. Received my professional training at Morgan Stanley back in the early 2000s as an intern at the trade desk, and about 9 years ago founded Altos Trading, where again, I'm the Chief Investment Strategist. We've quickly grown to over 60,000 members in over 100 countries across the globe. And I'm, as I've mentioned, also a hedge fund manager. So I launched a hedge fund back in late 2019, Altos Capital. So I manage money for my clients at Altos Capital. And in fact, the Slingshot strategy is a strategy that I've deployed within my hedge fund. And I really credit for the success in the hedge fund. We've never had a losing year in our fund, not even in 2022 during the bear market. And this has really helped me navigate markets very efficiently and do well for my clients at Altos Capital. I'm also the founder and creator of the Trade Trend Signal software, which we're going to be looking at on the session today as well. So by the end of our session, you'll discover one trade setup that has never failed going back to the beginning of the stock market. So again, it's so reliable, right? If you apply this to the major indices, it's worked 100% of the time, all the way back from the beginning of the market. It hasn't failed once, not even in the Corona crash or the 2022 bear market. It happens repeatedly with astounding predictability. You just have to know how to identify it. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. Again, markets are becoming more volatile, more erratic, and more difficult to navigate. So you're going to discover why volatility is one of the only leading indicators of market direction. How to identify when markets may be vulnerable to a sell-off. And again, this can completely turn your trading around. It can eliminate a lot of the fear and drawbacks of the psychological components that we looked at the beginning of our session. I'll show you how to identify when the market is likely to go up, how to identify exactly how far the market is likely to go up, which also is hugely valuable because it helps solve a problem that is often referred to as the trader's dilemma. So if you get into a successful trade, none of us have a crystal ball. So there's, again, psychology comes into play. How long do you hold on to it? You have FOMO coming into the equation. You don't want to unwind the position too soon and then have it go on to make an additional anticipated directional move where you could have made more money. You don't want to hang on to it and then have it reverse on you and watch your profits evaporate or even turn into a loss. So we're going to solve that with a Slingshot as well. I'll also show you how to get your hands on a tool that will change your trading forever. And while it's a bold claim, it's one that I make because this tool has changed my trading forever. It's changed the lives and trading results of a lot of our members at Altos. And I'll share some of that with you as well. So let's get into the Slingshot. Imagine a slingshot, right? So as you pull that slingshot back, muscle energy is transferred to elastic energy in the bands of the slingshot. After the slingshot is released, the elastic energy is transferred to the stone as energy of motion. So physics, this is referred to as kinetic energy. Well, interestingly, kinetic energy plays out kind of in its own form in the markets, in the form of supply and demand. So I think Martha mentioned, markets are, kind of built around physics, right? And that was a good analogy because supply and demand drive markets. So when you see a trend occur, whether it's up or down, right? It's either supply or demand, that tends to continue for a period of time. Obviously, we've seen a pretty sustained uptrend in markets, right? Until something stops it, right? So we're going to be able to navigate this using volatility. And so once these bands of the market become overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay, because again, eventually that band has to snap back. So we're going to apply the slingshot effect to the markets. And we're going to talk a little bit about volatility, which there's different types of volatility, right? So there's historical volatility, implied volatility. We're going to mainly focus on implied volatility, which is a forward-looking predictive indicator. Okay, it's implied, right? And these volatility bands are actually going to tell us when prices move too far from the mean or the average and is likely to reverse direction. So we're going to use a study called the Bollinger Bands, okay? And I'll walk you through those if you're not familiar with them, but it's an incredible indicator. It's available on any retail trading or charting platform. So you can get this indicator on your Metastock platform. And like any indicators, many different ways to use it. We're going to look at one very unique, specific way that can pinpoint turning points in a security with astounding accuracy. Okay, so you can see that on the chart here on the screen, right? I want to point a couple things out here, and then I'll walk you through what the significance of the bands are and the settings and all of those things. But all I want you to notice right now is there's 3 bands on the chart, and price is breaching the lower band. Okay, we get a sell-off in this asset. And then we get a trend reversal. So we have a downtrend, a sell-off, buyers come in, there's enough demand, and they drive price right back up. Okay, so this is kind of take a snapshot of this in your mind, and this is the picture of the slingshot. So we're going to start diving deeper into the mechanics of this. I'll give you a quick overview of the Bollinger Bands. I want you to have at least a baseline understanding of why this works and the significance of the methodology behind it. So in order to calculate the Bollinger Bands, we just take a simple moving average of the securities price. That's the center band that you see there on the chart. Then we take the standard deviation of the securities price. So standard deviation is just the mathematical measurement of average variance. Now standard deviation, this is kind of an importance of standard deviation. It measures how spread out numbers are from an average value. Okay, we won't go into the calculations of it. But what you need to understand is that because standard deviation is a measure of volatility, when the market becomes more volatile, the bands will widen. And when the market is less volatile, the bands contract. So I nearly always get asked, well, what settings do you use? Like most indicators, you can change the settings of the indicator. And most platforms default to these settings. The Metastock platform will default to this, so you actually probably are not going to have to change anything. But I use a 20-period SMA or simple moving average setting for that center band, and then a 2 standard deviation setting for the outer bands. So that means when price is at one of the outer bands, it's 2 standard deviations away from the mean or the average. Okay, so those are the settings. Now, as I mentioned, there's like any indicator, there's a abundance of ways to use the indicator to apply it to the markets. I like to say, you could take any indicator, give it to 100 different traders, and it's probably going to be used 100 different ways. So let's kind of look at some of the common ways this indicator is used and some of the drawbacks. So one way is to buy at the bottom band and sell at the top band. And this can work in tight ranging markets, but the problem is when we go into a volatility expansion, the price can hug the upper or lower band for extended periods of time. So this is a strategy where you might have a string of consecutive winning trades that are wiped out by one bad trade. So for that reason, don't prefer to use that approach. Another approach is band contraction and expansion. We actually are going to incorporate this into the Slingshot. It's very important because this is what indicates volatility, contraction, and expansion. And it can be a good indicator of an impending big move in a security. But the problem is we don't know in which direction the move will occur. So we don't use that approach by itself. Another approach is buy or sell at the middle band. So this is what we call a mean reversion strategy. Now this tactic can work in strong trending markets, but it fails in sideways ranging markets. Okay, so we don't use that approach. The Slingshot is a unique method where we wait for the lower band to break. Price will hug the lower band and ultimately rebound to where the breach initially occurred. I'll explain what all that means and we'll look at some charts. So this will become clear to you. This is the essence of the Slingshot, and you're going to see why this is so effective. So let's start to dig in, right? But I want you to know, okay, so the Slingshot occurs with astounding predictability when you know how to apply it, right, and use it to navigate the markets. As I mentioned, the major market indices have returned to the initial volatility breakout with 100% accuracy. Okay, so that includes the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the 08 mortgage crisis when markets lost over half of their value in the second half of the year, the 2000 dot-com bubble, the recent Corona crash, every black swan event, market correction, major crash, bear market, you name it, this plays out. Okay, so we're going to look at some of these charts. Now we've got the Bollinger Bands plotted here on the chart. Okay, so I'm going to walk you through this. So this is the Slingshot. All right, so I told you we come back to this S&P 500 chart from back in 2020. So on the left edge of the chart, I'm going to point out a few things here. So markets are trading around all-time highs. Okay, so what do we have? We have FOMO, fear of missing out. We have overly exuberant traders buying into markets, with the anticipation or hope that markets will continue to make new all-time highs. But we're actually at a high level of financial risk in the markets right now. There's probably more downside risk than there is upside potential. Okay, now when markets are in this environment, and we're in this now, we're actually in volatility contraction right now. And there's a way to identify that just looking at the candlestick. Notice how the high-low range of those candles are very narrow. So you often see this happen prior to a major market sell-off. So this is volatility contraction. Now, also something is happening with the bands. So they're relatively narrow and horizontal. That indicates volatility contraction. Okay, so when that occurs, we should be, hyper aware. Our radar should be up for a potential market sell-off or correction or downside retracement. Now, notice here, this is the beginning of the Slingshot where price starts to rotate lower. Okay, so this is where some fear is starting to play out in markets around the pandemic. Price comes down and breaches that lower band. And notice how the high-low range of the candles begins to widen. So we're getting volatility expansion. So we get a breach of the lower band. Now, something else happens simultaneously that's important to know as part of the Slingshot. The bands were previously narrow and horizontal, so we were in volatility contraction. Notice how simultaneously when we get a breach of that lower band, the outer bands begin to diverge and widen. Okay, that is our indicator of a high potential for a rotation lower markets. This is the beginning of the Slingshot. Okay, of course, we got this major market sell-off. S&P's down over 30% in just a matter of weeks. Now that creates opportunity for the contrarian trader, right? So when there's panic selling and people are taking losses, there are people out there who are going to take advantage of that. That's not easy to hear, right? If you're one of the people taking losses, but this is the reality. Now you're going to understand how you can be one of those people. So the catalyst here, right? And this is what's so interesting about these market events is there's no resolution. In fact, things went on to get much worse. Yet markets, rotated higher, right back up into that initial price level where the volatility expansion or the sell-off ensued. Okay, right around that 3,200 level on the S&Ps. Okay, and again, notice how price starts to kind of move sideways after that. Okay, so this is where people who got in near the bottom of the sell-off around 2200 are unwinding positions and taking profits. This is where the slingshot is released. Okay, so the market, there's a market exhaustion, and kind of price action is indicated here on the chart, kind of dries up, right? So we start to move sideways. Okay, this is how the slingshot works. Okay, so again, when you see a breach of the lower band and a divergence of the outer bands after a previous volatility contraction with narrow bands, okay, that's the beginning of the slingshot. Let's look at some other charts, because this doesn't just apply to the S&Ps. This applies to individual stocks. So this is a daily chart of Apple. Okay, this is not a current chart, it's from the past, but I'll walk you through it once again. So Apple's in a pretty strong uptrend. It rotates lower into the lower band. It begins to breach the lower band. Now, for any of you who are candlestick enthusiasts, we had two consecutive bullish reversal candles right off this lower band. Remember that was one of the common approaches we talked about that people use with the Bollinger Bands, is to buy at the lower band. And in fact, that first candle that touched it, there were obviously traders there buying almost right at a 2 standard deviation move that drove the price back up for that particular day. But that approach would have obviously failed here, right? Because we get a breach of the lower band. Now, once again, when we get that breach of the lower band, the outer bands are simultaneously diverging. That's our indicator of a high probability of a rotation lower in the asset. Now, so we get that, right? We get a sell-off on Apple down into roughly the 168 level. Now that created buying opportunities. So we trade down into the support level, buyers come in and drive price right back up to that initial volatility expansion level, right around 196. Once again, notice how over about a course of a week or so, price kind of stalls out right there before it goes on to make an extended upside move. Here's another example, the Qs from back in 2018. So on the left edge of the chart, again, we're in volatility expansion. Again, at this time, markets were trading around all-time highs, high level of financial risk. Notice what happens. QQQ comes down, breaches the lower band. We were previously in volatility contraction. Volatility begins to expand, so we get a divergence to the outer bands. That's our clue that there's likely a sell-off coming in the asset. There it is. But that creates buying opportunity. Buyers come in, drive price right back up to that initial volatility expansion level, right around 180. Okay. Does it work on intraday time frames? So yes, this is a 5-minute chart of AMD advanced micro devices. Okay. Notice how AMD on this 5-minute chart is just ranging on the left edge of the chart, right? It's just, and that was also an approach we looked at. Buy at the bottom band, sell at the top band. That would have worked a few times here. Until we start to get breaches of the lower band, we get volatility expansion, we get a sell-off, but buyers come in, drive price right back up to the initial volatility expansion level. All right, so we talked about how to identify when markets are vulnerable to a sell-off, right? Likely to sell off, the breach of the lower band and the simultaneous divergence of the outer bands. So you're probably wondering, how do you identify the buy zone? And that's the trick, is to identify when the band is overextended and ready to snap back. So this is challenging. There's a number of ways to do this. I used to do this all manually. You can use, candlestick patterns. You can use support levels. And when I used to do this, I realized I was incorporating a lot of guesswork. And I try to remove as much guesswork from my trading decisions as possible. So I decided to develop an algorithm that could help identify this. And I spent over a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. And I eventually got this formula dialed in. So I had to configure it to work across all time frames, various markets. I don't just trade one market. I trade futures, equities, ETFs, options, in an adaptable algorithmic formula, okay, that can reliably predict or forecast market trends. Okay, so what was developed out of all this work is a tool that can provide accurate buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of a forecasted move. So that means if you're trading off a daily chart, right? You have up to 3 days of advance notice of a forecasted move. All right, and this was all done with a formula of momentum studies, volatility studies, price action setups, and you can actually use these to identify buy and sell signals near the outer bands. Not only that, you can use this as a standalone as well, but I want to, I'm obviously revealing my Slingshot strategy to you guys on our session today. I want to kind of show you how you can incorporate those things, but this is all built into our trade trend indicator, okay? And we initially developed the trade trend indicator with Metastock. I'm trying to remember how many years it's been now, at least probably 5 years. And it's been wildly successful. So I'll kind of walk you through what it is, what it does, and we'll look at some more charts together. But what it does is accurately identify, again, buy and sell signals up to 3 candles in advance of a trend. So if you're using this on an intraday time frame, you have up to 15 minutes, like a 5-minute chart, you have up to 15 minutes of advance notice. Trading off a 1-minute chart, right? You have up to 3 minutes of advance notice with a forecasted buy or sell signal. And it also gives you the exact entry price. So again, you're not guessing. It does this with a proprietary momentum algorithm that reads the market in real time. It also includes a trailing stop algorithm. So when you get into a trade, right, and it's moving in your favor, it reads the volatility and momentum, strength, the strength or momentum behind that trend to help you lock in profits before that trend stalls out or reverses. It can help us forecast short-term and long-term trends with astounding accuracy. Again, it can be applied to any asset class, equities, ETFs, futures, Forex. It also comes with a screener or a scanner, so you can find these opportunities, these forecasted buy and sell signals with the click of a mouse. You can scan and trade in any time frame. I love using this indicator for options trading. Any of you are options traders, you know that a lot of option strategies are highly time critical. So you've got to be right on your timing, your delta, your gamma, your theta, your vega, everything's got to line up, to have a successful trade. And trade trend helps with that tremendously. So I use this indicator for virtually all of my option trading decisions. It does not repaint. So what that means is once you get a signal set in stone, right, it's not going to change on your chart. So you can actually go back and so a lot of indicators will repaint, but with trade trend, you can actually go back on the chart. The signals do not disappear, and actually know that that was the signal that you would have received had you been trading on that chart historically. Now, it also has built-in protection to avoid whipsaws. So markets will often go into whipsaw conditions. It can help us stay out of a lot of those. And I'll explain that little trick I mentioned that I'll give you guys to help stay out of a lot of trades that may not actually work out. It helps us capture a lot of the trend before it reverses, right? All trends eventually end and reverse. It's designed to limit losses and let profits run. Like any other strategy or indicator, there will always be losing trades. The idea is we need to have a positive expectancy. So we need to, in other words, have our winning trades outpace our losing trades, right? And it can also be used with any other indicator system. So maybe you're already using another indicator you like, or you have a system that works well, but you want to, supercharge it. You want to improve it. And that's why I shared the Slingshot strategy with you guys on the session today. This is an indicator, which again, you can use as a standalone, but can also apply to highly effective strategies like the Slingshot and trade without guesswork, right? So there's no guesswork involved. And this is the trick I'll reveal to you that, again, is highly underutilized. This is built into the trade trend indicator using just a simple order type that, again, I've actually looked at this. I've looked at broker data and order types. And if you look at the aggregate, so of order types that people use to enter trades, a high percentage of them are market or limit orders. And not that there's anything wrong with that, but when you're taking a directional trade, if you think about that, right? If you use a market order, you're jumping in right then and there. If you use a limit order, you may be trying to get in at a lower price and then hope that you get a favorable fill and then the market goes back in your favor. But a lot of times that doesn't happen. So you probably experience this. You get into a directional trade and it's a losing trade right off the bat. Okay, well, we can help eliminate a lot of those using buy stop and sell stop orders to get into the trade. So a buy stop order would be used to enter a long trade. And again, this is programmed into the trade trend indicator. So when you get a forecasted buy signal, it's going to give you a suggested entry price at a price level that's higher than the current market price. Okay. So if we don't get follow through, then we simply don't get into the trade. Okay. And so the nice thing about this approach is a lot of these trades that do get filled, you're in a winning trade almost off the bat a lot of the times. And then conversely, you would just use a sell stop order if you're taking a short position to enter short trades. This can actually help filter out false signals and improve consistency and profitability. So again, that's built into the trade trend indicator. Now, again, I want to share some results because I do actually use these tools and strategies in my own personal trading. And I don't cherry pick easy market conditions when I share these. So I pick some of the worst market conditions to demonstrate that these tools have worked for me. So these are my personal real money TD Ameritrade brokerage account screenshots from back in 2020 during the Corona crash. All right, and I was using the trade trend indicator and the Slingshot strategy in combination during this period. Now this is just, these are just some of my trades from the end of February when that Slingshot began to set in, right? So as the bands are getting pulled back, markets are breaching that lower 2 standard deviation band, they're widening, and markets are starting to sell off. I was being pretty cautious. Obviously, there was a lot of fear and uncertainty, so I was mostly in cash, but I was beginning to exit long positions and put on some bearish positions. So I played the Slingshot on the way down, and by the end of February, did over $13,300, and I was trading pretty small position sizes here, as you can see, 1, 2, 3 contracts. And then I got a buy signal from Trade Trend in March, and I was still trading small positions, 1, 2, 3 contracts, but I was trading more positions, right, as I got that buy signal and started to convert more cash into some of these bullish positions. And in the month of March, so this is my statement at the end of the month, over $27,000 in profit, just using the trade trend and the Slingshot. So, when there's all this panic selling, heavy losses occurring, and uncertainty of when markets were going to recover, did over $40,500 using these two tools. So again, I can't guarantee anyone will replicate these results, but wanted to share some of my real world real money results to back up using trade trend and the Slingshot in the markets. So this works in any market, it works in any time frame, any size account. Okay, so this is all really built to be tailored to your own risk tolerance, your own trading style, whatever your situation is. And what makes it unique is it gives us forecasts that are predictive buy and sell signals before the move occurs, so up to 3 candles in advance. So a lot of these trend reversals and even trend continuations, you're going to have with a lot of these, you'll have advanced notice, right? So the idea is to not jump into the trend too late or near the top when it's exhausted and it's going to reverse on you. And it's forecasted every market crash and rebound in the history of the market with 100% accuracy. So I'll tell you in just a minute how you can get the indicator for yourself and begin using it. But once you have it, I like to encourage our members to apply it to your chart, apply it to a chart of the S&P or the NASDAQ, go back on the chart as far as you want. Look at every black swan event, every bear market crash. You'll find a trade trend sell signal there, okay? These are some examples, the flash crash of August 2015. August 19th, trade trend gave us a sell signal literally a day before the market crashed. It also gave us a buy signal in early October when we got that double bottom and markets rebounded. And I want you guys, now that you know the Slingshot, to look at that too. Do you see the Slingshot here? See when we got that sell signal on August 19th, see how the candles breached the lower band and we got a simultaneous divergence of the outer bands, right? And you want to really look for that obvious divergence where the bands really start to widen. Okay, that's the Slingshot. Those are the trade trend buy and sell signal. This is the 08 mortgage crisis. Trade trend gave us a sell signal back on May 21st of 08. Literally, a week or so before markets lost over half of their value the second half of the year. It also gave us a buy signal near the end of November before markets rebounded. This is going back over 2 decades, the 2000 .com bubble. Again, see the slingshot there on the left edge of the chart? The bands are diverging. They're getting very narrow, right? And then price breaches the lower band and the bands widen. Trade trend came up with a sell signal there in September, and then we get the 2000 .com bubble crash. Also gave us a buy signal in late September, early October as markets rebounded. Right, so we obviously had a bear market in 2022, okay? When markets were right around all-time highs, okay, we got the sell signal from trade trend. Okay, literally the day the market started rotating lower and lost a huge percentage of its previous gains. We just had an election, right? Trade trend has done an incredible job forecasting markets around elections and following the election. This is the 2020 election. Okay, it gave us an accurate buy signal right around the election there, and markets obviously took off to the upside. This is the 2016 election, gave us a buy signal before markets ripped to the upside. This is the 2012 election, once again gave us a buy signal before markets ripped to the upside. And we actually got a buy signal from trade trend around this election before markets ripped to the upside. So guys, virtually every system will produce winning trades. The problem is they don't keep you out of the market when conditions are not favorable, and you can end up giving back your profits on the losing trades. Okay, our goal is to help you avoid that. Okay, again, this is real world, real money results from my Thinkorswim accounts using trade trend. So this is just trade trend by itself, not with the Slingshot, because I do use the indicator as a standalone as well, and I do a lot of futures trading. I did over $8,000 in a day with over 27,000 in open profit, over 6,500 in a day, over 6,000 in a day, over 5,400 in a day. I do have losing trades. Yeah, don't want to mislead you by any means. Obviously, you can see I have losing trades in here. Trade trend has helped me contain those, right, to keep them relatively small compared to my winning trades, and that's how we, that's the idea, right? We want to have a positive expectancy. Here's a real world, real money example again from my personal trading account using trade trend with the Slingshot. So this one I traded the Slingshot on the way down, and then I traded it back on the way up, just with a few different futures contracts, over 26,600 in open profit on the day, on the day, and then over 115,800 in open profit. So again, I can't guarantee anyone will replicate these results, but these are the methodologies and tools that I use to do this. Okay, so I do use this myself. So now I want to make a promise to you guys. I want to help you have days just like these, and I'm going to give you access to the exact indicator that I've used to achieve results like I've shared with you on our session. So this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I have a lot of really cool stuff that I'm going to reveal to you now, which includes every one of my special techniques and indicators that makes profits like this possible. I don't hold anything back, so I don't give you like a redacted version of the indicator and I'm really using a different version. It's the exact one that I use. Slingshot, I revealed the exact strategy that I use. I don't hold anything back. So you're gonna get offered a lot of stuff here, and I'm gonna walk you through it. But that will include a year of trade trend, okay, for equities, ETFs, futures, Forex, whatever market you guys like to trade. It comes with the exact entry and exit signals. You're also gonna get live interactive sessions. We hold these weekly on Tuesday evenings. I'll go through that a little bit more with you. You're gonna get access to our members area for replays and recorded training sessions. Okay, so these are kind of like what we did on our session today. Like we walked through the Slingshot strategy. So we do this on a weekly basis with our members at Altos. So I'm on these sessions each week. So you get support and coaching from me on a weekly basis on these sessions. You get to learn a lot of other strategies and methodologies, see how I'm using the indicators. If you guys are options traders, we do a lot of training and strategy around option adjustments to deal with option trades that aren't working out, and we'll go through ways to mitigate risk, and even some cases take a losing option trade and turn it into a net profitable outcome. I go through what I'm currently trading. So I'll share with you on these sessions, what I'm trading at the moment, some of my most profitable tickers, etc. So this is all, the indicators all built into the Metastock platform, okay? And this is all designed to help you cut the learning curve, right? Trading has a very steep learning curve. It certainly did for me. I went through well over a decade of trials and tribulations to try to get to where I am today. So it wasn't easy. I realize that's probably the case for most of us. So that's what I enjoy doing, is helping people shorten that learning curve. Now, there's a lot more in this package. So again, it comes with a 12-month subscription of Trade Trend. So you get all the signals for any market you like, any time frame. Normally we retail the indicator for $14.99, but it also comes with the weekly live sessions. Okay, so normally that's retailed for $5.50, but you're going to get that as part of the Metastock package today. You're going to get coaching from me on a weekly basis. So again, I'm on each of these sessions. So the only limitation is I can't give you personal investment advice, but I'm there to coach and help you be successful. My coaching normally starts at $19.97 and goes up from there, but that's also going to be part of your package. You're going to get access to our invitation-only Facebook group. We have a private group of over 800 members who use Trade Trend and our other strategies. Normally we retail that membership for $199. It's also part of the package. You're going to get to learn trade adjustments to fix losing trades. So we're going to give you access to an online curriculum. You can watch it at your leisure. Normally we retail this for $900. And so if you guys are options traders, this is going to be a valuable addition to the package that we're going to throw in there as well. Ultimately, you can learn to trade equities, futures, forex options with consistency, and of course that's prices. We can't put a price tag on that, but I'm also going to give you a couple bonuses. So bonus number one are my top 2 weekly trade trend picks. So as you're getting up and running with the indicator and getting comfortable with it, learning to use it, hopefully paper trading, right, practicing, I'm going to be sending you my top 2 picks each Monday evening, okay, for that week. So I go to work every Monday, put in all the time and effort to find what I think are the 2 very best buy or sell signals. So this could be for equities, ETFs. I also provide a supplemental option alert to go along with it if you prefer to trade the option in lieu of the stock. Normally we retail that alert service for $595, but that's also going to be part of the package as bonus number 1. And then bonus number 2 is my latest ebook, How to Create Risk-Free Trades. This is a money management ebook that goes through different tactics to mitigate risk and even in some cases eliminate it from your trades. We retail this ebook for $97, but are throwing it into the package as well, which is valued at over $5,000. So it's a hugely valuable package. If you were to buy all this stuff from us individually at our retail price, you'd spend quite a bit of money to do so. But for today only, we're taking 80% off the retail price. So $997, you get everything you see here. You get the trade trend indicator on Metastock. It's a screaming deal. We are going to limit this to 25 seats because it is a huge discount, 80% off. And we want to give you an opportunity, obviously, to get into these things at a very reduced price, but we can't obviously do that with everybody. So if you want to take advantage, altostrading.com/slingshot. Jeff, I'm sure we'll put that in the chat for you, so you can click the link right out of there to claim one of those 25 seats. And again, you get both bonuses. You're going to get our Professional Trading Series online course. It's now we make additions to this. I think it's over 10 hours of content now. Like we did today in our session with the Slingshot strategy, you'll learn other strategies. We walk through different markets, asset classes. Again, we teach trade adjustments in this course as well. You get our weekly trade trend picks, okay, which have done fantastically well. We have a very high success rate with these weekly picks. Here's an actual real world screenshot of some of our results using the trade trend indicator for the weekly picks that we'll be sending out to you on Monday. This is an example of what it looks like. This is one on CRISPR Therapeutics we sent out to our members a while back, which again comes with a supplemental option alert if you prefer to trade the option in lieu of the stock. We get thousands of testimonials from members who use Trade Trend and the successes they've had with it. In the interest of time, I know we're kind of running a little behind here. I won't read you these, but just want you to know we do get a lot of success stories from our members, which is why I really love to do this. I love getting the success stories, and we're going to throw in a guarantee as well. Okay, so we really want you to be successful with this. So I realize it's an investment in yourself, and we want to give you time for that to pay off. So if you don't earn at least the cost of your membership fee back in the first 90 days, And even if you don't use it, that's fine. Or even if you just paper trade with it, that's fine. We'll still honor this. Just shoot us an email and we'll give you an extra year of trade on the house. Okay, so that's a $1,499 value. We want to give you ample time to be successful here. So I know we're kind of right up on the hour, but and so I'll obviously check in with Jeff here in just a second to see if we have time for a couple of questions. But I want to give you our contact information. So if you do have questions outside of our session today, you can reach us. Our email is support@altostrading.com. Toll-free number is 800-895-9348. Feel free to reach out anytime. And again, there's the link, altostrading.com/slingshot, and everything that you get in this incredible package that we put together exclusively for the Metastock Summit at an 80% discount. So I hope you guys got a lot out of the session. I'm gonna go ahead and pass it back over to Jeff, and if there are any questions, I'd be happy to take any if we have time.
Yeah, okay. A question we get a lot of is, will this work on markets that are outside of the US? What markets will this work for?
Yeah, so as I mentioned, we have members in over 100 countries across the globe. It can be used in any market. So as long as you have chart access to that international market, you can apply it, absolutely.
Art wants to know how your flying lessons are going. He threw me off a little bit.
Oh, hey, Art.
They said, hi, Jeff. First, I'm like, oh, this is for me. But no, I realize you're also Jeff. How are the flying lessons going?
Yeah, Art is my pilot buddy. Art was a airline captain and is retired now, but I run into him at trade shows and I always enjoy talking to him. And yeah, they're going well. I'm getting very close, It's kind of tough now, the weather. We've had a lot of better weather here in Boise, so haven't been up a whole lot lately, but great to see you, Art.
All right. And then do you have recommended timeframes that you like to look at when you're using Trade Trend?
Yeah, we get asked that question a lot. So I really designed this to, be applied to any time frame that suits your trading style. But personally, I do most of my trading off of daily charts, and I can show you here quickly what it looks like on Metastock. This is just a daily chart of the SPY, but the time frame really is not important. That's really more up to your trading style, your trading personality. But here's what it looks like, right? So you're going to get your forecasted signal. So you'll know when there's a buy setup. This one on the SPY back in early August. That's the advance notice, right? And then you're going to the indicator will give you, and that's all going to be found in the expert commentary. It will tell you the exact entry price. You can see the confirmed entries with the arrows, right? So buy, sell, buy, sell, buy, sell. And again, we recently had a nice buy here around the election. But this is what it's going to look like regardless of the chart time frame. That's really just kind of up to your trading style.
Cool. I also want to add, while we're kind of talking about it, with the Metastock application or the Metastock add-on, you're going to get everything you'd expect out of it. So full market scanning, the ability to scan any market at any time and get instant results. Well, results for the current bar that you're looking at. You're going to get expert advice. Jeff did a really good job of putting together commentary for it and all that kind of stuff too. So not only do you get that add-on and everything you'd expect from that, you're going to get all of the stuff that Jeff throws in with it, the 12 months of access, the trade recommendations, the personal coaching, all that kind of stuff is really, really valuable, especially if it's learning a new method that you have. So there you go. Jeff, I think that's the time.
Well, thanks for having me. It's a pleasure to be here. And thanks to all of you for attending. I hope you got a lot out of it and wish you the very best. And welcome to all of our new members joining. Looking forward to working with all of you. Thanks, Jeff.
Thank you, Jeff. All right, very cool. We're going to do this. Also, if you do have questions for us, or you want to give us a call and kind of get this added to your account, we can do that here at Metastock too. And so if you want to get in touch with us, give us a call, metastock.com/conf-promo or metastock.com/sales chat if you want to chat with us, 800-882-3040 from the US or Canada if you want to call us, or metastock.com/conf-promo. You can actually take advantage of that deal right there as well. So there you go. We're going to come back to this. I want to say thank you to CMT. That slide's in the wrong place. I want to say thank you to the CMT Association for sponsoring today's event, CMT organization, great nonprofit, started back in, well, I'm not sure actually when this started, but Friday, Tyler is going to come in. He's going to talk about if you manage money or if you want to manage money, if you have assets under management, how beneficial a CMT designation can have on your kind of career. And it is impactful. It's also some really good education and a very well accredited organization. You can find out more about the CMT Association at www.cmtassociation.org. And with that being said, I'm going to go back just a couple of pages here. And Greg, I'm going to ask you to help me with another prize.
I am here for you.
All right. Okay. Let's figure out what the prize is real quick.
All right.
So Vince Mora came in yesterday. He talked and he kind of showed some results from the trade services that he did. He went through all of the stocks. I can't remember exactly how many he showed, but I think it was 9 or 10, and all of them, but maybe 1 or 2 were winners. He does a service called trading at tradingwins.com, where he does 2 or 3 live sessions where they use that Vora victory methodology. And we're going to give away 1 month of the membership to that service. So you'll be able to go in and watch Vince and see him analyze stocks in a Zoom chat. You have access to the recordings if you can't do that. And very, very good technician, very, very good service. And I wish you good luck to win. So it's all up to Greg Lewis, though, and whether he thinks you should be random or not. So,
well, I should mention that I've several times visited his live, what I'm trying to say, his live broadcast.
Yeah,
very informative, really helps, and I really like Vince Vora and his methods. So this is a great prize.
One of the things that they were kind of surprised with, because there's a lot of Metastock members that go to the service, simply because it's such a good seller for ours, and they're surprised with how many people show up. And I'm like, well, why wouldn't you show up? It's part of it. You should go. So in any case, all right, give me a number between 1 and 9,775.
Okay, according to the Google random number generator, that is 8467, 8,467.
Ooh, this is a person from Italy.
Italia.
This has to be our first Italian winner.
I wonder if it's Superfan Vincenzo.
I don't know, because I don't know his name.
Vincenzo Denora.
Valley G in Italy is the winner. So I don't think it's Vincenzo.
Okay.
But Valley G, you just won the prize. I'll have your information sent over to Vince's team early next week. And they'll get in touch with you in terms of helping you redeem that and get all set up for it. And I would recommend go to the thing. If because of time zone differences you can't in Italy, make sure you catch the recordings. They include recordings. Vince has had a profound impact on my trading. I was going to say effect. He's probably one of the. I love kind of the way he talks about kind of looking for stocks and kind of the way he kind of eliminates stocks. Great partner of ours, great mentor of mine.
Well, I love what you said about him yesterday, that if he answers a question, you'll understand the answer, which I thought was a great way to describe him.
Cool. All right. Thank you, Greg. Appreciate the assist. We'll have more prizes coming up. And we forgot to mention, but if you're watching us on YouTube and you haven't registered yet, the pinned comment on the top of the chat will take you to the registration page. As long as you're registered, it doesn't matter if you're watching a GoToWebinar or YouTube, you're going to be qualified to enter. We're, of course, Metastock. Metastock's been rated #1 in its price category for 31 years in a row. Going to start to sound like a broken record. You should try it out. $75 for 3 months access. That'll give you Metastock DC. You can do that at metastock.com/conf promo, metastock.com/sales chat, and you can do it by calling us at 800-882-3040. So without further ado, let's get to our next guest, who's AJ Brown. AJ's spoken at a number of events now, likes to talk a lot about options and trading options. Some fun facts that you might not know is he's a fairly skilled acrobat, from what I understand. but he's also a fairly skilled trader and all that kind of good stuff. So AJ, I can see you already. How you doing?
I'm doing well. How are you?
Good.
Let me
Now,
get.
now correct me. It's a trap. It's a trapeze is what you do, right?
Yeah, circus arts, aerialist arts. I decided to do that in my late 40s because why not? Why not try to run away and join the circus, right?
Well, at least you did it on your 40s. I find in my 50s things are starting to get sore and
I'm telling you, I just turned 51, Jeff, and things are sore, but I'm continuing to persevere. I'm going to join that circus one of these days.
Okay, very cool. Well, if you do, we can always WebEx you in from anywhere.
I would love that from the top of the trapeze. That would be fantastic.
Especially from there, that would be awesome. All right, I sent you the screen share. It should be asking you if you want to share your screen.
Yes, it sure is. It's over here on my other screen, but I think that you're seeing it should come up any minute.
Yeah, I see a behind the scenes look at how I could get income. Okay, I'm gonna get out of the way. It's your turn. Go.
All right, thank you. Hey, everybody. So I'm going to take the next few minutes to talk to you a little bit different than what I sat through the end of Martha's presentation. I sat through Jeff's presentation, all phenomenal. And I know both of them. And yes, I miss Steve Bigelow as well. I've got those 2 books that Jeff gave away in the first giveaway on my shelf. Steve Bigelow was an amazing chart analyst. With that said, these guys were talking a lot about movements in the stock, and they were shying away a little bit against volatility. As you can see in my hat, volatility equals opportunity. So I'm going to be talking about how I use those sideways, choppy, boring stocks that we can filter for, we can screen for using the MetaStock platform. By the way, that platform, Jeff keeps talking about 31 years. I mean, I started using that platform in the late 90s, and it has been the go-to for pretty much all successful traders out there. And the fact that he's giving you 2 extra months if you get, your first month, you need to take advantage of that. But let's talk a little bit about how I'm using some options in order to create some income. So I like to start my presentation. I've got a lot of examples here, so I'm not going to just show you slides this whole time. But I like to start off with a couple of fact bombs that I'm going to throw at you. First of all, a lot of uncertainty going on in the world right now. There's skirmishes. We just got a new president elect. Well, previous president's coming back. All kinds of things. Maybe there's going to be some changes in, fiscal policy moving forward. We don't know. There's a lot of unknowns. But what we do know that is we've got a market out there. And that's what we've been talking about since the beginning of this MetaStock Summit. And if you know how to play that market, you can get set up for months, if not years to come. I started playing the market in the late 90s. And that's why at this point, and I'm an end of day trader. So I'm 51 years old. I have a 3-year-old toddler. And I just spend as much time with her, or spend as much time traveling, or spend as much time in pursuing my circus arts as I can. And I've kind of created this machine in order to create income from the markets off of the volatility changes and off of time passing by. So you can set this up for whatever is going to work with your lifestyle. That's what works for me, is to have my days free and then spend, half an hour, 10 minutes, hour in the evening after my toddler's gone to bed and doing my process, and then not revisiting it until the next hour. So one thing to remember about the money markets is that, despite what the talking heads will say on Black Swan days and things like that, money's not destroyed in the markets. Money simply changes hands. That's the whole definition of markets, is where money changes hands. And so the key is putting yourself on the correct side of that equation. And oftentimes, especially when it comes to options, I see a lot of people buying when they should be selling, right? And so let's first ask this question, because I always like to gauge the folks in the room. Are you here because you'd like to learn how to invest for low risks and high returns and be 100% self-reliant? I always, make the analogy that that's about learning how to fish. Or maybe what you like to do is learn how to invest, but have seasoned investors right there so that you can, you know, whiteboard your ideas with them before you actually go live. So learn how to fish, but have expert fishermen there to help, be in kind of a tribe. Or what you like to do maybe is just follow seasoned investors. You're not trying to learn anything. You just want to kind of mimic what they're doing, fish alongside expert fishermen and do what they do. Or maybe there's some other reason you're here. Could you just type into the Q&A, whether it be in the YouTube chat or whether it be here in the GoToWebinar, let me know where you're coming from, because I can go ahead and tweak my presentation today to cater to the majority there. It looks like a lot of folks, it looks like there's a good smattering. A lot of folks are saying A, but there's a couple of C's. So thank you for being honest. Let's go on. Okay. I always like to do this. Humor me. I know you've seen this a million times, but if I was to give you $50,000 right now, would you take it? Or would you rather go for the deal where I give you a penny that doubles every day for a month? Now, there's a caveat that a lot of people don't talk about with that penny deal. So let me explain the terms here. In order for that penny to double, you're going to have to stay consistent. Consistency is key, right? You're going to have to do work. I'm not just going to give you the $50,000. I'm going to give you a penny, and you're going to have to do something every day in order to make it double. So realize that there's some additional stuff in there. It's not just a math problem. So, okay, we know what the $50,000 cash is. If I give you that penny, let's trace it. So we'll go through the first week here, day 7. I've got 64 cents. I've been doing that process. I've been sticking to my consistency. And at the end of the first week, about if a month has 4 weeks in the in a month, if there's 4 weeks in a month, I'm already done with the first week. And compared to that $50,000, I've got 64 cents. That doesn't really get me too excited, and I've been putting a lot of that work and trying to remain consistent. Okay, let's just keep going. About a third of the way through the month, day 10, $5.12. So I'm starting to question whether I shouldn't have taken that $50,000, because man, I've been doing a lot of this stuff that I'm having to do, a lot of analysis, a lot of whatever I have to do, whatever my process is, and I'm wondering if it's even worth it, but let's keep going. So let's go 2 weeks in, or let's go halfway. Let's go day 15. I've got 163.84. The month is just about half over, and I'm nowhere near $50,000. Let's go up to 3 weeks. Okay, 3 weeks. The month is pretty much 3/4 of the way through, right? And I'm getting up there. I've got $10,485, but man, especially if there's been a lot of folks coming up with great marketing, you know, I call it shiny object syndrome, kind of trying to attract me to all sorts of other sort of trading styles and things. Could I have remained consistent with my profit without seeing those big returns? Well, if I get to day 24, you can see I finally, you know, the month has like 6 days left in it. I finally have more than $50,000. And then because I was consistent when everybody else was telling me I was crazy, I mean, by the end of the month, I've got over $21.5 million, just shy. That's called compound interest. I'm not sure if Albert Einstein actually said this quote, but a lot of people attribute it to him, but it is a very powerful force. And that's how I reverse engineered how I do my trading. Now, take a look at this chart I just flicked on the screen here. Do you guys see that chart? I want to basically kind of imprint this. I'm going to come back to it after we talk about selling options premium. But I want to imprint this. First of all, you may not know this because it's hard to see, but this is the 0 line. And so this, first of all, this is parabolic, exponential. It's not linear. That means it goes up and it increases with speed. There's 2 lines, right? There's one that's called high and one that's called low. And the low line is just ever so slightly below the zero for just a small minute, and then it's above the line. So just look at this, because we're going to revisit it, but I kind of want to, instill this and kind of lay the foundation for what we're going to be talking about today. Now, remember we talked about doubling our money, doubling our penny every evening. Maybe once in a while you'll have an amazing trade that will do that, but I wanted something more consistent for my efforts. And so I was talking about, doubling my money every year, which is way better than somebody who's doing just a passive investment. Even putting your money into a good mutual fund is not going to double every year. So I wanted to know, if I'm going to be an active trader doing a process, what are my goals here? I can always have goals, and then if I do better than the goals, that's great. So here's what you have to really imprint. If you're taking notes, write this down. If you earn 6% on your money every month, which is what we do with our options trading, actually we do better, but 6% is our target, then our investment will more than double. So a lot of our traders start with somewhere around $1,000. The real sweet spot is if you've got an account with $4,000 to $5,000 in it. But if you got $1,000, then just focusing on this consistent process means next year you'll have $2,000 and just a little bit more than $2,000, $4,000 in 2 years, and then that initial $1,000 will be about $33,000 5 years from now, and you'll be a bona fide millionaire in 10 years, and then it accelerates from there, if that makes sense. And that's exactly what I've done, because I started with a challenge when I opened up my school, Trading Trainer, in 2003. I started with a challenge in order to get some notoriety, where I started with $5,000 account, and I quickly, over the next 24 months, grew it to over $350,000 using the strategies that we're talking today. So you can do that. And if you focus on your 6% target, now a lot of our program participants make just over double digit, like 10, 11, 12% per month. So they're doubling their money every 4 to 5 months. But still, our target is we want to do 6% gains on our portfolio every month. And what's great about that is if you grow your portfolio to like $100,000 portfolio, right? That means you're going to be generating over $100,000 every year. Now, the mean, it's not mean, it's median. I got to get my statistical terms correct. The median income here in the States is $87,000 for a 60-hour-a-week salaried position. Now, of course, if you live on either the left or the right coast of the United States, you're earning a lot more than that. But the median income for a 60-hour-a-week salaried position, but the beautiful part of letting your money work for you, as you probably already know, is that you don't have to put in that amount of time. It's the money working on your behalf. You do your end of day process, or whatever it is, whatever your trading style is, you do that, and then you let the money do its process. And, if you can do your process and have it generating more than the median income, you can figure out how to live comfortably on just letting your money work for you. And that's what I do, right? I kept working, right? I started doing my trading heavily in 1997, but I kept working at my job at Hewlett Packard until 2005. And then I haven't worked since, right? I grew my portfolio till it was the golden goose that kept giving me eggs. And it's done that ever since. In fact, it gives me so many eggs that I have reinvested the extra past my expenses back into the account, and it's just grown to pretty much 8 figures now. We're just under $20 million in our assets. So it's kind of cool, right? All right. So what are we investing in? What am I talking about? We're talking about selling theta decay optimized option premium. Oh my God, AJ, if you could throw word salad at me, you just did. So let me apologize. Let me break it down. We profit on the time component passing by, and we especially like it when there is an implied volatility, when there's a little bit of uncertainty in the markets, because that boosts our profits even higher. Before I go any further, let me just quiz you to make sure you're on the same page with me, you're taking notes. What minimum returns must you make monthly on your portfolio if you want to mathematically double your money annually? Is it 0.5%, 1.5%, 5%, 6%, 10%? What's your thoughts? I'll just type that into the Q&A and we'll see what you guys say. All right. 6%. Now, if you didn't say 6%, just write this down in your notes. 6% is the answer. 6% is our target. Again, if we do better, great. But 6% is where we want to go. Okay. Now, people hear about equity options. A lot of times people are using them simply as stock replacements. Great. But there's a lot more nuanced in options. In fact, if you talk to mathematicians out there, these are the guys that actually think these things up, right? You can make money with a stock or a commodity or a foreign exchange currency, baseball cards, antique cars, whatever, by buying and then selling at a higher price. So that's one mechanism, right? It's like buy low, sell high. Now in equities and things like that, you can actually short a equity, right? You get yourself a margin account, you could short it. So you can, there's two mechanisms. You can make money if the underlying symbol price goes up or if it goes down. But with options, we can actually make money if it just goes sideways. In fact, not only can you make money with options that way, you can make money on the fact that options are wasting assets. They have an expiration date, so you can make money on time passing by. You can also, options are influenced by whether there is fear or confidence in the market. Fear, uncertainty, confusion, right? And so there's actually 27 different ways with options to profit on any pattern that the market can throw your way. We even have, I'm not going to talk about it today, but we even have a really great pattern for earnings. You know, it doesn't matter for us whether something does better, performs better or worse, or doesn't even change after earnings. There is a predictable pattern, and that is the pattern going into earnings is fear kind of goes up, and then right after earnings, the fear goes down because the fear of the unknown, right? And so you can profit on that, right? Whether it's a combination of different options or even every option, you know, everybody says, well, there's calls and there's puts, but it's way more nuanced than that. Expiration dates and strike prices change how these different options behave. If I use a near term at the money option, it's going to change in price way differently than an option that's deep in the money and far out in time, right? Or an option that's out of the money. So it's really fun. And what I like is, and I was watching my toddler the other day. She has this board with all the different shapes, and then she's got blocks with the shapes, and she was trying to put the circle in the triangle. And so basically what she's doing, and she's recognizing patterns in the board, and then using strategies, finding the tool, the block that fits in the correct place in the board in order to make success happen, right? That's what we're doing here. We identify what are the predictable patterns, and then we use the correct strategy in our tool bag, one of these 27 strategies, in order to make the most profit. So we're not just waiting for up movements or down movements. We're not just a velocity trader. We're looking for the pattern and matching it, right? So I actually think options are the opposite of risky, right? When people talking about options being risky, they're talking about the fact that you can use them as a leverageable stock replacement, which means, yeah, they do really well if the stock goes your way, but if the stock doesn't go your way, you do just as bad, right? It goes real bad. So that's one way to use options. That's not what we're doing. So back up. What is an option, right? It's a financial instrument called a derivative, more word salad, right? They're typically bought and sold to hedge against risk, right? You know that there's some market movers out there, the hedge funds, the mutual funds, the pension funds, some of the big billionaires out there, trillionaire now, there's a couple of trillionaires out there that will change their stock positions, and that will move the market. So they use these options in order to hedge the risk in their positions, right? But what I'm doing is I'm actually selling their option premium to generate my incomes, right? So let me take a break from that for 1 second. How many of you, and I can see over here, and I think, let me look right here. This is for the folks that are in the GoToWebinar interface. I think you have a hand raising button. Raise your hand if you have heard of me before, because I can skip these slides, save us some time, maybe catch us up a little bit. Okay, there's some hands going up, but not many. Okay, my name's AJ Brown. I'll go through these really quick. There's all these different places you can check me out. I've got articles, I've written white papers over the last 2 decades. You can give us a call. In fact, we made a links page that will simplify this whole thing. If you just go to links.tt4.me, all the main links you need to learn about us are right there, right? Links.tt4.me. TT stands for the company I founded and work for, Trading Trainer, right? Links.tt4.me, and you can check us out. But I founded this company called Trading Trainer back in 2003. People think, or they've said I'm the world's most disciplined options trader. I actually think behind my back, they call me the world's most laziest options trader, disciplined, lazy. I think I'm the most efficient one. Again, I like to minimize the amount of time I spend doing this, but still maximize my reward and minimize my loss. So like I said, I really value my free time. I value my time with my little toddler. I value my time trying to run away and join the circus in my early 50s. I've been doing this since 1997. I've been publishing daily insights for my Trading Trainer participants every evening since 2002. Wrote an ebook. If you go to a lot of the successful option traders today and you look on their hard drive, you'll find my ebook. Home study course, you'll find that on people's shelves. But the key is I've been doing this, and I learned back in the late 90s, just like you did. We didn't have these awesome summits on YouTube like we do now. Instead, we had to go to hotels. Some of you might resonate with that. We had to go spend a Saturday morning or a Saturday afternoon at a hotel. And then Sunday, we would be invited back, but we'd have to pay money to spend all day Sunday. And the next thing you know, you're on an airplane and you're spending like 4 or 5 days somewhere at a destination. And I did that all through 1997. I got a whole bunch of engineering and business degrees. And in the last 15 years, I've really been focusing on my teaching. I actually got a certificate in something called accelerated learning methods. It's just a way of teaching folks that are old like me. It's a lot different than when you're teaching school kids, because we have to learn a little bit differently. The plasticity in our heads is different. So accelerated learning methods is something that I've been getting into, because I like to be able to convey what I know to others, right? Now, when I first started, not only did I spend $27,000 going to all these hotel seminars, I also spent $85,000, which, if you calculate that up, that's more than I spent on my undergrad and graduate engineering degrees from University of Virginia and University of Arizona, respectively. But I figured, I was working at Hewlett Packard. I was living with a bunch of guys. I mean, it's not now like having little kids and a family and a few houses that I bounce around. I didn't have anything. I didn't have any expenses. So what a better time to learn, right? So I wound up doing a lot of stupid investments, kind of trial and error. I don't recommend that, by the way. Let me take notes here. This is what I learned. This is on a tangent. How to be a successful investor. Number one, stop chasing shiny objects. Think about what is working with your lifestyle and then learn it well. So don't think about, definitely don't just focus on the rewards that they flash in front of your eyes. What you want to think about is, hey, I'm somebody who can't be in front of the screen all day, so I need to be an end of day trader. Or I take extended trips, so I have to be able to be away from the markets. I might not have access for a week. Or I'm somebody who has a lot of free time and nothing better to do, so I'm going to be focused on whatever it is. Find the investing process. It doesn't have to be options, end of day options trading like me. It could be whatever, but find it, learn it, stick with it, be consistent. Number 2, find a mentor who is currently doing what you want to be doing and also knows how to teach. Because I got to tell you, from my experience, I hired a whole bunch of folks where they were showing me their portfolio. They knew how to do what I wanted to do, but man, they could not talk to me. They couldn't teach me in the way I needed to learn to convey what they were doing, and that was like worthless, right? I don't learn just by, like, you know, watching somebody's portfolio change. It's called learning from guided discovery versus trial and error. Trial and error, I'm proof. It takes, like, you know, 8 years of hitting your head against the wall to figure it out. Guided discovery can be done in a matter of weeks and months, right? So you want to do guided discovery, cheaper and faster. Join an investment group. That's where, and I'm going to tell you, look over other people's shoulders and let them look over your shoulders. One thing I learned at Hewlett Packard was we would buy, you know, when Epson or Canon, one of those other competitors, would create a printer, we would buy it, take it apart, find something we could incrementally improve on, do that, slap our name on it, and we'd have the new printer, right? It's called leveraging with pride. And I don't know why they teach school kids not to, you know, look over each other's shoulders, that it's against the rules, because that's how life is. If we didn't leverage with pride through the generations, we wouldn't grow, right? So I want you to join an investment group. And if somebody in that group finds an amazing underlying symbol to trade options against, I want you to do that too. And if you find one, I want you to share it with the group, right? Leverage with pride. And finally, surround yourself with like-minded investors, because I was surrounded by folks who told me I was insane, that I should continue, you know, pursuing the corporate ladder at Hewlett Packard and going off and letting my money work for me was a fool's errand. Now, of course, they're still working at Hewlett Packard in their 60s and 70s, you know, and unhappy, and I'm very happy. So just surround yourself with people who will not only celebrate with you when you have good trades, but will also pick you up when you don't, because you will. Sometimes that's the name of the game. So I hope you took some notes there on that, because this is exactly what I did when I first you know, it took me a few years of not being successful. I didn't really turn a profit in my trading until 4 years after I started doing it. I had losing year after losing year. I don't recommend that to anybody. Also, last but not least about me, I started a foundation. I take historically underserved inner city kids off the street. I teach them how to invest. 2003 was my first year. You can see those first 9 kids up there. They're all grown up. One of them's teaching at Denver University. I gave them, back in 2003, each $2,000 of my own dollars, thinking I'd never see it again, and every single one of them paid me back. We've been doing this every year. We've actually moved it. This was in a suburb of Denver. We've moved it to south side of Chicago, where we've partnered with the CBOE, and we've, besides a couple of years of from COVID that we took off, we're back at it, and we graduated over 130 folks last year. How do we sell premium? All right, back to the content. 4 simple transactions. Number 1, write covered calls. Number 2, write covered puts. Now, a lot of people have heard of or have done covered calls, but very few people are familiar with covered puts. That's just flipping the covered call upside down. There's also replacing the underlying symbol in the covered call. I call it supercharging your covered call with a option, right? And the nerds out there like me will call that a bull call diagonal debit spread. I shouldn't say nerds. I should say the academicians like me will call that a bull call diagonal debit spread, but it's a covered call on steroids, right? And writing covered puts against leaps is also a viable solution. That's bear put diagonal debit spreads for you academicians out there. Now, write down those 4 strategies And then I want you to label number 1, 3, and 4 as cash trades, right? Those are ones you could do with a cash account, and most of our retirement accounts here and in Canada with your RRSPs, or here with our IRAs, Roth IRAs are the best. You can do these type of transactions in those accounts. This other one, the covered puts, it does require a margin account, so it would be a retail account. But what's nice, if you do want to do, you know, take advantage of the patterns that work with this guy, right? This guy down here is your answer. It will give you a, not a synthetic version, but it'll give you a version that is the same piece. So the writing covered calls against leaps, cash trade, and then Bob's your uncle. So I keep mentioning this word option premium. What is that? Well, options, when you look at their prices going up and down, just like stocks and futures and commodities and foreign exchange currencies, when you look at their price going up, down, realize that that price has two components. One of them is called the in the money value. If you're an academician, you know that as your intrinsic value. And the other component is your premium value or extrinsic value. Some people call it the time value. That there's so much more into the premium value than time. So I shy away from that, but you'll hear it called time value. So just to drive that home, an option price always has these two components, the in the money value plus the premium value. So what I'm focusing on is selling that premium value. So yesterday evening, when the markets closed, I took a minute and put together this slide. If I was to have bought Ford at last night's closing price, I would have paid $11.10 per share. And then if I went around and immediately sold the Ford December 20th, so this thing's expiring this upcoming December 20th, $11 call, I would create for myself an instant dividend of $49. So why $49? It's because options are sold in lots of 100s. So every time I sell a contract, you move the decimal point over twice, and that's the amount of money. So it's not a dividend per se, like when a company gives out a dividend, but I look at it in my economics as an instant dividend. It also creates a discount against my break-even price. So instead of $11.10, it's whatever 11.10 minus 49 cents is. That's a discount for the underlying security. And now realize that expiration date, it acts as a little timer, right? And it's like a coupon, right? You know how when, you know, the neighborhood scout comes by and sells you that book of coupons, and then if you don't use them, right, they expire, then you don't get the money off. So kind of what I've done here is I've sold a coupon. It's got an expiration date, and if the buyer of the coupon doesn't use it, it's like a way of me making money as a store owner, and I got visibility. So that's kind of 3 different ways that you can look at this. So let's run through some scenarios. What happens on December 20th if Ford is trading above $11? Well, I spent $11.10 a share. I'd get exercise. I'd only get $11, so I'd have a 10-cent loss. But don't you guys remember that I made 49 cents up front? So I'd wind up walking away with 39 cents of profit. That's a 3.7% ROI for just doing those 2 transactions last night and just letting time go by, tick tock, tick tock. But now what if Ford is flat? It stays and it's a little bit below $11 on December 20th. So I keep the 49 cents because that option expires worthless, and I keep the stock. And so I made 4.6% ROI so far, and I'm going to do it again and again. And this is actually my ideal case. I look for stocks like this, and I use indicators in my charting package to, as it's going sideways choppy, to try to buy and sell the options on different dates in order to like optimize this, right? But this was if I did it all at the same time, a traditional covered call. So great. And I like to be able to do it again and again, because that means I own the stock and it just becomes this income machine for me. Now, what about if Ford goes down by December 20th? All right. Well, I paid $11.10 for Ford. got the 49 cents. Now I'm going to show you in a couple moments how I'm going to reduce my risk on reward even further. But built into this covered call writing strategy, I've already, because I've reduced my break-even price, I've created this profit buffer. In other words, Ford stock has to go all the way down below $10.61 for me to get into the red. So I've built this profit buffer as well. So that's a fourth way you can look at these strategies. Now, before I go on, I want to show you real trades because that was theoretical. I just pulled those prices from last. So I've got my little trade log up here. And I actually am going to show you the trades we did on Ford. So, hey, back January of this year, I bought 900 shares of Ford, so a little bit over $10,000. And then, like we said, every month, I sold my premium and it expired worthless. 23 cents, 80 cents, 35 cents, 45 cents, 26 cents. And then I finally got exercised, which means the trade ended. And as you can see, during that time, I wound up pulling out 37.1% for that whole trade. How many transactions, what effort did I have to put in? Well, on January 29th, I had to buy the initial symbol, February 16th, April 9th, April 26th. So I had to do 5 trades between January and July, and I wound up making 37.1% ROI. But it doesn't end there because I went right back into Ford in August. I bought this time 1,000 shares, and I'm currently in a position. So I sold premium for 37 cents on August 28th. And by the way, these yellow dates, that just happened. That's when the option expires. I don't do anything, right? That just all happens automatically. The option just goes away. And then I sold some premium on October 22nd for 32 cents. And it looks like in 2 days, when that option expires, it's going to be worthless again. And I just put in here what Ford was trading at on November 12th last night. It was trading 11.10. So if I was to cash this out right now, 18.5%, right? But I'm not going to. I'm going to keep selling premium until I get exercised out. But that's kind of how these trades work. A lot, not very much effort at all. All right, let's keep going. So I like to ask some proficiency, make sure you were paying attention. Answer all that apply. What does investing by selling premium create? An instant dividend, a discount on the security, a profit buffer? Does it act like an expiring coupon? And notice I said answer all that apply. What do you think? And sorry, Craig, I'm on a time limit. I see that you're saying, hey, man, you're going a little bit too fast, but I want to get a lot of information. So bookmark the replay, right? That's one of the cool things Jeff's doing here is making replays. So the answer to this question is all of them. Okay, now I'm going to start asking questions that are even more kind of forward facing. How can we lower our investment, increase our returns, and even convert a margin account trade into a cash account trade? Should we sell out in time options? Should we replace the security with options trading at parity? Give up and buy mutual funds, or is what I'm talking about not even possible? So the answer, I'm just speeding up because I want to make sure I finish on time. I want to replace the security with options trading at parity, right? That way, it acts like my covering position, right? But it's cheaper, right? What are options trading at parity? Well, option premium, that stuff that we sell, is the most when an option is at the money. But when we go really deep in the money, the option premium decays away. We target less than 5%. And it leaves us with this intrinsic or in the money component, which is the real component, like what the option is worth at expiration. In other words, it acts like the stock, right? A deep in the money option behaves exactly like the underlying security. And if the underlying security goes up $1, So does this deep in the money option, but it's at a much cheaper price. And now you're saying, well, okay, if you substitute that back month option, it comes with an expiration date. How far out should I go? Well, we have found that our program participants, when times are, giving us sideways choppy movements, they last about five months, right? These trades go for about 5 months before being exercised. And we've seen that that bell curve is a little bit on the flat side. It could go as much as 8 months or be as little as 2 months, right? So to take care of most of the extremes, we go out far enough in time so we can collect those premiums and have this thing expire organically and not, have to end prematurely. And that magic number is at least 8 months out. Now, we do like to focus on leaps because they have some liquidity. So a lot of times you'll see my program participants already focusing on using the January 2026 leap because it's got trading on it already. It's been available for a while, but that's kind of the thought process on expiration date. So let's go through an example. So I used Ford. We could substitute that $11.10 Ford stock with a $3.33 Ford option that expires in June. Now, that's not the leap, but Ford already has a lot of people trading their options. So the June one works. The $8 call. Now, this has the tiniest bit more premium than 5%. We would have preferred to get less than 5%. It's at 6.9%, but it's a good substitute anyway. So let's run through the scenario. So instead of paying $11.10, we buy this back month option for $3.33. And then we sell the same front month option, 49-cent, the same one as the last example. Get that instant dividend of $49. We reduce the break-even price. We get that discount on that initial back month option. All of the above. It acts like an expiring coupon. If Ford closes above $11 on December 20th, great. We get exercised, and this is called a spread because you make the difference between the two strike prices, $11 and $8. So you make $3. That's a 33-cent loss. But don't forget, I made 49 cents up front, 16-cent total profit on only $3.33 initial investment, 5.6% ROI. But remember, we like it when it goes sideways, when we get to do it multiple times. If it goes sideways, I keep the 49 cents and I keep that back month option. I've made 17.3% ROI so far, and I'm going to do it again and again. And of course, if we go down, we have that built-in profit buffer. Our break-even price goes all the way down to $2.84. Now, before I talk about this, let me bring over, I want to show you my real-life trade. I see my time is ticking down. I did this on AT&T. I started in November of last year, and then same thing like I did with Ford, but this time instead of buying the AT&T stock, I bought this substitute option for only $6.05. I sold 1, 2, 3, 4, 5 premiums before getting exercised out and walked away with 73.7% ROI for just that little bit amount, doing one trade last year in November, about a year ago, and then doing one in December, then January, February, March, June. And then, of course, I jumped right back in. In September, I jumped right back in. I sold premium on October 3rd, October 31st, and I'm waiting. Already, I've got 45% logged in if I was to liquidate this position. I'm not going to liquidate the position. I'm just going to keep selling premium because I like those monthly incomes that come into my account. Pretty neat, all day and all night. In fact, remember, if we focus on that 6%, we double every year. Last part of my presentation. how can we drastically reduce our risk on return? Should we be cutting all of our numbers in half? Should we sell farther out in time options? What about if I focus on collaring these investments by marrying protective options, or is what I'm talking about not even possible? What do you think? Let's collar it. Let's buy some protective options every time we sell premium. So this is where I'm actually going to show you a trade that I did. This is a textbook trade, and I just want you to look. So here's what we did. We purchased some stock, and then every time we sold our premium, our near-term at-the-money options, we also bought a protective option, the opposite option, 3 to 6 months out. So you can see here, I sold premium $1.76, and then I bought protection on the same exact day. The day that I sell premium is the day I buy protection, $4.75. That premium expired worthless, and then check this out. As soon as the premium's not there, I roll the protective option to the next. I know it sounds complicated, but it winds up being just one extra day of transactions. And because of the way I bought that protective option, it now adds as an additional source of income to the trade. That's a lot different than a lot of folks. A lot of folks who buy protective options, who hedge their trades, they're actually buying that at a loss to the economics. What we do is we purchase them when we sell our premium, when you need it most, and then when we roll it out, when we don't need it anymore, we sell it at a profit. So not only does it protect us, but it also is something you can sell later at a higher price. So you see, I made $1.76 on selling the premium, and then I made $1.15, like frosting on the cake, by rolling out the protective option. The next month, I made $1.47 on the premium. I made 61 cents per share by rolling out the protective option. I did it again, $1.50. This time, the actual protective option kicked in. I bought it for $1.20. I sold it for $3.07. Rinse and repeat. You just keep collaring it every time the underlying symbol gives you the indicator, whether you're using Metastock or whatever your trading platform. Does that make sense? What's really neat is look at the protective option. So the protective option kicks in at $34. And now look at my break-even price. Where was it? It was right here where my break-even price was below my protective option strike price. Now, what does that mean? What if you have an insurance policy on something you own that is worth more than the price of the thing you own? That's kind of cool, right? What is that called? By the way, that trade is charted right here. So break-even price, that's that zero line. Average time premium selling investments last 5 months. If you get exercised, you make 65% ROI. If the underlying goes against you, you still make 50% ROI. See, a lot of people say, well, what if the symbol goes against you? See, what I'm worrying on is the clock, right? So long as the clock ticks by, it doesn't matter if the underlying symbol goes for me or against me, because whether I make 65% ROI or 50% ROI, I mean, each one of those is absolutely fantastic. My key is, and this is where the trade became break even, it was between month 1 and month 2. So I just had to hold the position for 3 weeks, and then the trade is now risk-free, right? What do we have when our break-even price is less than our protective bailout price? A risk-free investment. So basically, we've got a system here where we place a trade, and then about once every month, we put on our premium trade and we put on our protective option trade. The premium trade expires. In fact, here's the 3 steps. Buy or short an underlying security, or buy a substitute option trading at parity. That's number 1. Number 2, sell a near-term at-the-money option for its premium value get that instant dividend and create that profit buffer. Number 3, we're going to collar with a married option that is 3 to 6 months out in expiration, and that protects our investment. Rinse and repeat steps 2 and steps 3 every month. And here's where your charting package comes in major handy, right? When you find these boring, sideways, choppy stocks, which by the way, that's, if you look at a majority, you know, we have screeners that can help us find those, but a majority of the symbols, this is what they do for most of their time. It's usually the unusual thing where they pop up or pop down. Most stocks you look at, if you had a watch list, are going sideways choppy. So we like to, when it comes to covered calls or covered calls on steroids, we try to buy it when it's at the bottom of the channel, put in our bailout. Then we, at the top of the channel, look to sell our call option, buy our protective put option. The call option expires at the next expiration date, and we roll out of our put option, rinse and repeat, rinse and repeat. And we didn't talk today about the covered puts, but it's the same thing, only it's at the opposite sides of the pattern. So you start the trade at the top of a sideways choppy channel, sell your put at the bottom, buy your protective call, put expires worthless, roll out a protective call, rinse and repeat, rinse and repeat. So those 4 strategies get you through everything, no matter what timing. You don't even have to often wait very long. So now my question is if that was all interesting, if I intrigued you, especially with the lack of effort you have to put into it. I mean, it seems like it's complicated, but you saw my trades. They're like over the period of a year. And you just do, like, you come into the market 1 day a month and you do a little adjustment here, a little adjustment there, and you just create these income streams. How would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, have support whenever you need it? Because that's really what it's all about, right? It's all about saving time, creating clarity, and getting lots of results. So is it okay if I just take 2 minutes to tell you a little bit about my materials, my training, my tools, see if they're right for you? Thanks. It's for someone who doesn't want to get a bunch of multiple data subscriptions, wants everything they need in one place, doesn't want to miss any opportunities, wants to spend more time doing other things, definitely doesn't want to be alone, wants some step-by-step instructions. Basically, it's someone who wants to get consistent and reliable results. Is that you? Because if so, let me show you what we've got. I've got a website. This is, you'll get access to this web portal, right? And we've got all these different components in the web portal. You can see in our little pull-down menu. We've got Learning Center and lots of trading tools, and we have bonus trading tools as well. I've got video tutorials that take you through this whole process. We have monthly lecture series, and their replays go all the way back to when I started this program in 2010. And they're all searchable by keywords, so you can find whatever video you need if you needed to go back and learn something that we've covered before. We have all the screeners that help us find these sideways moving symbols that are best to do this strategy on. I give you a bunch of planning tools so that you can actually have your trading plan created for you. We have these cool AI tools where you plug in a couple of values and it tells you when and where and what signal to look for. Weekly live workshops. A lot of people love this part, right? Because they come every Thursday is when we have these. And folks will give me the candidates that they're looking at through the chat. And we'll look at all of them. We'll pick one of them, usually the lowest hanging fruit, the one we can easily trade. We'll set it up. And folks come and I say, hey, why are you with us so many years later? Haven't you learned how to do this? And they're like, Yeah, but every Thursday you give us another candidate along with the trade plan in order to do this. Why would I give that up? It's so inexpensive, and you give us a trade every Thursday, and it sets us up for the next 5 to 6 months. That was an aha moment for me, right? And then we have something called trade review. So if you have your own trade, we have a way for you to send us all the details. We'll review it for you and make sure you're on the same page to create these income streams out of this trade. And if you're missing something, we'll point it out. It'll raise your odds of being successful. We do trade reviews, right? Look over your shoulder. So what is that all worth to you? Well, I also have, for the folks on this summit today, a double your money back guarantee, right? Try this program for 6 months. That's how long my underserved kids go through that program, is 6 months. Do it for 6 months. If you're not profiting at the end of 6 months, then of course I will not only give you your money back that you spend on this program, but I'll double it, because that's how sure I am you can do this. I don't think it's going to take you 6 months to learn it, but I want you to learn it in like the first couple of weeks. And then I want you to use my trade reviews and use, the workshops to learn some trades. Do it for yourself and prove that it works. And also I'll give you a session with one of my coaches. This is the bonus for being part of today's summit. So add those in. And what is this all worth to you? Because if you go on our website, you'll see a 6-month program with no other fees. I'm not going to charge you. It's not a subscription. It's $600, $597, because we don't like round numbers apparently. And for today and only today, I'm taking $100 off. So the price today is $497 for a 6-month program. So the link is optioninvesting.org/Metastock. And let's just test it really quick, because sometimes my programmers don't get my memo. So if you go to our order form there at optioninvesting.org/Metastock, you have to put this promo code in, 100, capital D, capital I, capital S, capital C. That stands for discount, 100 disc, all one word. Yes, they did do it. It just reduced the price to $497. So if you're having any troubles getting that discount, you can call us, 970-266-8146. Again, optioninvesting.org/Metastock. And the promo code is 100DISC. If you've got your mobile phone, you can just scan the screen, because that QR code will take you right there. And I hope to see some of you wanting to learn some premium selling. Are you out there, Jeff?
No. Good job, AJ. I put that in the chat. We're getting it into the YouTube chat as well. Thank you very much for coming and spending some time with us.
Absolutely. Thank you.
Cool. Let's see. All right. Optioninvesting.org/Metastock will get you there. Promo code 100 discount. So there you go. Let me go ahead and kind of do this. We'll go ahead and kind of just move things around right now, and we'll make me the presenter. Oh, I need to go back. Hold on just a second. Let me go ahead and share my screen. But let's go back a little bit. I was going through and making sure that I was ready for mine. So let me go ahead and turn on my camera. That's a really good question, Craig. And unfortunately, we just missed AJ. So I would recommend that you go in and kind of talk to him. Like you could give him a call and ask him what he would recommend in terms of capital to start. I do want to just kind of see here. It should be actually kind of zooming in a little bit for me.
What's the matter, Jeff? You look fine.
I'm just trying to get a little closer. There you go. All right.
Nothing wrong with more Jeff.
All right. Yeah. Oh, well, we can get too close. That's for sure. Anyway, while we get started, I do want to encourage you to come join our trading community. This is a partner site. It's not technically Metastock. It's a different company, but we're up there all the time talking about markets, doing lessons on different indicators. There's a bunch of white papers up there that talk about different stuff. A dynamic market chat where people kind of go up and share ideas, things that they might be interested in. It's designed to be a community of traders helping traders. We've been growing it out. It's a new venture for us, and we want to see you there. www.thetradersforum.com. Greg's a member of the Traders Forum. Am I right?
You know I am.
All right, cool. So the trade www. Oh, this is going to be a long hour, Greg.
Yeah, are you the next presenter, Jeff? Do you need to excuse yourself and do some warm up?
Yeah, maybe I should. I'm going to practice my enunciation skills. Maybe we could go through some drills real quick. So before I start, though, let's do some prizes. I've got one ready and lined up. If you're watching us on YouTube, we did have a question from YouTube. I don't remember the gentleman that asked it, but he's like, do I have to register for every day? Or can I just register once? Once you're registered, you're good. So if you're watching us on YouTube and you want to be eligible to win a prize, go to YouTube, just go to metastock.com, click on the banner at the top, or click on the pinned link at the top of the comments, which is probably over here for you. So do that, and that way you can kind of be eligible to win all the prizes. We're going to give away as many prizes as possible between now and the end of the thing. So let's go ahead and do one of those, Mr. Lewis.
All right.
The first prize we're going to give away, Mark Leibovit is actually speaking, I think, a little bit later today.
Yes.
He's going to come in and talk about like his volume reversal strategies that he uses for the markets, and he's a top market timer. The prize that we're giving away is 1 month subscription to his VR newsletter, and the value of that is, it always gets hidden underneath everything. I think it's around $5.97 for the access to it. He does a bunch of newsletters where he talks about things that he likes. They're very good newsletters that you'll get access to. He's an actual, according to Timers Digest and the research that they do, one of the top market timers. In fact, I think he won the 10-year top market timer for gold. So he'll be speaking a little bit later. We're going to give away a subscription to his newsletter right now. So, and Greg,
yes,
give me one of those numbers. I need it anywhere between 1 and 9775.
Okay, according to the Google random number generator, it is 6601.
Oh, okay. This one,
6,601.
we're going to a lot of international winners today. This one is a winner in Hong Kong. Partev B with a Netvicator account. A Netvicator email account. So that sounds like you. You're probably not watching live, I would assume, just because of the time zone differences. But if you are, say hi. And you're the winner. So congratulations to that.
Congratulations.
All right. We're going to talk a little bit about Metastock. Greg, I think you wanted to introduce me, and I'm really interested to hear that.
You should never have to go into a presentation by yourself without anybody to introduce you.
I love talking about me, though. It's one of my favorite topics.
Oh, okay. Well, let's see. I'll introduce you, and if you think there's something I've missed, you go right ahead. Jeff, I'm going to just read your actual description that I wrote some time ago. Jeff Gibby, working for Metastock for over 25 years. He is currently in charge of our sales and business development teams and works to create new Metastock distributors and partners worldwide. Among his responsibilities are the management of new products and services for Metastock and creating strategic partnerships. Mr. Gibby works with training companies to help people learn the power of Metastock. He has spoken to traders worldwide and has trained groups large and small on how to use software in various markets. And what I will add to that is he's a great lover of dogs, children, and he's just a genuine swell guy who I've known now for 19 years, if you can believe that, Jeff.
I can believe that, yeah. It feels like 26.
Did I miss it? I know now, I don't think you're into circus acrobatics, but
No.
But I know you're into fitness and and other things. But I'm sure you can take it from here, Jeff. Break a leg.
Thank you very much, Mr. Lewis.
Mm-hmm.
Let me read this out loud to you too. It makes our lawyers happy. Today's demonstration is designed to instruct you on using Metastock, the accompanying software plugins, and it is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So there you go. I want to say a couple things as we kind of get started. We'll go over to a different slide. I want to say thank you, and now let me get off the prize slide. Every time you kind of see me glancing in this direction, I'm just seeing if there's questions. So if I'm looking over here, it's generally just I want to see if you have questions for me. Okay. I want to say thank you to all of the sponsors that we've had that have put this event together, the speakers, and especially you for watching the event. It's a big event. I hope you're enjoying it. We put a lot of time into it, and the goal for me has always been to kind of help you get some information about the marketplaces. There's so many different ways to look at the markets and to kind of get information about the markets. And, you know, I hope this has been good for you. In fact, if you've been here for a while and you've watched some of the guests, I would like to know who your favorite presenter was. So if you could type that in the comments, I'd love to kind of hear that. If you had a presenter that particularly stuck out for you, somebody maybe that you learned something from, let me know in like either the YouTube chat or the Metastock chat. So as Greg said, my name is Jeff Gibby. I've worked at Metastock. I just checked and I did some math. I started, and right now I'm 24 years. No, that wasn't right. Because let's see. Well, I don't have the calculator up right now. I think it's actually closer to 26 years right now. So in any case, I remember I had kind of come back. I've gone off and I actually did a little bit of a stint for the Army. I was counting pills for the Army Reserve, and I kind of came back. I was going through college. I got a call from one of my friends who said, you know, I work for this company that's called Metastock, and I'm curious as to if you'd be interested in working for it. It's a very, very cool company. You should come get a job here. And I said, okay, sure, that sounds really good. Thanks, Jen. Let me go ahead and kind of, that's something we'll definitely kind of consider, right? And so that was 27 years ago. And I would say that this is definitely the longest job I've ever had. It's also been a great job because like when I started, I didn't know too much about the markets. I started in inside sales. And so if you had questions, you kind of about how what we could do for you and that kind of stuff, there's a good chance that you'd actually talk to me. And I'd love talking to traders about what they're doing, kind of what their pitfalls were, what they think they could do better. And a lot of what we would do and still do is talk to traders about kind of where they could improve what they're doing. And I did that for like a decade. And the thing I liked about that is like, it really kind of, with Metastock, there's so much that you can do in it that a lot of people would talk to, they just felt like they were picking the wrong securities, or they felt like they didn't have a strategy that was working well, or they didn't feel like they had enough knowledge about the markets to kind of help them succeed. And for that reason, all of those are tools that Metastock does a really, really good job. So I'm gonna try not to be too rambly today, but that's kind of what we would do. We talked about people about their trading. It's been a well-respected company, like 31 years in a row. It's been rated #1. I've said that probably 72 times during the conference already, but it's been also a very, very enjoyable job. After I was done kind of working in sales, I moved over to what we call internally the business development team. And that's where I've kind of picked up a lot of the relationships with the speakers that we've had here. And I'd say that's been a lot of fun because, you know, I've learned a lot of stuff from a lot of people that have had a huge impact on my trading, and a good impact as well. But I've had chances to work with really, really great people in the markets, and I've learned a lot in the role. And that's really kind of what I'm doing now. We kind of organize the conferences, all that kind of stuff. I went off on a bit of a tangent, but I do feel very, very lucky. I feel like we represent a product that helps a lot of people in the trading that they do. One of the things that we're really, really super proud of, well, there's a couple of them. Hopefully you've read this slide because I'm not going to talk about this at all. One of them is that for 31 years in a row, we've been rated #1 in our price category. Another thing that I really like, and I think is a huge advantage when you start talking to Metastock employees, is the people. It's not uncommon. We keep more people in our support desk. Our support desk is right here. That's over on the other side of the office. But we keep more people in our support team than we usually have in sales and marketing put together. And it's not uncommon for people to call into support. And yeah, it happens every day. But it's not uncommon for them to fill out our post-support surveys. It's 100%. In fact, there's weeks and weeks and weeks where we just get 100% satisfaction on those surveys. So those guys do a really, really good job. And I think if you've ever interfaced with anybody, actually at any level of Metastock, I really think the people make the difference. I don't know the last time you called a support desk and were really, really happy with the outcome, but I think it's one of the things that we do really, really well. So from that perspective, Brad Swanson said Vince Vora is his. Not a lot of people answered my question about who their first favorite speaker is yet. Brad said it was Vince Vora. Vince Vora does some really, really great training. Learned a lot from Vince Vora as well. So in any case, all right. So today, I mean, we've had kind of, okay, anyway, I have a question for you. It's a multiple choice. I just want to talk a little bit about this. What is the best profession for trading? Okay, is it A, a teacher, B, a psychologist or a psychiatrist, C, an engineer or mathematician, D, an artist, or okay, go ahead, or E, a pilot. Let's go ahead and just kind of fix that real quick. What do you think is the answer for that? A, B, C, D, or E? And while you're answering that, I'm going to talk a little bit about what I'm going to talk about today, because we're going to kind of come back and talk a lot about different things, different methodologies. On Monday, Scott came in and he talked about the Rahul Mohindra oscillator, and he did a really good job with that. Yesterday, Kelly came in and talked about how scanning works and how system testing works and that kind of stuff. We have a software that's fairly well established. We've been working on it since the 80s. And as I said just a minute ago, it's been rated #1 in its price category for 31 years in a row. What I'm actually going to do is kind of take a little bit of a step back and show you some of the things in Metastock that I call hidden gems. So it's just when you get to a software that's really, really mature, one of the things I loved about Metastock over the years is it's a toolbox. And that means like it's not something that kind of has been in development for 3 months and they just pushed it out there into the market. At some point we were like that, but it's a toolbox. And I've always felt, right now with Metastock, you can pay $75 a month and get access to it. I've always felt that the more you grow as a trader, the more Metastock would grow with you. So in other words, if you had different methodologies that you wanted to test and that kind of stuff. And unlike some other softwares that might be a lot more expensive, they just don't have the depth of history. And the fact that we've been adding things for years and years and years, what I want to do is kind of highlight a few of those things that I think are going to be the best, or some things that maybe you didn't know about that are going to help you find stocks that are maybe breaking out. Or maybe I'm going to show you also the Haguro methodology, which is a methodology that I'm not really going to talk a lot about, but I think it's really, really a fascinating methodology. So we're going to shine a light in some of those areas that we don't talk about so much, just because they kind of get forgotten with all the stuff you can do. So normally I will say the first thing I usually talk about is RMO. But Scott already talked about that a little bit. Rahul talked about that a little bit. So I'm going to kind of focus in some other areas because there's a lot of stuff we can talk about when it comes to trading. So let's see here. Neil says Daniel Sinig did a really good job. So Metastock, Greg says it's very hard to choose, but I always enjoy Martha Stokes. Yeah, it is hard to choose. There are so many great speakers here. So in terms of the answers that you had, Michael says artist. Craig says A, which is teacher. John says pilot. Verde V says A and B. And then John says pilots because they follow the plan and a checklist. So I actually, as you know, there's actually quite a few people that we've actually talked to over the course of this week that are kind of fit a lot of these categories already. Wendy Kirkland was an artist, and then because of the flood that she had, she ended up going into trading and does a really, really good job with it. Some really good psychologists, and I think should be required reading. There's a Dr. Alexander Elder. He was a psychologist, a clinical psychologist, has a really, really cool backstory. The required reading part of that is I think everybody should read his book, Come Into My Trading Room. Just a very, very talented, very good trader. And his book is really good. Psychiatrist also, Jake Bernstein. Jake Bernstein's going to talk tomorrow, and he's going to talk about kind of how his JBXC system tomorrow. But a very, very fascinating person with a big backstory, and also a psychiatrist. So I don't necessarily think that there's a bad answer here. The correct answer, though, is an airline pilot. So, and there's actually been a couple of airline pilots that we work with a lot. Chuck Hughes was actually an airline pilot. Greg Morris, who's retired now, he comes into the office and we love him. He was literally a Top Gun and ended up managing $19 billion or something like that through stadium money management. But pilot is kind of the answer that we were looking for. So, and for the exact same reason that you said, King says W. Okay. Pilots have a plan, they follow a checklist, they use a lot of discipline in trading. We're not really gonna, and I do think Metastock does help you be more disciplined in general. I just wanted to kind of put up a question that you guys could interact with. Discipline is important in the market. One of the things that, never mind, I can't. Let's see, it was one of the trading turtles, Dennis. Anyway, he said, you could teach most of my rules to people and they wouldn't follow them because they didn't have discipline. Discipline is so important when you're actually trading. And I'd encourage you, regardless of what tools you use, regardless of what platform you use, regardless of anything, to have discipline in your trading. You know, there's some core things that I'll just talk about for a second, and then we'll kind of get into what I'm going to talk about. I think when you're trading, if you're introducing something new, you should paper trade with it. Okay, I think you should always know when you buy a stock for what reason you're going to sell the stock. You can really manage risk and reward. You should have a good stop loss strategy. I think position sizing is critical in terms of what you're doing, and I think it's something that's very, very important. Robert Deal, the late Robert Deal, we always would go traveling with him, and you talk about how there's old traders and that there's bold traders, but you don't see a lot of old, bold traders. Discipline is very, very important. So going back, though, to what we were talking about with the turtle traders, if you're not familiar with that story, it's kind of a fascinating story. There was, oh, shoot, why can I not pull? I should have actually kind of pulled their information. It was Bill Eckhart and, oh, shoot, Richard Dennis. Richard Dennis and Bill Eckhart, they did a strategy, or they basically did a kind of an experiment where they decided, hey, we're going to pull in a bunch of traders that were famous futures traders. I think it was Bill Dennis or Richard Dennis. It was actually called Prince of the Pit. They're famous futures traders. They did an experiment where they brought in a bunch of traders and they taught them how to trade. And one of the things that they actually kind of taught people how to do was very, very similar to like a breakout strategy. I'm not going to talk about the turtle trading method. Kevin Nelson is going to come in and talk about it Friday. But one of the things that they're looking at is looking for stocks that are breaking out. One of the things that Vince talked a little bit about earlier in the week, yesterday, is he talked about finding stocks that have kind of reached all-time highs. And one of the things that is a lot of time people like to look for trend line breakouts or things that are breaking through support and resistance and that kind of stuff. So the first tool that I want to highlight for you when we start to talk about the charts, and I just have a chart of, what are we looking at, SPY here. One of the first things I want to show you is how to find stocks that are breaking out. Now, when I talk about breakouts, it could be a break above resistance or a breakdown below support. It could be above a trend line or below a trend line. And I just want to show you kind of from a programmatic perspective how that can work. Okay, a lot of people talk a lot about, okay, well, when you kind of break through support or you break through resistance, that's the best time to kind of buy, because that resistance is going to become support if you're buying. Right? And so how do you find stocks structurally that are kind of breaking through support, breaking through resistance, breaking up above a trend line, down through a trend line? How do you do that? And one of the tools that we have in Metastock is called the dynamic trading tools. I'm just going to show you that. We've got the chart of the SPY. This is a template that I actually put together because it didn't have a template, but it'll actually put those drawing tools on a chart for you. And so if you've got Metastock, you've got a chart open, you want to look at kind of where support and resistance are, what you can do is just right click on the chart. I'm going to go to apply template right here. And I'm going to look for dynamic trading tools. Okay, see it right here. I'm going to go ahead and apply that to the chart. This is going to open up a new chart for me. And I'm going to go ahead and kind of make these lines a little bit bigger because they're a little bit hard to see on the internet, but I just want you to kind of see where things are. So let me just go in and thicken the lines. Anytime I want to change anything in Metastock, the easiest way to do that is to double click on the line. And it's actually determining there's two lines there. And I'm just going to kind of go in and just change it so that you can see the lines a lot clearer. Okay. And just bear with me for a second when we do it. And I'll talk about what these lines are too, and just kind of illustrate what we actually are looking for. And I think it would also be appropriate if I kind of took a little bit of a longer term view on the line, on the chart. So we'll kind of go back out a little bit so you can see where these move, okay? And I've got them all thickened. And what I'm going to do that, I'm just going to save this real quick so I don't have to do that next time I show this. So let me save this template. I'll do it later. All right. So if you can see here, right here, you've got kind of these vertical lines. This right here is kind of pointing out shorter term resistance. So we're looking at the S&P 500 right here, kind of banged up above this level, kind of went down to where it's kind of finding this trend line, and it's just recently broken above that resistance level. Maybe like I'm going to say, what day was this? In 9/18, okay, September 18th. Okay, this is automatically drawn on here as long as you just apply the template. When it finds these shorter or longer term resistance areas, it's going to actually kind of automatically label them. So if you've ever kind of said, okay, well, where is the support and resistance? This will draw them for you. Okay, I might not agree with it. That's okay, but it does a pretty good job in my opinion. Right here, you kind of see this upward sloping line. If it sees an upward trend line, you can kind of see kind of where it's drawing a trend line from this point to this point. If it ever detects an upward or a downward trend line, it's going to actually draw that on the chart for you. And you can see right here where it kind of came down, bounced off that line. Okay. Here, you've got a little bit of a shorter term. So right here, this is where resistance was before it set this new resistance level. And that's how it kind of moves around. When it sees longer term support and resistance, that's when you're going to get the longer, kind of bigger, more dynamic bars. So that's all it is. It's just going to draw the support and resistance levels on there for you and the trend lines. You can apply that to any chart. But the nice thing about that is if I want to look for stocks that have broken out above a trend line, down below a trend line, up above resistance, down below support, all of those things are something I can easily do because since these are kind of programmed, we can actually use the scanning tool in Metastock to help us find when stocks broke out. So I'm going to show you how that works. We'll do a small scan, not a huge one, just we want to kind of be able to kind of, there's a few other things that I want to talk about. And I need to talk faster if I'm going to get through it all. So let me go ahead and just show you how this works. I'm going to come in here to the scanner. Okay, we call it the Explorer in Metastock. I'm going to come in here and I'll just search for I'm going to actually unselect the scan that I normally run. We're going to go down to DT, and I'm going to do, these are the different scans that you can run. So there's support and resistance long-term, there's support and resistance short-term, and then trendline breakouts. This would be either long-term or short-time. And this would include breakups or breakdowns. So if it's an uptrend line or a downtrend line. So for the purposes of being illustrative, I'm just going to select the longer term. And what I want to do is I want to go find any stocks that have broken up through resistance or down through support, okay, on a long term. So broken through one of these major levels, okay. In terms of scanning, of course, like with all the data that we get with Reuters, you can scan anything you want. So if I come down here, I'm going to come down to index constituents right here. I'm going to scan the Dow Jones 30. I'm going to scan the S&P 500 and the NASDAQ 100, okay. I'm going to start this so that it kind of starts to run. It's going to start over here on this other screen, and I'm going to grab it and pull it over there. Now, I just want to reiterate, we get a lot of customers. I know there's like, I forget the gentleman's name, but there's a few people that are watching from India that have kind of talked about and asked about India. You can run this on Indian stocks. You can run this on European stocks. The data that we get was the data feed that was created by Reuters, Thomson Reuters, and was purchased by the London Stock Exchange Group. And so 300 plus exchanges globally, almost anywhere in the world, whether it's stocks or futures or coins, you can run the tools against anything you want to. So I'm gonna go ahead and maximize this here. Right here, you've just got the name of the company. Out of the stocks that we scanned, there's about 519 of them. It rejected 169 and haven't had a recent enough breakout of support and resistance. And right here is just the list of stocks that kind of met that criteria. So right here, you got the price. This right here represents how many bars ago there was a breakup, okay? And how many bars ago there was a breakdown. So if you say break up, I want to look for stuff that's breaking up through resistance. This right here, this 3M company broke up through resistance 137 bars ago. That was the last time. Now that's a long time ago. That's like, that's almost half a year or more, right? So what I want to do is find stocks that have broken up a little bit more recently than that. And so I'm just going to sort this by the breakup column. The breakdown is the exact same thing, but it's looking at things that have broken down and have fallen through resistance. So let's go ahead and kind of just scroll down a little bit here. And we'll just kind of look at some stuff that have broken up about 5 days ago. There's Prudential Financial, General Dynamics, Vulcan Materials. All of these broke through about 5 days ago. And so if we wanted to look about 5 days or less, obviously there was a bit of a market excitement after the election concluded. A lot of stocks broke up. If we wanted to kind of see stocks that have broke up through resistance within 5 days, instead of looking at about 520 stocks, we'd be looking at, I'm going to guess, maybe 20 stocks, okay? And if I open up this chart, we'll just look at one of them because I think you get intrinsically the idea. What I should get is a chart. I'll go ahead and apply that same template. So I'm going to right click here, go to the Dynamic Trading Tools template. And you can see right here where it kind of popped up above that recent support area. It's doing well since as well. So for me, I've been using Metastock now for 27 years. I've been using it since I started. And there's so much stuff that can kind of help you get started and kind of learn about the markets and stuff like that. But for me, the ability to go in and find stocks that are kind of moving up past into new territory or breaking through resistance areas and support areas, very, very helpful for me. So NIM says B and C. Okay. All right, just looking for some questions. If I miss your question, it's not because I didn't try. All right, let's talk a little bit about something else. I'm going to kind of talk a little bit faster just because of time. And I don't really talk about this one usually because I just talk about RMO, which is a system that I have a huge amount of respect for me. But this is always a pretty fun project. Over the years, I've been involved in a lot of really fun projects. And like I said, I've learned a lot. With this particular project, I was down in Australia for a trade show. This would have been well before Corona. I'd love to go back to Sydney again. It's been a minute. But I remember we were at a trade show about investing. We have a lot of customers that are in Australia, and we had some downtime. And so I was kind of going around and just talking to people that were kind of manning booths, just like I was manning a booth for Metastock that day. And I ran into a guy called Gary, called because his name is Gary Burton. Gary's a good friend of mine now. I love him. And he was doing work with, and he still does work with, the Australian Technical Analysis Association. And if you're in Australia, I'd recommend you join the Australian Technical Analysis Association. It's a great organization. We do a lot of work with them down in Australia. But he, at the time, he was running a lot of courses. He was talking to people about kind of the different methods that he traded and the different methods he liked to trade. I took a big interest in it. I'm like, what are you teaching people? Like, what do you teach? And so he started to talk to me about the Haguro method. And I was like, this sounds really cool. And obviously we're in Australia. I'm like, hey, will you send me kind of some information about kind of like what you teach people? And I'd like to see if we can kind of help automate kind of the process of searching and finding these stocks. And so that's kind of how we ended it. I got back from Australia and he sent me this PowerPoint slide that was, I think, like 600 slides. It was massive, but in that PowerPoint, there was a section that was about the Haguro method that I really, really liked. I could program it, and so we did. So the Haguro method was originally introduced to me, as you just heard, by Gary Burton. It's a method that was created by Seiki Shimizu. And this, if you're wondering what this battleship is, this is actually the Haguro battleship. But also, I guess the Haguros are a fairly sacred mountain range. Sacred might be too strong of a word, but it's a mountain range in Japan. And so this Haguro method is actually created by Seiki Shimizu. It was taught to me by a bunch of slides that Gary Burton sent to me, and we kind of coded it. I was particularly proud of this project because I coded it. I don't really code a lot of projects, but I got this one coded. We offer it for free. It's part of every Metastock install. It has been for a minute, but I remember I got done coding it and I sent it over to the late Dennis Peterson of Stocks and Commodities magazine. I'm like, you should look at this because I think this is really cool. And so after we kind of explained everything to Dennis and we had a lot of phone calls with him and he's had a bunch of questions, he decided not to do one kind of just article on it. He did two. He basically I did an article where he just kind of talked a lot about what the method does. And then he did another article just to talk about the way, how well the actual code was put together that I put together. Now, I'm not a programmer, but I've done a lot of programming. But one of the things that I just took as a huge compliment at the time was like, he's like, it's really well coded, it's well organized and that kind of stuff. And just because I have no coding background, I thought that was cool. So he loved the methodology. He did a couple of reviews in it, and so there you go. I'm going to hurry a little bit more. This is designed for a weekly view of the market, the way Seiki kind of looked at it. It was important to have 5 days and then kind of a 2-day rest period. It's designed to look at weekly charts, okay? The design of it is to kind of give you an idea of where support and resistance based on the Haguro method should be placed. So we're going to talk about support and resistance again. It's designed to kind of give you key turning lines. When he talks about lines, they're candles. They're candles on the chart for all intents and purposes. And it kind of gives you an idea or a fairly accurate idea of what to expect in the following week's movements. So let's kind of go through and we'll just kind of dissect kind of like, this is a lot of, actually even from this PowerPoint, there's a lot of what's in there, and I'm gonna go a little bit faster. When we start to talk about the key areas of support and resistance, when we're talking about the Haguro method, a lot of it has to do with the midpoint. So midpoint is very simple. If you take the high and the low, you add them together, you get the middle. Well, after you divide it by 2. So it's high plus low added, divided by 2, and what you're going to get is the midpoint of the line. Very, very self-explanatory. Here's the midpoint. That's just the middle of that to that, the middle of that to that. Very easy, right? Now, the way that we set the midpoint in the Haguro charts is if the high-low range, the range between the high and the low, is greater this week than it was the previous week, and the week before, that's where the midpoint is set for support and resistance. So let me show you that we'll go back to the S&P chart, and I'll just give you an idea of kind of how that works. So that's the dynamic trading tools one. All right, let me zoom in a little bit here. I'll just grab my little splitter tool here. This right here is the Haguro midpoint. You'll notice it moves, but it doesn't move all the time, okay? When it moves, it means it moved here. That means the range, the difference between the high and the low, was greater than this week, and that's when we set a new midpoint, okay? That midpoint will act as support. So if we're trading it, or resistance, if we're in this area, we expect the price to stay above this area. And if it goes down below this area, we expect it to kind of, we expect it to then act as resistance. So you can kind of see where that comes in here. And that's where we look at the midpoint for support and resistance. Every time we get a new support or resistance level, we're going to draw that on the chart. I want you to notice that every single line here is numbered. There's a 3 here, there's a 9 here, there's a 9 here, there's a 2, there's a 2, there's a 3, 2. There's a whole color coding system that Siki Shimizu actually created that kind of goes through and kind of helps you understand what the forecast is. And here is that, I think I have that graphic right here. Each line is classified. This basically is kind of a diagram of all of the high and low ranges and the different bars that you can have. So right here, 1, 2, 3, 4. This is just looking at the relationship between the open, the close, the high, and the low. And depending on kind of where that falls, it's going to fit into one of these categories. Like this would be a big bullish engulfing. This would be a big bearish engulfing, okay? But all of these lines are classified at 1 through 15. And I've always kind of wondered why he kind of had a different numbering scale, because you've got 1 through 8 here, but then it's 9, it's a little bit more random. I don't know why. They just have different numberings based on kind of like what's going on. So all of these lines have a little bit of a different meaning. So far in the week, we'll talk about significance in just a second. You'll see right here, this is a number 2. This is a number 3, number 3. Number 3s are more like a doji candle. They're a little bit of an indecisive move, and that's kind of what they talk about in the commentary. So all of these scales for all of these numbers are labeled. If I come into our commentary meta, so I can go view expert commentary, and on 3, you'll see right here, well, we shouldn't be looking at this week because we're only like halfway through the week right now, maybe 3/5 of the way through the week, probably closer to half because the market hasn't closed today. Let's look at this number 3 right here. Okay, and what I just wanted to show you, we won't go through all of the 15 definitions just because I need to let Fausto Pugliese come in and talk about level 3. But right here, level 3 is a strong warning of reversal when found in a high price area. When line 3 is found at a high price area, long positions should be closed within a week. Oh, this is a daily chart. I need to actually look at this with a weekly chart. Let me make that correction really quick. So now I'm looking at the weekly chart. This is actually a line 2. Siki did recommend that this be used on a weekly. So last week, if we're looking at last week, this was a line 2. Obviously a very, very different chart than the 3 that we were looking at. The range of the stock has extended more than 10%. For a candle 2, when this is a long line, the midpoint is set for future support for any declining prices. So you see right here where the midpoint moved because it's long, right? Concerning line 2, this appears to the outset of in the market after a fall in prices and a further opening price above the midpoint in the following price movement should occur. So it's saying, okay, we have a long line. What we would anticipate is that we're going to have a positive open, which we did, an open above that midpoint, which we did this week. Okay. Concerning line 2, this appears that, okay, the advice that he has is wait for the next week's price to open above the midpoint of the line. If the price closes below the midpoint of the line, close any long position. So it says you're free to go ahead and go long this week and stay long as you stay above this midpoint. Okay. All of those are kind of going to be classified in terms of different things that you can look at. And they're all pretty well outlined here. The last thing I'm going to talk about is significance, okay? Because it's the only thing that was really terribly objective in kind of what we did. And we could, if we had more time, we could definitely kind of click on, you'll see that right here we had a 2, we had a 3 here. The ones that we're highlighting differently are kind of important ones because they generally can kind of signal the change in momentum. Right here, this 3, for example, that's one of the kind of the key things. And you can actually scan for the 3s. You can also scan to find if it's coming up above the midpoint. And those are kind of easy to run. I've already showed you how to run a scan. The last thing that Siki talked a lot about in kind of the methodology is where you're at in stock price. And you'll notice right here, it says the range of the stock has extended more than 10%. This means that the candle lines are more significant. If you're bound in a trading range and you're not fluctuating more than plus or minus 10%, which is a value that Gary and I assigned to this, it's not going to have the same importance as if you get like a level that happens when the range is extended. So that's one of the things that we did. The important levels to look at, the important things that we've created explorations for was the candle 3, the candle 15. And anytime price goes from down below the Haguro midpoint to up above it, or the other way around. So those are the explorations that you can run in there to find what might be moving for that particular week. So in any case, if you're using Metastock, and you play a little bit with that. We have some videos that are up. We actually had Gary come in and do a video to talk about Haguro, not too recently, not in the recent, like within the last 6 months or so. And he did a really, really good job. I would recommend that you take a look at this. It's a really, really cool way to kind of look at charts and identify support and resistance. And it's just included like so many other things with Metastock. So there you go. I think I might have hurried just a little bit more than I needed to, but that's fine because we have another prize to give away too. So hopefully that was a couple of things that'll be helpful for you if you have been using Metastock for a while. I really like those 2 tools. There's a whole bunch of stuff we could talk about in those. It's just, again, it's a huge toolbox. There's so many different things that you can look at. This should say 31 years. We are very, very proud of the fact that for 31 years in a row, the Metastock software has been rated #1 in its price category for 31 years. I'm just looking to see if I have questions, as I said earlier. Okay. Oh, wow. I thought I had some pricing slides in here, but I do not. So let's just go through it. We have 2 versions of Metastock. So we have the end of day version of Metastock, which is $75 per month. We have the real-time version that's $265 a month. Both of them include all data for the regions that you're interested in. Our end of day includes a region for everywhere in the world. Again, like I said, the market coverage that we get from London Stock Exchange is huge. You'll be able to trade this in Asia, North America, India, whatever you want. So there is a couple core differences between our end of day version and our real-time version. Our end of day version will basically allow you to do all the scanning, but it doesn't have access to any intraday periodicity. So you can look at daily, you can look at weekly, you can look at monthly and longer. With our real-time, you do have the ability to go full real-time. You'll be able to pay for exchanges and get exchange fees. It's also going to include the Metastock Zenith platform. Metastock Zenith has been rated, or actually, Metastock Zenith, just to give you an idea of what that is, was developed by Thomson Reuters and then sold to Blackstone and then sold to London Stock Exchange Group. But it's a really, really good feed. It's one of the most institutional. They developed it. When Thomson Reuters developed, they spent over $1 billion creating it. They developed it as a competitor to Bloomberg. And if you don't know anything about Bloomberg, Bloomberg's like $1,700 a month. It's really, really good in terms of news, market data, fundamentals, macroeconomic data. There's just so much information in it, just to kind of give you some idea of the scope. Not only do they cover like 200 to 300 different exchanges around the globe, they've got 3,000 reporters in 300 different news bureaus as part of the Reuters news that comes into it. They have all kinds of company information, research filings. When you subscribe to Zenith, or the Metastock real-time with Zenith, you have access to basically the same quality of a platform that you'd get if you were subscribing to Bloomberg. And it's the same type of a data feed that banks and hedge funds and institutions are using. And it's just included as part of that 265. So I've talked about this quite a bit already. If you sign up now, you can sign up for $75 for their DC version. You can sign up for our real-time version, which is $265. That'll offer you a Metastock. If you do the real-time, it'll give you a Zenith. If you pay for a month, we'll give you the second and the third month for free. So right now it's November. Yeah, you'll be running in December, January, February, almost until Valentine's Day. Happy Valentine's Day. You probably have a lot of time actually during the holidays to play with the system, take it through the paces, take a look at it, make sure it works for you. A lot of our customers have been with us for decades, tons of them. And thank you for all of you that have been using Metastock for years. I definitely appreciate that. We definitely don't want you just to try it and it just didn't work for me, right? That's not kind of the goal. We want you to use it. We have so many customers that have just been using us for decades. We want you to get some real value out of it. But for $75, if it helps you find good trades on a day by day basis, it's going to pay for itself, and it's not going to be even a hard return on investment for you to get. So give it a go. As part of that, again, we're going to give you access to our support team. We're going to give you a one-on-one white glove installation appointment where you can sit down. They'll take you on a little tour of the software, show you around, show you how to run all the scans, give you a good understanding of kind of how to use that tool. And it is a tool. It is a toolbox. Again, like I said at the start, I love Metastock because it's not a huge investment, but I feel like the more you learn how to trade, the more your skills improve as a trader, the more that Metastock will work for you. It's not something that you're going to spend a whole bunch of money on. It doesn't cost a lot. But as you get better and better, it's going to grow with you. It's not going to be something that you spend a whole bunch of money on and grew out of. So, no, there are not any commitments to keep it after you're done. You know, you can cancel your subscription at any time, all that kind of stuff. Give it a go. Metastock.com/conf promo, metastock.com/saleschat, 800-882-3040. I end with this. I use Metastock every day. I've already run my scans for the morning. I'll run them again this afternoon. It's awesome. Even though I've been using Metastock for 27 years, that ability to go in and just, you know, take a big whole huge list of stocks and narrow it down to the ones that I can act on. It's so huge. I just absolutely love it. I think you will too. Give it a try. Greg, are you around?
You know I'm here.
Welcome back.
Welcome.
It feels like we just talked.
We did. Hey, a little point of clarification.
Yes.
Located in the Yamagata Prefecture, the Dewa Sanzan is a collective name for three sacred mountains: Haguro-san, Ga-san, and Yudono-san. They have been revered for their spiritual prowess since ancient times.
Cool.
I mentioned that because you mentioned Haguro being a sacred mountain. It in fact is one of three sacred mountains in Japan.
I just noticed that I clicked on the attendee list and I don't see our next speaker.
Oh dear. Well, that could be a problem. Well,
I got an email from him and telling me he'll be
I
here.
got my tap shoes in the closet.
What's that?
I got my tap
Oh
shoes.
yeah, no, you're fine. Let me just shoot him an email asking him to log in real quick. It's Fausto.
All right.
He'll be here.
Well, yeah, of course he will.
Okay. All right. I fired him that email. Wow. He's coming.
Yeah.
Hopefully I won't have to call him and figure out where he's at. But while he's coming, let's go ahead and give away a prize. Let's see. The next prize, Dave Landry is coming in to talk a little bit later in the week. Not today, but a little bit later in the week. We're going to give away 3 months of his core trading service. It's his gold subscription with all the benefits. He does trading courses, access to his traders group, all that kind of stuff. It's a value of $758. Fausto's here. All right. So with that being said, Mr. Lewis, what I need from you, as a number. Let me grab my price. Let me go over to the price sheet. That number can be anywhere between 1 and 9,775.
Okay, I'm pulling up my, okay, according to Google Random Number Generator, which I have to say is picking high numbers today, 8178.
That would be David T. in the US of A.
Congratulations, David T.
Has a Gmail account, so that probably doesn't narrow it down very much. 252 area code though. So let me go ahead and put that down on the prize sheet over here. And again, how do they register to win, Greg?
Oh, that's simple. All you need to do, well, if you're watching this on GoToWebinar, you probably already are registered. If you're watching it on YouTube and you want to register, just go to metastock.com. There's a banner right at the top. Click on that banner, register. You don't have to register more than once. You just register once for the whole conference, and you are good to go and eligible to be part of this drawing process.
Cool. Actually, I was going to ask you, do I need to register more than once?
You do not. You don't really need to register at all since you're not eligible for any of the prizes, Jeff.
Which is good because I might win a lot of them. So, in any case. All right. Thank you very much, Mr. Lewis. I appreciate
You're
that.
welcome. Break a leg, Mr.
Go ahead and move over to Fausto. But before, I'm going to talk about the fine company called AAII. AAII, a nonprofit. They started in the 70s. Well-respected, well-reputed. I say that a lot. AAII.com. They have newsletters you can subscribe to. They have stock grades that they assign things. They have an active investment division that's actually going to come in and have some really good strategies around trading. Ray talked a little bit about that through a bunch of different courses. You can find out more about AAII at AAII.com. So there you go. Hey, how you doing, Fausto?
I'm doing good. I'm doing good. How you doing, Jeff? I feel like we live together. We're always talking. We're doing events like all the time.
Yeah. It seems like just last week we did an event together.
Yeah, of course. I think I see you more here than at the shows.
So I talk about how motivated you are to work, or how you won that beauty contest on that cruise ship that year. Like,
I had to fix my hair before I came. Are you having a beauty contest here this time or what?
No, because like everybody else would feel bad, Fausto. So Fausto, I have a lot of cheeky introductions, but I will say I'm going to keep it a little bit more serious today. Fausto is really good at kind of helping you understand how to read the level 3 data on NASDAQ. And it's definitely a unique topic. He's the only one that we ever invite to talk about it. I don't know that anybody else talks about level 3 and its importance, but I've learned a lot about level 3 just by listening to you. So
yeah, it's you know what? It's nothing's going to change anybody's style that you have here with presenters. I know you got some great presenters, stuff like that, but like we kind of teach a little bit more on the right of the chart where most people like look on the left. So level 3 is where we're going to see some orders, high frequency trades, maybe those AIs programs that you're talking about. We're going to cover a little bit about it. So we're going to have a lot of fun in the next hour.
Cool. You should have a pop-up that says, do you want to share your screen?
Of course. I see it now. Let me just get it.
It even appears to be the right screen. So we're winning.
There we go.
All right. Fausto, it's all you. Go.
All right, perfect. Can everybody see everything okay? Just give me a chat back in the questions. I want to make sure you guys can see everything okay. Also, I want to see if you guys are paying attention. In the questions, just say hi, whatever it is. And by the way, where's everybody logged in from? I always like to know where everybody's here from. I'm from Long Island, New York, financial capital of the world. I'm like literally 15 miles out of Manhattan. Been working out of there in Manhattan so many years as a market maker, and that's really what we're going to cover. We're going to talk a little bit about that stuff. All right, looks like we got everything. Good. There we go. Texas, there we go. Good to see you. Welcome aboard. Who else we got here? All right, good. All right, traders. So basically, I'm going to talk a little bit about how to unlock and how to use the opportunities of using level 3 and the momentum of the market. Now, listen, it's going to go really, really fast, so try to catch up. I am from New York. I kind of talk a little fast. I'll try to keep it a little slow, but but we're going to have a lot of fun. I'm going to show you some really, really cool stuff. Actually, some of the stuff you're going to see, you're going to be a little disturbed. You're going to be like, my God, how do I not know this stuff? So we're going to make it worth your while. Now, quick little risk disclosure, just really quick. I'm not making any guarantees or promises that works for everybody. It all varies student from student, but you should be very careful. There is a very high risk in trading. So please make sure when you go out there that you could lose not all your money in trading, and it is so be very careful before you do it. Now, a couple of things we're going to talk about. I'm going to talk about how to follow the big money. That is really exciting. You're going to see where we're going to focus on the right of the chart, where we're going to see orders, high frequency trades, best times to trade. I'm going to show you basically how to read chart, keeping it very simple by using, momentum and just overall being an overall better rounded trader. And it's not really that hard to really trade. I mean, one of the hardest things to trade is more or less, the discipline, the psychology, and all that good stuff. Now, at the end of this presentation, what I'm going to do for everybody, I'm going to give everybody a week access to my trading room. Basically, I'll show it to you right now. I mean, I don't know if I could really show you. Let me see if it kind of just shows up on your screen here. Is it showing? Yep, there you go. So what you're seeing right here is right now we got about, well, it's the middle of the day. There's only about 185 traders in there. Let me get my little pointer. And they're looking at a stock right now. I don't know if you ever heard about this stock, QUBT. What the hell is QUBT? And why did it just go from at 145 from 220 up to 320? That's $1, okay? $1 on 1,000 shares, $1,000, $250,000 salary. Is it going to go higher? Is it going to go lower? Why is it so cheap? The question is, that's only one of several stocks that move. And, I want to share some stocks that we did trade today. Let me move this out of the way. My pointer. There we go. Put this back over here. And let me show you some stocks that were moving. And here we go. Let me bring this execution system up here. I think everybody can see this right here. So there are a lot of stocks that are moving in the market. There was a couple of big ones that did pop right now. This is the one that we found. And by the way, you can get a lot of the stock on the Meta stock platform. This is my trading platform. You could see this one basically took off. It's the biggest percentage gainer. It's up 135%. This was another really good one the past 2 days. Just yesterday, it was down all the way down to about $4 and 10 cents, and it ran all the way to about 15. This morning ran to 25. These are really like active day trading / short-term swing trading. A couple of brand name stocks that made some big moves. IBIT. If you've been following all the Bitcoin stocks, this has been doing great. What else have been trading that's been doing well? PLTR, another really good moving stock right here. A lot of these are due to the President Trump that got elected. All these news is of some of these stocks that made some really big moves. This one ran from 41 up to 61. I mean, the list goes on and on and on. But the thing is this, I'm not here to talk about the winners. I'm really here to teach you how to control the losers, because there are a lot of stocks that are moving and a lot of them you never heard of. But you're probably going to ask, how did you find them and how they continue to go higher? And that's why we're here. So that's basically, and we'll go back into the live market, and I would love to share some more stuff with you. But once again, I want to get into the meat and potatoes of what makes these stocks move. Now, you could see we're getting really close to 7,000 on the Dow. We had a lot of earnings that came out, and a lot of them blew earnings out of the water, all right? And we saw what happened with Amazon finally broke through 200. Tesla just literally did phenomenal due to the elections. Obviously, Elon Musk being almost like Trump's right-hand man. That stock just basically did unbelievable. PLTR, we just brought that up. I mean, there are a lot of things that are moving, but the thing is this, you got to know exactly where to find them, what drove them up, are they going to continue to go higher, and that's the big thing. So before I go over that, let me just introduce myself for some of you who don't know who I am. I've been doing this for over 35 years. I love what I do. I'm basically 53 right now. I started when I was 22 years old. I'm one of the original day traders that started in today's markets. I actually started one of the first schools in today's industry, actually. Now, the big thing was this. I'm here. I live here in New York. I'm a first generation Italian. My parents came here. And my dad always taught me, he says, son, listen, if you want to be very successful, you like what you do, this is the country of opportunity, just make sure you learn from people that are very good at what they do, okay? And whatever the cost is, even if it costs you money, okay, even if you have to pay them to do it, no matter what it takes, you heard of internships, whatever it is, you have to learn from people that know what they're doing, because if you learn from the people that don't know what they're doing, obviously we know how that story always ended. But I surround myself with some of the greatest traders in the industry. I'm always learning, just like you are. And, listen, nothing really has changed from when I started 35 years ago till today, other than, the market basically got cheaper in a way of ticket charges got cheaper. You don't have to be licensed when I had to do it. You didn't split the profits like I did it. But I tell you one thing, I love what I do, because this is the issue when it comes to trading, everybody. Trading is a very big failure rate. It's about a 90% failure rate. And, by Jeff hosting this great event at Metastock, and he's been around as long as I've been doing this, we not only would love to teach, but we've changed people's lives. I've also been featured at NASDAQ as being almost a spokesperson for them on something I'm going to show you today, which is called Level 4 and Level 3. But you could see here that a lot of these traders that we've trained over the years, they look no different than you. You got the border control people, you have the cowboys, you got the grandmas and grandpas, you got the engineers, you got the first responders. I mean, let me tell you something, it's never too late to learn, but you just got to make sure you surround yourself with people that know what they're doing. Now, before we move forward, as a gift for all of you just to stick around and to listen in, I'm going to give you my book for free. So if everyone here is interested, just drop me an email right now at Fausto@CTU trading.com. And you can go out and you can pay me $47 on Amazon. It's the #1 bestseller, How to Beat Market Makers at Their Own Game. But by you guys just being here, just take my email right now. Just take it down, send it to me, and fresh in your mind before you forget. And I'll be happy to send it to you. Okay, it's a fast read, it's color, #1 bestseller. I think you guys are really going to enjoy it. All right. Now, that is just my gift to you for just being here and listening in. Now, I've been married for 28 years. I got 3 wonderful sons. I love one of the big things I think that, people say, wow, you've been married that long. I'm like, well, I think being a trader obviously probably helped. I was able to spend more time, convenient, spend time with my family, travel around the world, and that's been a great part of it. I also have a home living channel, which I enjoy what to do. But listen, this is not about me. This is really about you. And the reason why I'm bringing that up, I want you to know that I'm a human being just like you, okay? I'm not some egotistical, professor, no disrespect to you guys. But listen, I just know that being, where I went through, I don't like to see anyone ever had to go through that. I blew up 2 accounts when I first got started because at the beginning, I didn't listen to my parents and I tried to do it on my own, but I was also 22 years old. But I know a lot of us here are older and you want to do things smarter. You want to do things wiser. And the only way you're going to do that is you got to surround yourself with good traders, which Jeff did a good job hosting this event, but you got to find the right mentor of a style that you like. Now, a question for all of you here, just to kind of get to know a little about everyone here. How long have you guys been trading for? How long and when I'm talking about taking it seriously, I'm not talking about, I've been doing it for 30 years. No, I'm talking about listen, I know some of you are working or may just started retired or whatever it may be. When did you guys start taking it? Has it been a couple of months, a couple of years? And, that's really my question for you. So if you please feel free to chat in the chat room and, just put it in there. Just got to see where everybody's, how everybody's doing on that. And, but I've been doing it for 35 years. I have not stopped. I've been doing it, not every day because I travel too, but I basically had not done anything other than this. And I have not turned back with it. I love what I do. I love teaching. I love trading. And more importantly, I love doing it for you guys. Now, the next thing you have to ask yourself is that, are you successful doing this? Really, think about it. Are you really making money? Are you really happy with it? And then you have to ask yourself, who really trained you? Okay? Because I could tell you this. To be successful in trading, you can't learn this on your own. You gotta have a mentor. It's gonna take you a few people to learn it, and you might have to take a couple of classes till you find that style fits you, just like I have, and just like anyone here that's doing a presentation, I could almost guarantee you that everybody here didn't learn on their own. They had a mentor, several of them, and they found their own style. Now, my style is I love day trading. I like to be in cash at the end of the day. I like to make my day money for the end of the day. I do swing trade. I do invest, but it all happens over the course of the day, which leads you to learn how to swing trade and to do an investment. But it all starts with what I'm just showing you on this slide right here. It's what happens over the course of the day by following the big money. Now, following the big money, what I'm going to talk about is level 3 and level 4. Now, I know Jeff loves me talking about this because this is basically the right of the chart. Okay. Now, some of you here probably are wondering, like, what the hell is the right of the chart? The right of the chart is where the orders are. This is where we get to see all those big block orders, the institutions, the high frequency trades, the algorithms, the AI trades, everything. Like, whoa, we could really see that crap. You damn right you can. Okay. And I'm going to show it to you. And so let me tell you, you better pay attention right now. And so all I'm asking for some little respect. Don't watch your execution system. Don't jump on any trades. Don't be watching any YouTube videos. Don't be turning on the TV, because in the next 10 minutes, I'm going to change the way you're going to see trading. Because like I said earlier, all of you keep looking at the left. I'm going to teach you the right of it. So I'm going to start off talking about something called level 2. Now, I know a lot of people here got level 2. Basically, it's a little bit outdated since the 90s. I mean, my God, it's about 30 years ago. But let me just kind of explain to you what we got on level 2. We get to see all these buyers and all these sellers. The problem is that you see where it says right here, MMID, that is a market maker ID. Those are just all exchanges and ECN. So you really don't know what how many orders are actually out there other than the best bid and the best offer at that exchange. So it's kind of outdated, and that's why they give it away for free. Now, this is where things become a lot more interesting. Now, does anybody here have something called NASDAQ Book Viewer, or AK Level 3, like I like to call it? Just give me a yes or no in the chat room, just out of curiosity. And as you guys are putting that in there, let me explain to you what we're looking at. Now, listen, this is gonna be a little bit shocking, all right? But just think about this for a second. You are seeing every single order out there in the entire market. Who wants to buy Amazon? Every buyer and every seller out there. Now, think about this for a second. Imagine I know some of you bought a house, right? Wouldn't it be amazing to know where all the buyers are on a house you're bidding for? Because obviously you don't want to underbid and get beat out, and you don't want to overpay and pay somebody more money for something when you could buy it cheaper. So you've been trading blind when your broker tells you, oh, just put a bid in. I'm like, what's the bid? Just put a bid. I'm like, where's everyone else? I can't tell you that. Well, maybe you feel a little uncomfortable. Well, now you don't have to feel uncomfortable when you trade the market. Now you're seeing every order out there in the entire world. Now, for example, there are a lot of numbers out here, okay? And let me explain to what we're looking at. We see all the buyers. Actually, I hate this color. Let me change it to red. There we go. And all the sellers. You're seeing every single order out there. How many shares are trading at that order and at what price? Whoever wants to buy for the most is up on top. Whoever wants to pay less are down at the bottom. So you're looking at what we call a negotiated market, or in other words, a big chat room of every buyer and seller out there. So you know who you're competing against. Now, the thing is this, what we need to focus on. I know there's a lot of numbers, and you probably wonder, what am I looking at? Well, all you really care about is this. You want to find the big block orders, what we call them iceberg orders. Those are big, big orders. Now, once again, what makes a support and resistance levels? Buyers and sellers. That's what we're focusing on. So let me show you a couple, and let me show you how we utilize this data. All right. So Greg and Michael never had it before. Now I'm just curious. There's over a few hundred people in this room. Okay, why is Greg and Michael the only ones telling me no? You know what? I'll do you all a favor, and don't take this the wrong way. You all could just say no. So I don't want to go to AI and kind of ask AI, because I like to do that sometimes and show you. But like I told you earlier, I was a market maker, which is a trader at an actual brokerage firm. These are the tools that we used. When I was first introduced this, I'm like, how does anyone even have a possible fighting chance of succeeding without even knowing where the orders are? So you want to know why trading's a failure? Because most of you didn't want to answer that question, which means I'll take it as a no. And you're probably embarrassed to say it, but that's okay. There's nothing embarrassing about when you got money on the line, because the last thing you want to do, and all us presenters here want to see you do, is lose money, because it doesn't look good in the industry when people are not successful in our industry. Now, let me tell you what we got going on about it. Martin, thank you very much. I never heard of it. Thank you. I like that. I like that. Now I know. Now I see somebody's paying attention. Okay. Let me show you how we utilize this data. Buyers equal support. So here you have a stock. We're looking at Chipotle. Okay, it opens up at the morning at $56, drops, and then all of a sudden it decides around 10 o'clock in the morning to go up at $48. Didn't want to go, broke this 52, broke this 50, but this is the number it decided to finally hit a support level and go up to back to 52. Now, why did it stop at 48? It's not because it was a previous support level. It's because when you look over here on the buy side and you work your way down, which I know is a little difficult to see, but I blew it up here, you have a 139,000 share buyer, and there are 60 orders around the entire world. I mean, imagine all of us want to buy Chipotle. That would make 60 of us. That equals 139,000. Now, is that a lot? Well, when you look at all the other prices, 48.30, you got 1,300, 5,000, 1,000. You're talking about almost like, I don't know, 20 to 50 times more the average amount of shares at that specific price than any other price. I mean, obviously, yeah, I would call that a demand. Wouldn't you? Okay, so this is what drives stocks to go up and stocks to go down. It's because supports and resistance levels are built due to buyers and sellers. Now, where is that buyer and seller came from? This is the left of the chart, and this is the right of the chart. Ooh, there you go. I'm not a pretty good writer. All right, let me show you another example. Look what happens when a stock hits a resistance levels. Now we're looking at NVIDIA. Now NVIDIA, I know everyone's a big fan of NVIDIA, right? And if you look at NVIDIA is having this major problem breaking 150, okay? And you could see it here, and I'll bring up a chart here. I'll even show you in the last couple of days. Here's a live chart, okay? Look what we got going on over here. Let me go back even further. Let me draw a trend line. Here's 50, okay? Look what's happening here. Never wanted to hit 50 today. Never wanted to hit 50. Never want to hit 50. Never want to hit 50. Why is it having this problem? What is 150? Oh, it's 150. It's a whole number. No, that's bullshit. That's not the reason why, okay? You could have people keep telling you that. I'm going to tell you the fact is. The facts are this. You're looking at the left of the chart, okay? Now, I'm going to show you the right of the chart. The right of the chart, oops, I gotta get my, I gotta keep bouncing back and forth here. Here's the right of the chart. The right of the chart is what we're looking at here. Is you'll notice here's the right, So we need to find sellers. And all the way down here at 150, you got 7,000 orders out there. You got 1 million shares. Do you know what 1 million shares is? Okay. You know what 1 million shares is? Okay, let me add this up. 1 million times 150 equals, talking $150 million looking to be sold there. Now, I know that, listen, I don't know if you guys follow me on Instagram or TikTok or YouTube. You know, I get people, I post these videos all the time on these examples out there. And there are people like, oh, this thing's going to 170. Oh, really? Did you see it go down to $90? What made that happen? You know, and because everyone is focusing, oh, but it's NVIDIA, you know, like yeah, I understand. But there's also other stocks out there and all driven by the same thing. It's all about buyers and sellers. So listen, can it break through 150? Damn right it could. Absolutely. Actually, 140 was a really big resistance levels. Okay. And by the way, we're only looking at the NASDAQ. I didn't show you other exchanges. Did you know there's something called the New York Stock Exchange? There's orders there too. Did you hear there's something called EDGX? There's orders out there too. You maybe heard of something called the Chicago Merchant. Yeah, there's orders out there. I'm only showing you NASDAQ. Okay. Because there's really about 2 million shares out there. And I'm going to hop over here and show you what I'm talking about, which is something called level 4. Here's level 4. See a red line right there? There's about 2 million shares out there. There's another million sitting out there on other exchanges. I'm just showing you one order. There's more. Okay. Now, think about this for a second. How much smarter and better trading decisions would you have made by knowing that? I mean, think about that. It's like, wow, is that who I'm going up against? You're damn right it is. And that's why you got to know to follow the right of the chart. Now, let's look at a couple more examples here. Let's look at this stock right here, CELH, Celsius, okay, tanked right after earnings. All right, now, where's it going, to zero? Okay, well, listen, there's always going to be buyers out there. You know, you have short squeezes, you got all that stuff. So when we look at the exchange, we'll notice, okay, like, listen, there's got to be buyers somewhere. There's always buyers. There's always buyers. Well, here you look down at the bottom, and you notice that you got buyers around $27, okay? $27.80, you got 220,000. Now, when you look down here, you'll notice that there are buyers everywhere, right? But the really significant buyers right here. You're talking about a 6-digit number where there's 3 digits, 4 digits, 5, 6 digits, 200,000. That's a lot of money right there. A lot more money than you thought that maybe at this price. So watch what happens when we change and we look at and show you what happens when we see what on the chart. But by the way, just to let you know, that's about $6 million sitting there looking to be bought. And there are 43 people out there looking to do it. Stock goes down, goes from 30. You're sitting there freaking out. They're like, when is it going to bounce? Keep looking at chart after chart after chart. And here I am just showing you, listen, it's a big buyer out there. Here's your hope. You know what? I'm not from Main Street. I'm from Wall Street. Okay. And what do you think? Who do you think runs the market? It ain't Main Street. Okay. It's the big block orders on Wall Street, the BlackRocks, the Goldman Sachs, the Morgan Stanleys, you know, the Warren Buffetts of the world. On this stock, that's why they're looking to buy it. By knowing it was there, boom, it goes from $27.80 back up to $30. Not bad for a day's pay. Let's look at another example, PLTR. After the stock breaks all-time highs, right? Like, is this thing going to keep going? Because you ever had a stock, you're like, wow, is it going to keep going? Is it great? Like, and all of a sudden, like, I don't understand. Why is it going down now? Well, listen, there are always people looking to take profits. And when you look at PLTR, and all of a sudden, like, well, is it going to bounce? Is it going to continue to go lower? Is it going to go higher? Well, I don't really see too many sellers out there, but I damn right see a 400,000 share buyer at 53. That's a pretty big ass order. Guess what? It never went lower. It stopped right there and shot up all the way to 56. That's what I'm talking about, fellow traders. That's what makes these stocks run. And by the way, this slide, I only took it a couple of days ago. Do you know where PLTR is now? It went all the way to a high today of 63. I'm showing you 53. That was over here. I can't even keep up to date with my PowerPoints when I make them because they keep getting, like I said, it's like, but I like showing to you them because you see what happens, the after effect. They're like, well, it had a good move from like 42, 53 in like 2 days. I mean, that is almost like a nice 10, 20% move. Some of you can't even make that in a year. They're like, I would take that. But then some of you be like, why did I sell it? My God, the thing just ran another 10 bucks. Did you see the 400,000 share buyer out there? Probably not. So let's talk about resistance levels. Hood, another stock, Bitcoin stock. They own a big position. By the way, anyone here trading Bitcoin? And you don't have to trade Bitcoin. There's a lot of ETFs out in the market. Coinbase. There's plenty of things you could trade other than just trade Bitcoin. But we saw what happened after President-elect Trump came in. And listen, like him or hate him, that's your problem. My problem is I'm a trader, okay? And I loved it that he got elected for one reason. Totally different policies. They're going to make different stocks make big moves. Because if you didn't get elected as a trader, I'm like, okay, well, it's not like Trump lost, in 2020 and it made all the, the EV stocks move and all the healthcare stocks move. Now you're getting the opposite, it's like and these things really took off. So, you know what? At the end of the day, you got to look at your pocket. So this stock could, just let me get to it. Good, big push, big move, great moving stock. Sure enough, you got to know where the resistance levels are. Always got to know where to take a profit. Well, we work our way. We look at the sellers. I want to know where everybody wants to get out. And I can see they got about 400 people are trying to get out that equal up about 190,000 shares. I don't know about you, but when you got this stock had a hell of a nice run, okay? But you got about $5 million sitting out there in the offer. It's a hell of a lot more than you and I. And then you're wondering, like, why is the stock not breaking it? Why is it hovering there? Well, the only way that stock is going to go higher and, looking at it is that someone's got to execute that 190,000 shares. And guess what? I want to show you something here. That trade, that video that I showed you, that slide was right around here about 4 days ago. And then eventually somebody executed him. And that's why you get these stocks are like, what in the crap? How did that stock go from 30 all the way up to 34? Well, when you get big sellers like that getting executed, that's a really good sign for the stock to go higher. How about hopping over here on Amazon? Okay, Amazon, big move. 200 was a major resistance levels. Big order, but obviously, we saw what happened with the election. All these stocks made big moves. But you always have to ask yourself, good traders need to know, okay, where's the next ceiling? Where's the next ceiling? And when we got right around here, around 212, we had about 70,000, 164,000, sitting there because we always want to know where the sellers are. When you're long, you want to know where sellers are. If you're short, you want to know where the buyers are. Okay, so look what ended up happening. Hit 212, came right back down to 210. Once again, following the money. And that's what we call big iceberg orders here at CyberTrade University. Now, by the way, just a quick question to ask everyone. Did I lose anybody yet? Is everyone following along? Just give me a quick yes or no. Because if you're not following along, I want to show you more examples. If you are following along, I want to show you level 4. That's why. Okay? So if anyone, by the way, who here would like to get this stuff? this book viewer. Now, I don't own it. This is directly through the exchange. You can't get this through anyone else. I don't work for NASDAQ. I don't make any money off this. I'm not looking to make any money off anybody here. I just want you to just basically just see a different view of your style of trading and see how it works. So all you need to do is, once again, same email address. Just copy my email right there. And just write down, say, Fausto, send me book viewer, whatever. Send me the NASDAQ book, whatever it may be. So while it's fresh in your mind right now, while we have about another minute or two before I go to the next thing, drop me an email, Fausto@ctutrading.com. And what I like to do is send you 2 videos. And they're only about 5 minutes long. First of all, I wanted to show you where to get it on the website because you'll never find it. It's like buried in a different website. And number 2, the defaults are all wrong. And I want you to get buying this pro version where you could buy something very, very cheap. Oops, sorry about that. Hold on a second.
Hey folks, good afternoon.
Sorry about that. That's our trading room. That just talking about the afternoon. It's an afternoon meeting that we do, which by the way, you're all going to be invited to that too. But yeah, I want you to try those 2 videos, watch them. So it shows you how to download it, where to get it. Okay. And by the way, you can cancel whenever you want. Then there's no subscription to it. You have to worry about that. All right. Now that we spoke a little bit about NASDAQ level 3, let me teach you about level 4. Now, level 4 is pretty cool because level 4 is now we're implementing a heat map. Okay. And it's everything that you get on level 3, but now you're getting to see if those orders are out there and how long, if they got executed and everything else. So what I like to do right here, right now is, does anyone have any stocks you guys want me to watch? I want to show you a couple examples. I want to bring something up here and I want to show you a couple of cool things. Okay. Anybody have a stock right now? Let me just bring up something myself. Just give me a stock, anyone. And I want to bring up a couple of cool. Let me bring a couple of cool stocks up here while you guys just give me some stocks to watch. Okay, let me bring up. I'll bring up Tesla really quick. Okay, how about that? A little brand name stock. All right. So here's Tesla. Okay, Tesla had a really, really nice run. It ran from like 240, went all the way about 260. Now it's hovering around 326. Okay. Now, stock is going up. Okay, so in theory, why did it stop right below 260? Okay, like where did the 260 come from? I mean, where'd that come from, right? Why did it hit 400? Right. So you can go back and look at history and you go back and go back and go back and go back, but be like, well, I really didn't see 260. I kind of saw maybe back in, 2021, maybe 380, I'm sorry, I meant 360, not 260. And then you go back a little bit further. You're like, okay, then maybe, right around here, I see resistance levels, right? But when we bring up level 4, and if I zoom out here, you could see here that 245, you got 197,000 shares seller, 250, you got 318, and then 260 right around there. So really 350, between 345 and 360, that's really where your trades are. Now we're at 325 here. Okay, so it's like, so these orders have been out there ever since. And if I go back a little bit further, which I can't, only let me go that far. I mean, now you have a little bit of a game plan of where these resistance levels are. And let's go to NVIDIA. Okay, NVIDIA, you can see here clear as day at 150. 2 million shares are going to be sold, and at 155, you got another order out there for 700,000, 160. So stock is moving moving in $5 intervals. But the real big seller is at 150. Okay, so Let me bring 150 here, and let me show you what we got going on over here. NVIDIA. 149.50. Never got to 150. By the way, when you guys, I invite you to my trading room, I'm going to tell you exactly what that means. All right. Kava. Kava's been doing great. What a great move. But now Kava's obviously coming down. So Kava, let me see what's going on with Kava for, what's your name? Somebody wants to Kava. Okay, so let's look at Kava. Let me see what we got going. Kava. Okay, so Kava hit a high right here at 170, right? Great run up. I'm gonna bring up a 2-day chart. Great run up. So when it came out with earnings, it ran from 145, shot up all the way to 170, and from yesterday's after hours till this morning, never wanted to get past 170, right? Now, if you still have it right now, you're probably really ticked off. They're like, shit, I wish I sold it at 170 because now I'm at 146. I'm like, that's a big, how much is that? That's almost like 25 points of a drop, right? That's a lot of money. I mean, we're like back to where we were yesterday. It's like it lost it all. Why did it stop at 170? Could anyone answer that question? Why did it go to 175? Why 170? Who the hell is 170, right? Well, if you look right here, there's that 170 seller out there. He's been out there all day, okay? Now, that's the bad part about it. Now, the good thing is that you got a pretty big buyer out here at 146, okay? So when you're looking at over here, is that 146? Yeah, 146. You got about 30,000 shares looking to be bought there. So what is 146? Major support levels, right? When we go over here and blow this up, here's 146. Now, for some of you, you might think, I think 144 is support levels, right? That's not what I'm seeing over here. When I look over here, I see 145, but the real big buyers are 146. So if you own the stock, let me tell you, that is basically, from what I can see, is a good buy at 146. But if that buyer gets executed, bye-bye. Not interested. Not interested. All right. Let's do another one here. Let me see who else we got here. MSTR, a little bit volatile. Let me look at some. You said one said AGI. How many volume on it? Volume's a little light. It's 1 million shares. MSTR. MSTR's got a couple of good iceberg orders. I'll bring up MSTR. That's not bad. Okay. Let me show you. Now, the question I have to ask you, Brad, who actually put in chat room, do you have a game plan? Do you know where the buyers and sellers are? Do you know exactly where you want to get in and get out of that position? I mean, that's really comes down to it, right? So MSTR, I got to bring it up here. I just got to get the data on it. All right, so MSTR, all right, here we got. This is what we got going on here, MSTR. So it's been trending down, right? And let me go back a little bit further. Let me get more data. So you can see that there are some big buyers around 385, 380. She's been starting to trend down a lot. The stock has been having a really good run because one of the Bitcoin stocks, MSTR is one of the companies that own a lot of Bitcoin. You know, don't think I don't know that, right? Great run up. It broke once it broke 250. But the thing is, you got to have that game plan. You can see here, you got a couple of buyers right here around 320. That's going to hold it up. Okay, so that's really got to look at here. Am I almost there? A lot of volume here. All right, so I'm going back a little bit further. I just want to see what happened at the open. All right, so you can see here's the open, and all these orders started showing up right around here at 390, 380, 370. They're still out there. You can see them, but you can see how the stock is trending down. All right. So, my God, time's flying already. Look at that. Just thought that this was only getting better. All right. So, so what I want to do for all of you is this. I want to invite all of you to join the trading room so you guys can watch it. This is our trading room. And right now we're broadcasting live. We're live every morning at 9 a.m. and 2:30 on YouTube, Instagram, TikTok, X, all of them. Right now what we're doing is we're broadcasting live. One of the instructors in here, Josh, and he's basically, you can see him talking. I turned it off. Let me turn it on. You can hear it right now.
Coinbase down, Con L, CO right now.
Did everybody hear that?
Like essentially a little sloppy on the bottom, but lower high, nice break.
So he's basically doing an afternoon, what to trade in the afternoon for everybody. So I'm going to invite all of you guys to come. All right. You're all invited. And what we do there is we're going to basically show you how we find these stocks. We work together like a team. We do some swing trading, some option trading, all that good stuff. But the big thing is this. We don't tell you what to buy or sell. We teach you how to think for yourself. We just kind of like take you fishing. Let's just say that. All right. Now, if everybody wants to come, I'm going to give you a quick link how to register. But just to let everyone here, if you don't know this already, Cyber Trading University has been endorsed and has been sponsored by some of the biggest brokerage firms in the industry. Maybe you see a name out there you might be familiar with. We've been doing this for 35 years. We're very proud of it. Not only that, but we have a 5-star rating on Google. After 35 years, I don't think anyone has ever probably seen that before. So we're very, very proud of that also. You probably want to read some of that. And not only that, but on ChatGTP, we were ranked the #1 school in the industry of trading for day trading. So I don't know about you, but I'm not questioning ChatGTP. All right. So if you want to do your homework, go check it out. Now, if you want to see why we've been doing it for so long and, and why our traders, and start learning how to read the right of the chart, well, this is what I'm going to offer all of you. For $9, now, that's all it's going to cost you is $9. I'm going to give you a 1-week trial. Now, I know that sounds like ridiculous. Like, why would I do like that? That sounds too cheap. Listen, I don't need the $9. The $9 just tells me if you're a real person or not. There are over a few hundred people in this room. I can invite all of you guys to come for free. I'm not looking for free people. And plus, I don't think you're going to take it seriously. So all you need to do is just go to www.ctu.co/trial. Put that link in there and just click on it. $9. That's all it's going to cost you. And we'll give you 1-week access to be in the trading room from 7:30 in the morning Eastern time. So you can watch pre-market us trade going into the after hours where earnings announcements, but we trade all day long with our traders. We have live commentary, which I just showed you right now. You're gonna meet all the hundreds of traders that are in the room that just started just like you. Oh, by the way, you can also do this. That little QR code right there. You could take your phone. I don't know if you guys ever did this before. Just turn on your camera. You could scan it. Let me see if it works myself. So I turn on my camera right there, and then I'll click. There I go. Click the QR code, and then you can see it just goes right to it. Is it right going there? Let's see if it's working. Oh, yeah, there it is. Yeah. See? There you go. All right. $9 trial. So you can do that too. We also have some of the biggest well-known mentors, gurus in the industry. I have a podcast. We have a huge library of them. I just had Jeff on last week. It was a great podcast. We have little shorts for them. Once again, you're gonna have access to all this great stuff that we do. Once again, at the end of the week, if you feel like I waste your time, I'll give you $9 back. Okay, but there's everything you're gonna get. You're gonna get the trading room. You're gonna get workshops. You're gonna get Traders Talk Library. You're gonna get everything. Oh, and one last thing I'm gonna give everybody too. If you do register, I will basically talk to you on the phone. Okay. Now, listen. At the end of the day, when's the last time you ever spoke to someone who's been around for 35 years and has trained hundreds of thousands of people? Well, this is my gift to you by coming here and listening to the presentation, because you know what? You probably got some personal questions you probably want to ask, and you might not want to share it right now. So, you're probably overwhelmed and this and that. So listen, we want you to kind of get the experience. I want you to talk to my staff. They're going to do a great walkthrough with you. And then at the end of the day, after a couple of days in the room, you might see, okay, now I get it. Fausto, I'm having this issue, whatever it is, and we'll have that conversation. Once again, everything just for $9. All right. Now, I'm almost done here. Does anyone have any questions as we wait, as everyone's registering? I have taken advantage of his trial. Highly recommend it. Alan, thank you so much for sharing that. Just kind of, that's from, obviously, I don't think anyone could read his chat, but that was from Alan, just registered. Thanks a lot, Alan, for being here. Does anyone have any questions, once again, as everybody's registering? But I do have some, you know what? I do get some questions that do come up. I will kind of, let me just kind of put them out there. People always ask me, do I need a brokerage account to trade? And my answer is no, okay? Listen, you don't have to go crazy, open a brokerage firm for $9, okay? You don't go out there and buy a car without learning how to drive first. You don't even know what car you need. That might be the wrong brokerage firm. If you got one, that's great. But the thing is this, you got to go out there and try it first before you worry about a brokerage account. A lot of people also ask me, how much money do I need to trade? You know how much money you need? $9. Okay, don't worry about how much money you need to trade. First, before you make this whole investment, trading might not be for you, and that's okay. That's all right. You might have this whole thing in your mind and you're like, I want to do this. And you know what? 9 out of 10 times, it might not be for you. You might not be able to handle the stress. You might not be able to might work in your time factor. I don't know. But you won't know that until you actually do a sample of it, So that's the beauty of it. Another popular question people always ask me is, when's the best times to trade? Okay. Now, we commentary at the first hour and the last hour. So those are really two of the best times to trade. So no matter what part of the world you're in, there's always going to be a time for you to trade. All right. Now, any other questions? Anyone else have any other questions? All right. So if nobody has any other questions, once again, everybody, these are all the things that you're going to get for $9. Workshops, recordings, Traders Talk Library, free consultation with me personally, all this for $9. And once again, money back guaranteed at the end of the week. And like I said, the only reason why I do it for $9 is because I feel like if you don't have any skin in the game, you're probably not going to take it seriously anyway. All right. All right, Jeff. So just pass it over to you. And once again, everyone, thanks for listening in. Listen, I know this is going to be a very overwhelming bunch of presenters that you have for this week. Jeff put a lot of work, and Metastock put a lot of work into this. You got some great speakers here. You're going to learn a little bit something from everyone. You can't buy everybody's stuff. You can't sample everyone's stuff, but try to find a little bit of what kind of industries you like. Try it. Just remember one thing, a guarantee I will make all of you. The stock market's not going out of business. So you're not going to learn it all in 1 week. So if you miss one presenter, you're going to see him again. He's going to be around. We're all around. But just do your homework. Make sure it's your style. It makes sense to you. And, like I said, then that's basically how you make a career in trading. But once again, thanks for having me, guys. And look forward to seeing you on the trade room. Jeff, thanks again. Always love talking on your behalf. Be here at Metastock.
Yeah, it's always good to have you. Comment here from YouTube. V says, I like this guy. He's very sharp. And New York. I agree with that. The one thing I'd add is you're good looking. So.
Well, New York is, listen, some people like New York. Some people don't like New Yorkers. Listen, I'm from Long Island. But the thing is, listen, one thing I've learned, especially from my father and stuff, there's no fluff. We don't sit there and pat you on the back. Sometimes a little brash. I just hate people losing money. So I just tell you how it is. And the thing is, New Yorkers are a little bit like that. When you ask somebody where's direction, say, we might be room, like make a left and a right and it's right in front of you. You know what I mean? That's really it. In trading, it's the same thing. You can't sit there and overanalyze things, but by the time you do that, you might chase it, you might lose money. So just You have to be straightforward. But thanks for sharing that. Appreciate it.
Siri says, thanks, Fausto. I agree. Thank you a lot, Fausto. We'll see you again maybe next week. We don't have anything
Maybe
planned
next week.
All right. Thanks a lot.
Bye-bye.
Bye. Do this. Let me do this. Hold on. Okay. Go ahead. Before we do this, let's go back just a little bit and go ahead and turn on my camera. All right. How's everybody doing? Oh, shoot. I just realized I forgot to put the camera down. We'll go ahead and turn that off for this second. Hope everybody's doing well. I'm gonna fix my camera view real quick while I do. I want to say thank you to Trade Thirsty for sponsoring the event today. Trade Thirsty has been a great partner of ours. You can get a free income generator report. This should be a little bit of a better view of me. You can get a free income generator report if you just go to www.tradethirsty.com/free. So there you go. How's everybody doing? You enjoying the show? Everything going well? Do you have any comments, feedback, any questions? Let me know. Now's a great time. You know what it's also a good time for? Greg, I think you might know what it's a good time for.
Hey, I have some great feedback.
Okay, yeah.
The best conference ever.
Ooh, the best. Out of all of the ones we've done, the best ever. Okay. I'll take your word. I think it's going really well.
Oh, I'm sorry. I think I missed the last thing you said. Well, what did you say?
I said out of all of them we've ever done, this is the best conference.
Oh yeah.
Okay.
It's it's the best conference that ever is, was, or ever will be.
All right. Well, you know what would make it even better?
Until we have our next conference.
You know what would make it even better?
Giving away free things to people who are deserving.
Yeah. Let's give away. We're going to give away a copy of The Volume Factor by Buff Dormeyer. Buff was rated. He won the Dow Award.
Oh,
which is really cool, right? So he does a lot of.
That is.
He, much like our next speaker, does a lot of volume analysis, volume analytics. But we have a signed copy that's going to be signed to the winner.
Oh.
Let's go ahead and figure out who the winner is. So let's go figure out. Let's go ahead and figure out who that winner is, Mr. Lewis. I just need a number from you, anywhere between 1 and 9,775.
9,775. Okay, according to Google's random number generator, that is 4946, somewhere smack dab in the middle. 4946.
It's been very, very much in the middle. That's Allison M. in the USA. Yeah. Let me go ahead and make a note of that real quick. And thank you. I appreciate the assist. You're very good at using the Google random number generator for me.
I'm here for you.
All right, right on. All right. All the specials we're talking about, we've talked about Metastock, we've talked about, kind of a lot of things today. You can get them all at metastock.com/conf promo. You can give us a call, 800-882-3040. We'd love to hear from you, metastock.com/sales chat. Again, we've talked about how it's been rated #1 in its price category. I've talked about how if you pay for the month, you'll get the second and third month for free. That'll run you to almost Valentine's Day at this point. $75 a month. It's about $25 per month on that extended trial. So give it a go. Metastock.com/conf promo, metastock.com/sales chat if you want to talk to us, if you have questions, or give us a call, 800-882-3040. So very good to hear that. Just getting my view back to see if I have any questions from YouTube. I don't have any questions on GoToWebinar. Our next speaker is also a very good friend of mine, a guy by the name of Mark Leibovit. Mark Leibovit, I haven't talked much about the Timer Digest, but I did tell you kind of how he won. So I'm going to dive into it a little bit in terms of what it is, what it means, that kind of stuff. So there's a publication, it's called Timer Digest. And if anybody can compete, if you want to kind of say, here's the trades that I'm doing, they'll keep track of them and they'll kind of rank your performance against other people that are competing. And it's a fairly big competition. Hey, Mark, I just saw you pop in. You can pop in. It's cool. Come on
Hi.
over.
I know, I heard
What's up?
my name. I jumped
Yeah,
in.
come on in. Let's see. So Mark's been rated many times top market timer. I think, wasn't it at one point, Mark, that you were rated top market timer for like a decade in gold?
Yeah, there was like a 10-year period where I was up there. I don't know the exact number. It's been a few years, but listen, I'm happy to even be in the list.
Yeah,
There's
yeah, yeah.
so much competition out there, you know.
Yeah, for sure. Well, and to lead it and consistently many times. Let me go ahead. I'm going to make you the presenter right now. Yes. And then you should have just gotten a pop-up that says share my screen. You can do that if you want. Yep.
Okay.
And I can see the unexpanded the slideshow right now.
Okay. Is it not showing?
No, it's showing up. Yeah, what we're seeing is like, I think you just need to hit slideshow, view slideshow, and then you can.
Yeah, I'm doing that right now. Slideshow. Hold on. Slideshow from the beginning.
Cool.
That look better?
It looks angelic. Perfect. All right. So I'm gonna go ahead. I'll get out of the way. It's your turn. Go for it. Do you have any questions for me? Anything?
I was going to try to do a little live stuff if we can, since I've got the Metastock more functionally usable for me now. I had some help getting the expert advisor up on the screen at the same time, so
Yeah,
I'm going to try to spend it.
Gabby told me that she talked to you. Actually,
it did a great job and really helped me. So
yeah, they always do. They always do. I'm out of the way. It's your turn.
okay, thank you, Jeff. Well, thank you, everyone. Again, my name is Mark Leibovit. Been only doing this 45 years. I guess I'm a bit of an addict, still doing it this stage of my life, but time flies when you're having fun. We launched our newsletters back in 1979, but I couldn't think of anything else that I enjoy more. I have these newsletters you see up on the screen. I've been very lucky over the years, being on PBS for 30 years with Paul Kangas on the Nightly Business Report. I was honored to be an elf with many of you may be too young to remember Louis Rukeyser on Wall Street Week show on PBS. I was an elf on that show. So a lot of my connections are, I guess, a little older because this goes back many years. So I was Timer Digest back in 2019. Timer of the Year in 2016, and then it was, as Jeff said, I was in a bunch of lists. So the bottom line is, how's your trading going? And we think we do a pretty good job doing that. I have to emphasize to my clients, we're vrtrader.com. We're not vrinvestor.com. We don't sit and hold positions for any long periods of time. And when I was a floor trader decades ago on the Chicago Board Options Exchange, my mentors went home flat every night, no positions. Not to say you should do that, but it sure keeps your head clear. There's no surprises in overnight activity and coming every day fresh. And it just turns out there's always something to do in the market. So there's a lot of stuff here that I can show you and spend time with, and I want to get more to the charts and the reasons I'm with Jeff and Metastock. So I'm just going to skip a lot of stuff. I do have my book, The Trader's Book of Volume. We put out in 2011. It's also in Chinese. It's about 600 pages, covers most of the major or all the major volume indicators that I know about, including my own, the volume reversal, which we're going to talk about during the course of this presentation. I'm working on my second book, Profits Using the Volume Reversal Indicator, Trade Your Way to Profits. So no promise on a deadline for that, but there's a lot of stuff that I don't talk about with regard to my strategy, besides the VR, which you're going to see in the charts coming up in terms of the way I measure entry and exit points, a lot of cool stuff, which you really don't see published anywhere. So hopefully we'll get that in the book in coming months. So just want to give you the heads up on that. The VR Forecaster is my annual forecast model. I put that out every year since 1987. It's based on cyclical and other indicators besides volume, in addition to volume. And this was like the forecast for Dow Industrials in 2023. The bars is what we had predicted, and the yellow line is what actually happened. This was the Bitcoin projection last year. Bars is what we predicted. The yellow line is what actually happened. This was the current year projection for the Dow Industrials. We put this out in January, late January every year. And pretty much on track. The idea is I gave you an overall bullish picture for the year, months in advance, and that's one of the reasons we continue to publish it. So it's called the VR Forecaster. It's one of the little boxes you saw at the beginning of the presentation that you can sign up for. The 2025 edition should be out, obviously, in January. There's me at the Elves and Elfin with Louis Rukeyser. I do a weekly podcast at housestreet.com up in Vancouver. Just go to housestreet.com podcast and you can hear me every week. In fact, we're going to be taping the new weekly broadcast tomorrow. I'm going to skip this one. We're going to skip the geocosmics for now. We're going to skip, well, we'll talk real briefly about this. The reason I skipped the geocosmics, I do a lot of cycle work, but I want to spend more time on the volume indicator during the course of this presentation, and we'll go back to that later. So I'm very influenced by cycles and short-term variations in those cycles, and I've been influenced over the years that indicate that sometimes change points and things can be predicted in advance. Meanwhile, I've been a critic as G. Edward Griffin has been on the Federal Reserve, and even noticed economist Mohammed El-Arian as well, getting more criticism about the Fed. I know Powell was asked whether he was going to resign now that Trump is in. He said no, but many feel like there's some changes need to be made to the Fed. So we can dwell on that in a future conversation. For those of you in the gold market, I don't know if you've heard of GATA, the Gold Action Antitrust Action Committee, GATA.org. Good friend of mine, Bill Murphy, you should check them out. They have a 20-year record talking about manipulation in the gold market, suppression of gold prices, and maybe something has changed because obviously gold has taken off recently. So I would check that out. I'll pass on that one. Of course, BRICS meeting just occurred. There were a lot of expectations that we were going to see a new currency right away, backed by gold. Hasn't happened, but I'm sure it's coming over time. So got to keep an eye on what's going on with BRICS and their gold. I'm a big proponent of the existence and confirm the existence of the plunge protection team. Hope many of you have heard of it. If not, Ronald Reagan enacted this back in 1988. It was called the Working Group of Financial Markets, and not any discussion whatsoever in the financial media about this, but it is very active and in the markets. We also have the Equity Stabilization Fund from 1934. It was part of the Gold Reserve Act. This is another plaything on the part of the government, which again, we don't hear about. And the same with the Federal Reserve. Sounds like a bit of a tangent here, but you know, everybody talks about the Fed and then they're raising and lowering rates, and there's so many other activities the Fed is involved with. The movement of the money supply, for example, just recently, money supply has not been retracted at all. It's been expanding, and despite the Fed tightening interest rates, one hand is doing one thing and the other hand is, you know, doing the other. So a lot of stuff is not really talked about there. And we all have to worry about the push for digital currency. We'll talk about that later. We also know that Warren Buffett's been unloading a lot of stocks, including big names like Apple and Bank of America. So this is a man who's probably the greatest money manager of all time. And if he's lightening up in the market, I know Donald Trump is in, and many feel, as I do, that's bullish for the markets, but Warren Buffett still thinks stocks are overvalued. So, you know, keep this in mind when you're in the markets at the present time, that someone who's pretty savvy is raising more and more cash. Our fear and greed index, according to the CNN daily poll, is up in the greed level here, which is understandable since the markets are so high. So, you know, again, you got to keep that in mind. I know it's seasonal end of the year, Thanksgiving, the turkey shoot rally, the Santa Claus rally, all these things, and could support the market into early next year, but you have to know where you're at. And I wouldn't be surprised to see a bit of a setback here. You'll see why also using the VR indicator in a few moments. Here's your Dow Jones seasonality. This is courtesy of a friend of mine, equityclock.com. You can see here that you tend to trend up in November and December during an election year. So there are some zigs and zags along the way, and nothing is perfect, but just to keep this in mind. Of course, it shows the big October sell-off, and we really had a minimal one. So the overall pattern, much as my forecast model says, there's still bias to the upside, but again, getting extended here. So again, stay tuned. confidence index is something which you really don't see in many places. This is basically a little formula, which is the Fidelity Capital Income Fund divided by the Vanguard Long-Term Treasury Fund. And it shows that as it has been here since 2020, the confidence in the market is still up there despite all the negative news and activity. So what you're looking at is that little blue 150-day moving average. And as long as we stay above that, but we dipped below it just a couple of weeks ago, it still sends the confidence of the market is still there. So just I post this in my newsletter just about every day. Let's move forward here. The Yale Hirsch January barometer, again, this talks back to the forecast for the year. I knew Yale many, many years ago, back in the early 70s, late 70s, and he created the Stock Traders Almanac. And in fact, he dedicated the 1987 edition to me and 3 other technical analysts. But the January barometer, I assume you're familiar with. So goes January, so goes the year. That includes the net of the December close against the January close, and that was showing a positive return for 2024. There's also the early warning system, which is the first 5 days of January. If that's up, that's also considered a leading indicator. Many of you may or not be familiar with John Williams' Shadow Government Statistics. You should check it out. I don't believe many of the government statistics that are released, and Mr. Williams does a great job in enlightening us what the real numbers really are. My confidence is more in the Chicago PMI and industry generated statistics and government statistics, which we've seen revised so many times. They're being outlined completely related to political influence. So you got to be really careful. But the indices like the PMI, which actually has been leaning more negative in terms of the production, industrial production and so forth, is something you should pay attention to. Now we get to Metastock, and I move forward here a little bit because I want to get right into the exciting part of the presentation. Back in, I think it was 2010-11, Jeff Gibby and I got together and we created the volume reversal toolkit. And this, my indicator is trademarked. The volume reversal is my proprietary tool. It basically is defined as a change of volume accompanied by a change of price. And it's important when it comes off market peaks or stock peaks or market lows or stock lows. And I use it as my trading indicator intraday, daily, weekly, and so forth. So we're going to get into some examples about that. And that's the real purpose and focus of this presentation. There are 3 versions of it on the add-on indicator, which Jeff can describe to you how to sign up for. There's the volume reversal sequential, which shows all the volume reversals. This is sort of a skeleton chart here. We're going to focus mostly on this, but I will show you examples of the others. There's the, let's see what's it called. It's the directional. I'm sorry, I was hitting the wrong button. So this is the second version of the volume reversal Metastock platform indicator. This filters out repetitive volume reversals, so only show you the ones that are still in force, so to speak. And then we have a 2-day version, and this is very confusing. We only created this because we found that when a VR is created, a volume reversal is created, you tend to get a movement a couple days in the direction of the volume reversal. So we figured let's put up a 2-day indicator saying that we get the VR, you get out 2 days later, and if it doesn't move in the direction expected, you're stopped out. So just as a mental note, I really don't use this much. I think it's something handy just to get an idea that there tends to be follow through for a couple of days, but it is one that we have created. So what am I putting up first here? I'm putting up the VR, the Vanguard VTI, which is on the sequential chart. So what you're seeing here, and the reason I put this up this morning, and we want to talk about it here, and this is what it looks like when you put up one of individual stocks or ETFs. You get a chart showing all the volume reversals, and you get a little message board on the left side instructing you on the most recent signal. And it just happens coming in today, and I'm circling it now. We got a negative VR in the VR sequential, and this is on a daily chart. So that's telling me to go short. So we're short the market here, and this is a trading comment. If we take out highs from yesterday, the day before, the recent high, then that would be our mental stop, but negative VR here. So a little black arrow you see here on, which is overlying the negative VR, translates instructions on the left side of the screen. It says VR signal, and it says basically get short, and it shows you where the stop is. So I put this up just because that's where we are right now. Let's see here. Let's see. Next chart. So the QQQ we put up as well. Negative VR posted last night as well in the QQQ. Instructions on the left say negative VR signal, and it's a short signal with your stop loss number put there in place. Just looking briefly at the chart, you get a sense of how these signals work. I know it's a little small on the screen, but believe me, this is what I use, and it influences my day-to-day activity. And if you just notice, just scanning briefly here, looking back into midsummer, a negative VR, of course, this is on the daily chart in the QQQ, and how we had a nice sell-off following it, more than just the 2 days that I referred to before. And it becomes a terrific trading indicator. And what are we saying here? This is what's influenced me over the decades. Volume precedes price. Smart money was selling, and it reflected in the negative VR. So let me define the negative VR for you a little bit here. So for me, that would be a reaction day on increased volume coming off a previous high point, which is the day before in this particular instance. So if you're coming down, you're breaking the low of the previous day, volume is increasing. That generates, in most instances, a negative VR. If there's an inside or outside day in between, that could confuse a little bit, but in the examples here, just a shift in volume and price off of a peak. Also, if you have a momentum indicator or a stochastic indicator, like I show at the bottom of the screen here, and if you're in overbought territory, at the same time, you're getting a negative VR, that helps give you a little extra confidence. You might want to ask all these colored lines are on the screen. It's very straightforward. I just put a 200-day moving average up there, a 50-day moving average, 150 and a 20, and I just put them up there for reference points because I know a lot of people look at them. But basically, this is what my daily chart looks like. This is really all the information that I really need for a technical trade. I see where my stochastic is. I see if I'm getting a negative or positive VR. Are we overbought? Where are we relative to the moving averages? And as you know, if you trade quite often, sometimes we move back to these moving averages and they provide support, or if nothing else, targets for where movement could take us. So I just want to get a little explanation here because I just jumped into a couple of charts here. This is the S&P spider sequential, which is the again the daily chart. A negative VR again formed yesterday in the SPY. And a little instruction on the side says negative VR signal short, and it gives you the stop. Stop tends to be the high from the previous day, and I would expect a pullback here. And the stochastic is certainly an overbought territory, though it hasn't turned down. But I'm willing to go with the VR, particularly when markets had such a huge run and the greed indicator is where it's at and so forth. If I'm wrong, I know I'm wrong pretty fast. I'm not telling you we're going into a bear market. I'm just telling you we got a negative VR signal. So I wanted to show you those three because those are the most current. And next day or two, if the market explodes and takes me out of the stop, then you know that it didn't work. But if it continues down, you'll find out the power of the little VRs. Disney, one of my favorites. They're reporting earnings after the close today. Stock's way down from where it was, well over the 200 level. Bottom line is this is a chart from a few days ago, so I'm not as current as the S&P and the VTI and the QQQ that I showed you, but I did want to show you there's some pretty good reliability with the VRs and the stock. I trade this, I guess, of most stocks. You're probably thinking I'm a little bit of a Walt Disney fan, which I am, but I tend to trade Disney probably more than any other stock that I have, and a lot of personal reasons for that, but also I've had a lot of success with the signals. And if you just get a copy of this or look at more detail at a later point, you'll see that there's a high reliability. When you get a negative VR and you get some follow through, and a positive VR, you get it up to for a few days, negative, you're down for a few days, and so forth. So it's really honest to the indicator. And over time, I've done very well, just trading it, whether I'm in and out in a couple of days or I stay with it. And what I do is I try to put up a weekly chart, and I think I maybe even have one here. So let's see what we have. We're going to go through a couple other examples first. So this is a directional daily for Disney. What this does was it just filtered out repetitive VRs in the same direction. And let's see here, then we have the 2-day version of Disney in the daily chart, which gives you that 2-day little signal, little blue notches you see on the screen, tells you to exit after the second trading day. Now let's go to the weekly. This is a weekly chart of Disney sequential, which shows all the VRs. And again, just terrific stuff here in terms of, I don't trade on a weekly basis, but you could see here, this was, back not too many weeks ago. I guess this was first quarter of the year, negative VR in Disney on the weekly chart. And sure, it just continued down and down. Negative VR continued down and down. So we had some nice confirmation of that big sell-off. I think this came after the proposed takeover of Disney exhausted itself, and the thing was Mr. Peltz was one of the managers, hedge fund people that were trying to take over the company. But this gives you a sense that when I look at a chart, I'll look at the daily and the weekly, for example, in Disney, and see, are we on a weekly sell signal, are we a daily buy signal, and so forth, and see if they're in sync. So that helps me out quite a bit in terms of my trading. This is a weekly 2-day. I just want to show you an example there. So we showed you the daily 2-day before. So this would be 2-week, not 2-day. This means 2 bars essentially. So again, I don't use this much, but it's something which is an added tool if you like to use it. This is the weekly directional. Interesting just pattern here where it filters out any repetitive VRs. So you want to check this. I try to use a sequential because I like to show all the VRs, since I am very short term in my trading, and I do want to see all the VRs. So let's look at some other stocks here too. What I really want to do is when we go through these few recent examples is open up the questions so we can pull up hopefully some individual charts for you as well. So this is Tesla on a sequential and a daily chart. And again, you can see some pretty good reliability here. Look here, this is, going way back to May of this year, all these little blue, green positive volume reversals down here as the stock was bottoming. And sure enough, it exploded as it did. But then after a big run here into the summer, negative VR came in and we had a nice slide. We had another negative VR here in September, had a nice slide. And then just before this big move to the upside, you had a positive VR here and a positive VR here, showing accumulation in the stock. So, of course, this is not up to date. It has pulled back here a little bit and actually went higher before it went lower. This is a few days old, but I'm trying to show you the import of the VRs. So this is directional for Tesla, which means that it shows only, it eliminates duplicates. So again, if you had 2 or 3 negative VRs in a downtrend, it wouldn't show that. It would only show if a new VR came in. So you look here back in September, negative VR, and it kept you in until positive VR occurred here. In which case, once you touch on the screen, you would see a message here on the left, this little expert advisor, which is what Metastock calls it. This little box explaining what to do when you get that little negative or positive VR. 2-day daily, I misspelled daily up there, I apologize. And this gives you a 2-day version of the daily. Let's see, weekly sequential. Okay, this is again Tesla on a weekly chart, eliminating repetitive VRs in the same direction. And then we have the weekly directional, this again, weekly chart. Here, weekly sequential, and I'm sorry, this is the weekly directed. That's a sequential that shows you all the VRs, and this is the directional filter out repetitive VRs. 2-day example here. Again, 2-day refers to 2-week or 2 bars in the chart. Let's move on to Costco, another one of my favorite trading stocks. I know it's expensive, but it moves and it's great. Great correlation in the VR. This is a daily chart. Great moves here, positive ER. I mean, a stock like this, can go from 275 to 300 in just a couple days. In fact, it just did that day before yesterday, went from 910 to 960 really fast. But the reason I show these to you is because it's a really nice correlation with the negative and positive ERs in terms of getting some follow through. And what they're saying, smart money jumped in, buyers came in, momentum changed, and we're following the volume. And we're not questioning the why, we're just following the momentum. And it could be a couple day trade, or it could be, a more near-term trade. But again, we're in it for the trade. Directional, here we go, Costco, filtering out repetitive VRs. And then you've got the daily 2-day version of Costco, showing you the 2 bars and the resumption. I mean, just to give you an example here, I sort of rushed over this. I'm just going to circle this one here since it's sort of interesting. This goes back to June. So you get a negative VR, and the 2-day version is saying 2 days later, get out. So you had a profit even though it continued beyond that point, but it followed the theory that we tend to get follow through following a VR. So it's just like an automatic little signal, say, hey, it's been two days, 2 bars, take your profits. And if you want to stay with it, that's a judgment on your own, of course, but it was created just for that purpose. So I thought that's something I wanted to explain a little bit further to you. Sometimes I forget about that myself. It's already been 2 days. Should I continue to stay with the trade? Sometimes it does continue, of course, but it sort of expands my trading theory about trying to grab profits when you can. So here's the weekly sequential in Costco, showing all the VRs on a weekly chart. This is going up to about 4 or 5 days ago. And then there's a directional filtering out the repetitive VRs on Costco. And this is a weekly 2-day or 2 bar on Costco. And we can try to focus more on some individual stocks when I get through these examples. So that's what I wanted to get to you first, to all of you, and particularly to Jeff, about showing you some of the examples here, and of course starting most recently with the negative signals that I got earlier. We can jump into some of the cycle stuff too, but I like to spend more time answering questions and going over some individual charts. But let me just go really back to the early part of the presentation. I know it sounds far-fetched, but I do a lot of what you might call geocosmic stuff in terms of cycles. You can see there's lunar cycles on the bottom and the seasonal cycles here. I was influenced, it was way back in 1972, Ian McAvity, who was a notable Toronto stock market analyst at the time. In fact, he was on Wall Street Week, and he talked about timing gold to lunar cycles. And he went on television. They didn't invite him back. And you might think that I'm a little crazy for bringing it up, but I'm going to tell you there's a correlation to it. He stated on TV that you would see highs near a full moon in gold. So it doesn't always work out that way, but I tell you what I've done is when I see a lunar cycle, full moon or new moon, and here we are approaching a full moon right now, November 15th, coming up here, markets tend to change direction within a couple of days of a lunar cycle. So I pay attention to it. And since 1972, I've been charting the lunar cycles, along with stocks. And if we're overbought coming into a lunar cycle, I pay attention to it. And if you go back and do a little testing yourself, you see there's a strong correlation. I also look at the seasonal patterns. If you remember March of 2020, how the COVID sell-off ended abruptly right at that time of the vernal equinox. So I always pay attention to these dates, the September 22nd, 23rd, the June 22nd in the summer, and December 21st, 22nd. Sometimes you see market change directions around these times. So I've been looking this now for a good, 40 years, and I got to tell you, there's definitely correlation to it. This is a study that was done, I believe, by McClellan a few years ago, actually showing the full moon and peaks in gold. And what I try to look at is looking at them as change of direction points. Apparently, there's he saw a correlation as well. So I put this up, and Thank you for that. But I just want to point out there's others than myself that are paying attention to cycles and their impact on your charts. Just because you don't hear it on CNBC or you don't hear it or read about in the financial press doesn't mean it's not a valid indicator. I also pay attention to what's going on in the sun, the solar flares. We saw some extreme ones in recent weeks that affected some of Elon Musk's Starlink satellites. We can't do anything about it, but I do track it every day. There was a most noted event back in September 1959 called the Carrington event, which literally wiped out. At that time, we didn't have advanced technology, however, but it caused fires in telegraph stations here in the U.S. And the solar activity has been increasing, so I monitor this. You can go to our website, spaceweather.com. I look at it. Again, nothing we can do about it, but if it's a super event, it could fry satellites and fry all our equipment. So something that I look at and I pay attention to. So I think we can go back to the charts now, Jeff. And I know I'm probably 15 minutes earlier, but I just wanted to see if anybody wanted to get some stuff up here, and maybe we can pull up the live. This is the live Metastock charts, and we can pull up some stuff if people are interested. Jeff?
Yeah, can we take a look at Netflix? NFLX?
Okay, is it NFLX.O, right?
Yes, yes, sir. Also, I think it might be good to talk about the moving averages that you use with it. Maybe you did already. I had to grab some lunch.
Okay, sure. I'll mention it again. No problem. Here we go. Netflix. Okay. All right, here we are. This is up to date. There's no VR here at the moment. Let's see here. So you go back to screen here. Right. So the most recent VR was a positive one. This is going back about 10 days ago. Okay. You have had a rising stochastic, but you are getting a little overbought there. So theoretically, unless we're getting a negative VR today, and of course you might have traded out before now, you would still be long the stock based on the most recent VR signal. So that's on the sequential. This shows again all the negative positive VRs, but looking at the screen, you can see there's some really nice correlation here with the VRs for trades. And again, all you're doing is following momentum based on a volume change. The green line here is your 200-day moving average. The blue line is your 50-day. We have the 150 and the 20 up here. That's the other two. The red one would be the 150, and this is the 20 in here. So as you know, stocks tend to pull back and tend to find support around the 20. Then they go to the 50, and then I use the 150 and the 200 as other numbers. It's almost like a self-fulfilling prophecy when traders are looking at these indicators. So yeah, that's the most current read on this one. I can pull up a weekly version of it. You want to do that, Jeff, or just a daily sufficient?
If you want to. We have a lot of symbols we can look at too. I was kind of curious as to what stochastics you're looking at. Is it 1233?
Okay. Yeah, 533 stochastic. I should have mentioned that. Okay. Yeah, I would do the 533. I want it as sensitive as possible. And ideal correlation would be if you get a overbought reading and you get a negative VR at the same time, or it's rising while you get a positive VR. You get one really close together back and forth, and you might get a little confusion here, but as a general rule, like the big one here that we're looking back here in the summer with the positive VRs, you were basing out and you're starting to come up out of the stochastic. So that was sort of cool. I don't use the stochastic as the trigger, but it's something I certainly like to keep an eye on and watch. And as a general rule, they seem to be in sync.
All right. Mike would like us to go to ERIC, which I believe is ERIC.O.
ERC.O?
ERIC.O.
Oh. Here we go. Chart, here we go. Okay, what we show, well, there's no signal here today yet. It's a little black line just shows where we are in time. Let's see here. all I can say here is that you had a most recent signal was a -1, and that was a bad signal, obviously, because it went down like one day, maybe 2 days afterwards, a little bit, but then the stock exploded. So you were overbought at that time too. So there was a positive VR before that, negative VR, and then boom, we had this big gap up. So I don't know if I would have been out or not, but that was a bad trade right there on that negative VR. Though we have seen some other very good indicators just prior to that. Prior to that, you had a positive and it ran up 3 or 4 days. It looks like you had a negative and it went sideways for 2 days and didn't follow through. But right here, I would say it looks overly overbought to me, and you got a gap that might be filled, and you have support down here, the 50-day. Maybe you pull back, but I have no confidence here for the trade. If we had generated a negative VR up here somewhere, which we didn't, then I obviously been more confident on a short play, but I have no trade here at the moment.
Okay, let's. Willie would like to look at JD.
Sorry, which one?
JD.
JD?
Oh, go ahead and just type in JD. Don't go to the Power Console. Just type in JD, and what should pop up is a console. Well, okay. Let me just do this for you real quick. Let's see. Let me find JD.
Stock JD, so I don't know what that is. What that
JD.
is?
Oh, it's JD. .com. Yeah. JD.O is what we're looking for there, Mark.
No. If you said it, I didn't hear it. I apologize.
Oh yeah, JD.O.
Sorry.
Yeah, you're not. No worries. I'm here to help.
Okay, I'm not familiar with it. Okay. This is your daily sequential in it. And all I can see is that, before we had this recent sell-off, you had a nice negative VR right off the top. You had a stochastic that was trending down. Then you had another negative VR and you came down following that, and you still had the stochastic moving lower. So it was a really nice trade here. And then we start getting a little series of positive VRs as the stochastic was rising. So it traded up a little bit, couple of days, a little bit. There's a lot of confusing signals here. You get a negative VR, positive. So it's sort of mishmash in here in the last 2 or 3 days. But, it had overall some very nice trades here on the short side, 1, 2, 3 on the long side. And you might have been messed up on one of them in here in this, I guess I would call a congestion area here of some kind. So right now, what would I do? I had no signal. No, most recent signal was a positive, and then it came right down and would have stopped you out on the very last bar or two. But generally speaking, it had an overall pretty good indication. Now, way back here before it took off, literally at the low, you had a positive VR, you had a negative the day before, but volume switched positive literally the next day. And then, of course, it started to take off and had this huge move. So I would say the stock's good, has some good correlation with the VRs. In terms of current position, I have no current position in it. I would not take any action here.
Yeah, it's trying to decide what it wants to do at this point. Let's see. Timothy says, big time Astro guys, Alan Remnick and now Alan Larson. We're, I guess, big time astrologers.
Yes, and are they here listening?
I can hear you.
No, are these astrologers part of our Metastock listening group now?
No, I think Timothy was just referencing some big time astrology guys.
Well, a good friend of mine is Ray Merriman. He's actually
he's awesome.
Yeah, Ray's here in Scottsdale. He used to be in Michigan, and I'm looking forward to his Christmas party here at the end of the year. But yeah, he's terrific. Arch Crawford is retired. He's down in Tucson. He's a good friend of mine. And when I was on the floor trading, this is anecdotal. One of the reasons I even pay attention to these guys, and it sounds crazy, but when I was floor trading back on the CBOE, I ran into an astrologer on the floor, and he was telling me, I was actually laughing at him at the time. I thought it was ridiculous. And I remember we were trading one afternoon. He says, well, watch the market at noon. It's going to change direction. And sure enough, it changed exactly at noon and changed direction. It was based on some lunar cycle that he had identified. So I start paying attention after that. And then I start going to some meetings, and Arch Crawford and Ray Merriman and all these guys were there. Even Bob Prechter showed up, I think, at one of the meetings. And this is way back in the 1970s, early 80s. So this is not a pseudoscience. You have to put it together with all your tools. You have to look at your metastock charts, you have to look at your cycles, and you have to make a trading decision if these are any use to you. But these guys have been around forever, and astrology's been around, what, thousands of years. So it's not a pseudoscience. So many people think it's ridiculous. I found over the last 45 years, you want to at least listen to these guys and, factor it into your strategy if you find appropriate.
Martin wants to look at SQ.
Just SQ.
Just SQ, yeah. I checked. It doesn't have a dot after it or anything else.
Okay, no dots. Okay, thank you. All right. All right, what we got here? Well, as of today, this is where you are way up here. There's no signal here. It's coming, it's really, real extended. Pretty decent correlation, except I can say that the most recent trade, if I can find it here, the most recent trade, there was actually a negative, and then you were stopped out and it took off here in like a couple of days. But prior to that, you had a positive, a nice follow through for a day, a negative down for a couple of days, a negative down for a couple of days, positive up for 2 days, negative down for 3 or 4 days. So, seems to have pretty good correlation on, a couple of day follow through on the VR, with the exception of the most recent signal here, which I'm assuming was a, bad signal. Must have been some news or something. It just shot it all the way down to the 50-day moving average. But when it reversed higher, it didn't provide a positive VR. So it took off on lesser volume on the last couple of days on the move. So, well, overall, there seems to be really good correlation on the VRs for trading purposes. That's really what I use them for. I mean, back here, this is going way back. It was in February. You had a positive VR, and then it explodes on a huge gap the following day. So the opposite of what just happened here in the most recent example. But just looking at it, I can see some really nice. You can't follow everything, Jeff. I mean, you follow a few stocks you like, and you're going to miss some and win some. But at the moment, this one is, has some good correlation. It's good. It's a good one to follow with the VR.
Carlos wants to look at UAL, which is a stock I'm holding right now.
United Airlines.
Yep.
Is there another symbol? Doesn't come up.
UAL. Yeah, let me look at it real quick. Let's see, UAL is UAL.O, Mark.
Those .O's, I'm telling you.
Yeah.
Gotta know your O's. P's, Q's, and O's. Okay. Well, you got a negative VR today. But before that, positive VR, and a nice move for 3 or 4 days. Positive VR, moved up. Super VRs down here. Look at this. All these positive VRs before this explosive move. Your stochastic is overbought, so I don't know. I'd sell it.
Okay.
That to be my opinion. After a huge move, negative VR, you got how many? One. You got a gap here, and I know there's no gaps below that, but you got a gap to fill. So maybe it pulls back to the gap and continues to run. But you've been long up to now, I would say, and selling today. That's how I would read the chart.
Brad actually kind of brings up an interesting question that I kind of like to talk about. What kind of money management rules do you have for the VR signal? So, do you have a general rule of thumb for like a stop loss, for example?
Oh, absolutely. And I thought I mentioned that a moment ago. Maybe I'm just talking too fast. So as a general rule, is that you use the high or low from the previous day as your mental stop. So if I'm looking at this chart here, if I could just, pick something out that's clear, you had a positive VR here, and this was on October 3rd, okay? So you would use the low from the previous day as your mental stop. You're coming off this little low, and now you're generating this positive VR here. So the low was, looks on the 3rd, was 54.73. So you had a positive VR the next day. It rallied up to 56.21, had a positive VR, and that would tell me I'm long, and the stop is the low from the previous day, because you're measuring from the low and you're creating a rally day, and you're taking out the high from the previous day. So the VR definition would be a rally day. I mean, you're taking the high out from the 3rd here on the 4th, increasing volume, and you're using the low from the 3rd as your mental stop. So that's the way I generally do it. If that VR is there, but the low from the previous day comes out, I stop out. Conversely, if you're coming off a high on a negative VR, and as an example here, let's use this month of July. Your negative VR is here. You use the high from the previous day. In other words, you're coming off that little peak, and selling is unfolding right off that peak. So that tells me smart money wants to get out for trade or other purposes. So again, this high, that would be the July 31st high, would be your mental stop, and play it, whether you want to play it for 2 days or more of a move. So a negative VR, use the high from the previous day. On a positive VR, use the low from the previous day as your mental stop. That's my general guideline. Of course, you've got high price stocks that are 10, 20 point swings. You're going to have a bigger stop than you are, a stock like this one, which is a $50, $60 stock, where you might have a 1 or 2 point stop measuring from that high or low.
Now on this one, I noticed this is a VR sequential, and so it counts out the VR, VR2, VR3, VR4. Do you give added significance to it as that number gets higher and higher, or how do you look at that?
We get continued VRs on the way up, you mean, like we see here?
Yeah. So is that VR3 more important than the VR2?
Yeah, no, I don't have a rough rule for that. I just get happier if I'm in the stock, and it just gives me more confirmation of the trend. Just between you and me, if you get a huge move like a stock like this, I tend not to hang around that long, because I'm not really an investor in most of these. I'm mostly on a trade, but definitely we've seen examples where a bunch of negative VRs precede a down move, or a bunch of positive VRs precede a more sustained up move. And the more you see, I guess, more the merrier. I think I showed a recent example of a bunch of positive VRs before a big move. I think it was Tesla back in the summer, where it showed a positive VRs. In fact, instead of looking for it, let's just pull that one back up again. Let's see, TSLA.O, right?
Yeah, that is correct.
Yeah, okay, I got the little O in there. I think I showed that on a.
It's spelled wrong.
previous slide.
TSLA, you've got O.
Oh, yeah. I'm thinking O. I'm sorry. Too many O's.
I'm here to help. It's all good.
Too many O's, Jeff. Okay, open it up. Let's see here. Yeah, see here, this is what I was referring to. There are all these positive VRs. This was in the May-June period in Tesla, before it had that big move. And something like this, I get real excited about. I don't know when it's going to go. As far as I'm concerned, it could have taken off at any one of these points, but just a series over the time. If you had been buying in there, you really would have been okay, because they never really dropped. But if you get a series of stuff like that, that's more what I like to see, rather than a progression as it's going higher and higher. That makes you feel better. But this is where you get your significant turning points. We get an accumulation in a period like that. So I've seen the opposite. We get a lot of negatives when a stock is topping out before it actually breaks. But that was sort of the thing I wanted to mention.
Brett has another good question, and I kind of love getting into the details, because you learn a lot in the details. But when you get a signal, when you get a VR signal, are you buying at the open of the next day, or are you looking for some sort of a confirmation after you get a volume reversal? What exactly is it that's going to signal?
I generally jump in the day I get it, because
Okay.
I don't know, because I've seen it, if you wait the next day, I'll just show an example right here. We're looking at Tesla here, and this was back in April. you're getting a VR. And if you waited to the next day, you're buying after a gap. So I buy exactly when I get the signal, because you could have a gap and you could have a profit immediately the next day because the smart money was buying right at this point. So yeah, I act on the VR day, and again, the stop would have been that low from the previous day. So I'm a little circling that little VR. If I was wrong, I've been out from that low immediately on the following day. But in this case, if I had bought it, I was rewarded immediately with a unit, and I would have taken the profit. I know it continued up, but when I get a gap up on a trade like this, I grab it, so I'm not investing in the thing, and that's better than a 2-day move as far as I'm concerned. But yeah, the answer is use the VR when you get it.
How long do you generally hold an average trade?
Day or two.
Okay.
Me personally, this is a trade. Now I'm not talking about that I love Occidental Petroleum, or love United Airlines, or I love Disney, or I prejudices. I do hold some stocks that I just like for other reasons, but yeah, they're all trades. I mean, again, this goes back to my floor trading decades ago, and I was spoiled. All my trader friends closed all positions out, same day. Here, I'm actually holding, I'm waiting for a day or two. So I'm actually breaking their rules. I just got trained, grab the money, look at this as a job. You're trying to make money every day if you can. Get paid every day was what they really said to me. And then come in fresh the next day and look for your next trade. And that way you're not worried about surprises overnight or whatever. So they looked at it as a business, and very successful at it. And they would grab their checks from the clearing firm every night. This was on the CBOE where I was at the time. And, even though I've departed from that extreme strategy, grabbing it immediately, though on occasion I will grab a trade immediately the same day if it's a real nice trade, and, revisit the next day. But I tend to be, to answer your, I'm answering long-winded, I tend to be in a position of, a couple days the most. That's just sort of, that's me. That's just me. I just like ringing the register, and moving on.
Sure.
Yeah.
Do you generally do you wait till the end of the bar? So is there a chance that the VR might repaint? You get a signal, but the conditions aren't still met, and so you don't have it by the end of the day?
I wait for the VR.
Okay.
In other words, I don't want to. I mean, there are times where it'll take off without a VR. Obviously, it'll be short the number of shares just by a few small amount, and then you'll say, "Oh, you wish you took it. It was just almost at the VR." But as soon as I see that little, green arrow or a little red arrow on my daily charts, I immediately, I take advantage of it. I might try to fine tune it during the day. Maybe it'll pull back a little bit before I buy it, but I'm in a buy mode as soon as I get the signal. So what I did was with the indexes, as soon as I know the market's been all over the place. I don't know where it is this moment, but as soon as I got the negative VR, I instructed clients to short the index. So we'll see what happens here by the end of the day today. Is the market down or up now, Jeff? I'm not even watching it.
Yeah, I don't. I can tell you. Let's see. Before I do, though, I actually haven't been watching it either because I've been watching you. Let's see. I had a question. Well, I'm kind of looking. Craig wants to know if you're what moving averages you're using again.
Yes. Okay. So the green is the 200. Okay. The red's the 150. The blue is the 50, and this other, I guess it's orange, is the 20.
Okay.
I just find these tend to work a lot, and they become like self-fulfilling targets or support levels. So, traders love the 50. They say if the 50 is taken out or broken, that's your like main tool. But we also tend to find support or resistance on the 20. And of course, the big one, the 200-day is, most important to investors more than traders. But I put them all up because I just want to see what everybody else is looking at and talking about. So my entire world is what you're looking at here. In other words, I don't have any other indicators. Of course, I listen to the news like all of us do and so forth. But am I getting a VR? Is it stochastic up or down? Is it above or below a moving average? Does it look like a trade? And as a general rule, if you're extended like here, I'm circling Tesla here, negative VR. It's well above the moving averages. Stochastic is overbought, sure looks like a trade. And, over the next few days, it did pull back a little bit. So, and I didn't get stopped out either. It's sort of interesting. It rallied the next day, but it never took out that high from the day before, the negative VR. So it still said it was valid. So you still stayed short. And then you got another one. And you went down even further a few days later if you had stayed with the trade. That's where that stop is so important, because you could say you got a negative VR and then it rallied on you, but it never took out that high from the day before where the VR was formed. So you were not stopped out, and it paid off if you just stayed with the discipline, stay with that theory that, if sellers are coming in off of a peak like here, this is on September 30th, and you short and you get your little negative VR signal, you don't want to see that high come out from the previous day, and you're in good shape. And of course, it was just a trade for a couple of days, and then you got a little VR, and positive VR came in, but you got your little trade in there. So, it's tough being disciplined if you're, watching every tick and everything. So the whole idea, it's sort of a daily signal, it's a daily signal that could have followed through for a day or two or more following it. And it works more than it doesn't. But, sometimes you get, look, this is Tesla just recently here. This is up to date. The one I showed you earlier in the presentation was a chart from a few days ago, but I just noticed you had a VR here on November 5th. And look at the explosive move we had. If you bought that day and you bought when you got the signal, if you waited, you would have got caught on this gap the next day. So by acting immediately here on November 5th on that VR, knowing your stop was a low from the previous day, look at the nice trade you had within one day. And of course, you decide you want staying with it or what. That's a decision you would make. Me personally, I would have grabbed it. That's just me. I got a VR. I'm paying, 246 for the stock, and next thing I know, it's 280. Are you kidding me? I'm out. Even though it may go, as we know, to 350, I wasn't an investor. I was a trader, and that's what I'm trying to, point out here. You can make your own decisions and stay with it for other reasons, other indicators. Elon Musk said something or something happened politically, and you want to stay with the trade, but just look at that nice little trade you had. That's really what's so powerful about the VR. And it also teaches you, don't hesitate. If it comes up on the screen and you're in the mood to trade, you grab the signal and know where your stop is.
So just to answer your other question, right now the S&P is at 598.29, which means it's up slightly from yesterday's close, 1.389954. So it's up.
Are we stopped out? Let me see where we are on it now. Let's see. So the spider, SPY. Let's see if this is up to date here. Let's see. Spider comes up, right?
Uh-huh.
Okay. So anyway, we're short. So our stop is 600.17. I think. Where is it now? I don't know. I don't have my live screen on.
Yeah, no, it's 598-ish when I was looking at it.
Okay, so we're short the S&P. Stop is the high from the previous day. The negative VR came in yesterday, so just above 600 is our mental stop on the trade. And I would think you should be good for a pullback, at least to the previous highs, which is what, that 586 area. I'm looking back here where the previous highs are. That's 589. So I would think you're looking at a few points here on the short, on the spider, keeping a stop at that 600 level. That's how I would trade it.
A couple questions that are very similar about will this work intraday, like in lower than daily time frames?
Yes, but I don't have the I guess the fortitude to do it. We can put up here. I mean, we can play with it right now if you want. I know, how do we put up 5, 10 minute, 15-minute charts? It doesn't give me the option here. I've done it elsewhere.
We have to get you installed with a different version. Actually, Mark, you've got the daily version.
Right, I can't pull up but I have clients who told me they use the VR. Maybe it was another software. I don't know where they did it because I can't pull up.
We've got installed as the daily version. So let me.
Yeah, but it does work on intraday basis, but it's too fast for me. In other words, I'm not making any excuses. I'm 76 years old.
Sure. I got you.
I, 30 years ago, I would have done it, but a daily chart's fine for me.
Anna wants to know, like, how many positions are you generally in if you sell it every day?
Up 2, maybe 3 the most. I can't follow more than that. Yeah, keep it down. Ideally 1 or 2 and maybe 3. That's my attention span. I don't want to be all over the place. Today, before I got online with you guys, the stock I was trading today was Disney, and I traded it, 2 or 3 times during the day, just intraday back and forth. But my bias was higher because it was in an uptrend, and earnings after the close. So I traded Disney a couple of times today, but that was the only stock I traded today. But I'm not. Market's closing now, so I can't trade anymore.
Last question. I think we have time for. We have a lot of questions, but the last one we have time for. Do you ever trade the VIX?
I look at it, but I don't trade it now. I should, I suppose, right? I don't.
Yeah, I mean, I don't either, to be frank.
I mean, we can put it up, look at signals. What's the symbol for the
ETF? I believe is VRKX.
VRK or VIK?
VRKX.O, I think is the symbol for the ETF.
VRKX. You're teaching me stuff now, Jeff. I probably start trading it now after I discover it with you. VRKXO didn't come up.
Yeah, I don't know what the symbol is offhand for the VIX ETF.
If I see a signal and it's an ETF and I could trade it, I guess I could take a look at it. I just, I'm more into the indexes and the individual stocks. I know a lot of people trade the VIX, and I see others put it up on their screen. I just never got into trading the VIX itself. I just read it and say, oh, is it overbought, oversold? I never held much value in it in terms of market prediction, because there's a lot of discussion about what's overbought and oversold in the VIX. But I guess if I see a signal with VRs, I could do it. So email me or let me know what the symbol is, and I'll follow it.
Okay, I will. I'll look it up as soon as we're done here. But that was a fast hour. We're out of time. Last question.
Thank you so much. I wanted to leave time for the charts. I really appreciate that, because we really haven't done as much of that as we should be.
It's fun to look at charts. I'd love looking at charts. The moving averages you're using again came up as a question. I'm going to see if I remember. 20, 50, 150, and 200. Is that right?
Correct.
All right. See, now I can even prove I was paying attention. So there you go.
Thank
Mark,
you.
Thank you very much.
Well, thank you, Jeff. Like you said, it was a fast hour. Thank you so much. You're doing a great job, Jeff. I don't know how you have the attention, how you keep your attention span for 5 days, all these hours, but you do a great job. Thank you.
Oh, can I get that in writing? Particularly the attention span part.
You're the best. I mean, I couldn't sit there, 5 days, 5-6 hours, but you make it fun for everybody, so I can see. And then you do take your lunch break, so that's cool.
Yeah, you got to eat. All right, thank you, Mark. I appreciate it.
Thank you.
A little bit about
Bye-bye. Thanks, everybody.
And how to get it.
Thank you. Bye-bye.
Thank you. Bye. All right.
Bye-bye.
I'm gonna do this. All right. So as Mark had talked and showed, here's the VR Trader Toolkit. Wow. Always makes me pull screen sometimes when I do that. Let me try and kind of fix that real quick. Yeah, the VR 2-day, the directional, the sequential, those are all included. We are doing a special promotion. If you want to get the toolkit to give it a go, it's a monthly subscription. It's $99 per month. There's no commitment to keep it. We'll throw in a free trial of Metastock if you want it. If you buy a month, we'll give you the second and third month for free. So to do that, give us a call, 800-882-3040. Go to metastock.com/saleschat or visit us on metastock.com/conf-promo. So there you go. I want to say thank you real quick to one of our sponsors, CMT Association. You can find out more about them at cmtassociation.org. I've said it a few times already, But if you want CMT at the end of your name, or if you want to manage money, or if you want a really good accreditation, the Chartered Market Technicians Association is really the only people that really do it. www.cmtassociation.org. A big thank you from us at Metastock and me personally for CMT for sponsoring today's event. And Greg, it's prize time. Oh, you ready?
All right, I'm raring to go.
Not only is it prize time, it's prize of the day time.
Oh, all right. Let's hear this.
Which means, you know what that means. We've been doing this for a couple of days together. You know exactly what that means. So somebody's going to get our award-winning Metastock program.
Oh, okay.
You want to talk just a little bit about what that is?
Oh, I'm sorry. Talk about what Metastock is specifically?
Yeah.
Okay, I'm sorry. So you pulled me out of another thing I was doing, as I'm having a hard time transitioning back to this. Yes, Metastock, of course. Metastock is software, a data package for active traders just like yourself, self-directed traders that want the information they need and they want to be able to find it when and how they need it. And there's
So we're going to give away 3 months
and a real-time version. And I'm sorry, is that enough?
Yeah, that's good.
Yeah.
It's also, I might have mentioned it, but it's also been rated #1 in its price category for 3 decades. So,
Yeah, there's that.
Yeah. We're also
And
going to throw a comment, I'm sorry, Zenith. We talked a little bit about Zenith throughout the session. It's great for fundamentals, news, research. Very comprehensive, very similar to what you'd get if you subscribed to Bloomberg, but it's not $1,800 a month. In fact, it's much cheaper than that. And if you're the prize winner, you're going to get that as part of it. We're also going to throw in, Mark just talked about his VR Trader Toolkit. I'll throw in 3 months of that too. And as with anybody that gets Metastock, we'll still give you unlimited support from our really good Utah-based support team. We'll give a white glove installation appointment. We want you to keep it. We want you to be using it to get good trades, all that kind of good stuff. So we're going to give you that as well. And that's the prize.
That sounds like a pretty dang good prize.
Actually, what I'm going to have you do is we usually do this one based on people that have asked questions today.
Okay.
And so what I'd like you to do, actually, I'm just going to do it. I'm going to go ahead. I scrolled down to the very bottom of the chat. I'm kind of looking the other direction so that I can't be, influenced. So I'm showing all the questions for today. I'm just going to scroll up until you tell me to stop. I'm going to start scrolling. I haven't started.
Oh, okay.
I'm going to start scrolling now.
Stop.
Brad won. Actually, I didn't get very far up in that list. So Brad just asked if I could ask Mark a question. And he had a lot of questions throughout that presentation. Brad, I think you're a Metastock user already. In fact, I'm pretty sure of it. So what we will do is add the VR Trader for 3 months and add 3 months to your subscription. So
I got pulled away a little bit during Mark's presentation, but what I saw, I really enjoyed.
Yeah, he does a good job.
It's good to pull up charts and just check it out and get the.
I like just looking at charts. Yeah.
Yeah, I enjoyed that.
Let's see. That's Brad. Congratulations, you're the winner. And thanks for using Metastock. I'm pretty sure you're a Metastock user. I know it. All right. You know who else is also a really good speaker?
Jerry Allison.
Yeah. How'd you know I was going to say that one? Okay.
Because he's waiting online right now. And he's also one of my favorite speakers because who doesn't want to hear about more efficient ways to pay our, I'm trying to think of a good way to say avoid taxes.
But yeah, there you go. That's a great way.
To say it.
It's a great
I'm
way.
going to go ahead and formally introduce you, Jerry, and then we'll get you started. But Jerry, let's see. Gosh, we've been working with Traders Tax Accounting, or Traders Accounting is actually the name of the company for a long time. Like I was in California, which would have put it at least 15 years ago. What's always been really interesting to me is kind of like how interesting taxes can be when it comes to the impact on your bottom line when you're trading. And I remember the first time we sat down and we're going to do a tax presentation. I'm like, oh boy, here it comes, right? And I'm sure. What I was really amazed by is not how entertaining it was, how many questions we had, and how much of an impact it is. So I guess what I'm saying is you should pay attention right now. Jerry always does a really good job of kind of breaking this down, explaining to you kind of the the benefits, the cons, kind of breaking that all down for you. So Jerry, let's go ahead and get your screen shared, and we'll get you going.
All right, you guys have flattered me, haven't you?
What's that?
You have really buttered me up this time, haven't you?
Oh yeah. Well, I should butter you up every time. I really do think you do a great job. So.
All right. Well, thanks, Jeff. I appreciate it. Again, my name is Jerry Allison. I am a CPA with Traders Accounting, and I've been doing this for quite a while. And it's my pleasure to be here talking to Jeff and everybody else about how to actually minimize your taxes, avoid paying taxes if you want to use that word, but that's fine. I am going to cut my camera off so that we can get into the slide, our presentation. Now, you'll notice that the title here is Tax Strategies for Traders 2024 and Beyond. So what we're going to cover here is not just some things that you can do for 2024, but we're also going to get set up for 2025 as well. And so it's very important that we start thinking about this stuff. I mean, tax season's just right around the corner. Here we are in November. January is not too far away. You'll be getting all your tax documents, and it's time to start thinking about this stuff and thinking about the future as well. But before we get off into that, I am going to do a disclaimer here. To the best of our knowledge, the information given in this presentation is accurate as of the presentation date. Today's date, November 13th, 2024. Sorry about that. Tax changes happen constantly. So prior to using this information, please consult with a tax professional. And I'm going to address tax changes at the end of this presentation here because we did just have an election and I want to touch on that a little bit. This presentation does not establish a professional or confidential relationship between you, myself, or Traders Accounting. And Traders Accounting is not a law firm or a CPA firm. So the information provided here should not be construed as legal or tax advice. So we made the lawyers happy now. So let's go on to our contact information. And the first thing here is a website. And you might want to write this down. It's www.tradersaccounting.com/MS1124. If you're wondering how we came up with that, that's Metastock 11 for November, 24 for the year. So MS1124 is the page that you want to go to. Now, when you go there, you can actually download a free ebook. No obligation on your part whatsoever. You can download that ebook and it will tell you about what I'm talking about today, but it will also give you some other information about maybe a little deeper into entities and things like that. Our phone number is 800-938-9513. If you'd like to call us, we would love to talk to you. And if we can help you with some consulting or taxes or planning or bookkeeping or whatever it is, setting up LLCs, we'd love to be able to do that for you. And of course, our email address is learn@tradersaccounting.com. And I will put this information back up at the close. So let's go ahead and get into the presentation. We're going to talk about some basic information. And in the upper right-hand corner, I've got a little graphic that says Business 101. And you may say, well, what business? Why are we talking about this? Well, if you're going to be trading seriously, you need to think about this as a business. If you go to Publication 550, Publication 550 is our go-to manual, if you will, with the IRS. It talks about every type of investing. You go from interest to dividends to OID to bonds to stocks, options. It talks about everything we're talking about here today and in much greater depth. And if you want to go to the IRS website and you can type in their search engine, Publication 550, you can download that to your computer or you can read it in HTML format and read it online. It is rather lengthy, but it contains everything that we've got or need about trading, if you will. Now, one of the things it mentions, and I'm going to come back to Publication 550 in a little bit, but trading, if you're going to start deducting expenses and you're going to really be serious about it, publication 550 pretty much it tells you you need to treat it like a business. And so we're going to have a little business 101 right here talking about business, because business just does not concentrate on the revenue part of it, the income or the gains that you would earn, but it also talks about the money going out. And so the point that I want you to understand here is be concerned about cash flow. Now, what does that mean? Well, that means you have to be concerned with not only cash coming in, but cash going out as well. Now, all of you are in this seminar, in this series here, in order to learn how to trade. You're going to have a trading strategy. You also need to have a strategy for your taxes. It doesn't make any sense to have a plan to be able to make the money, but have no plan on dispersing the money. So we are going to walk through today and talk about plans. But you need to have something in place to help you, so you're not scrambling around at the last minute, like on December 31st, trying to figure out how to minimize your taxes or what to do and to help with your tax bill. So you need to be concerned about that tax flow, money coming in and money going out. Have a plan. Second thing I want you to be aware of, and this is another business principle that I've taught in my classes. I used to teach a while ago, and then I want you to make sure that you make financial decisions based on financial need or business needs, not the tax code. Once you start worrying about tax code, then you have to start changing your strategies, whether it's your trading strategy or your tax strategy or whatever you want to call it. But you make your decisions based upon your business needs, and you put the tax code to the side. That's another reason for setting down a plan. You have a plan that you follow to invest. You have a plan that you follow for taxes and spending the money. But you stick to that plan and get the emotion out of it. If you need something for your business, go out and buy it. And that's perfectly legitimate outflow for cash. However, if you're just going out and spending money to get a deduction, that's a problem. And I see clients all the time, they say, well, I need to go out and spend a bunch of money in order to have a deduction. No, because you end up spending more in the long run, quite frankly. I've had clients come up to me and say, you know, I've had a really good year. I'm going to stop trading because I'm making so much money. I say, no. The idea here, it's fine to give the government, let's say 30%. If you're making money, you're still keeping 70%. So don't make your decisions based on the tax code. I've seen people trading that slow down or change their strategies for trading because they were afraid of the taxes, and they screwed everything up as a result of that. Don't do that. I know you're very familiar with getting the emotion out of trading. Well, let's get it out of all your business sense too. Make a plan and make your business decision needs, but don't do it on the tax code. So you need to be aware of all your tax and protection options, and this is going to be kind of an outline right here of what we're going to cover today. First of all, we're going to talk about trader tax status that allows you to actually deduct expenses on your tax return for trading. Now there's some qualifications here. We'll get into that a little bit, but that allows you to deduct those things and get refunds back from the IRS. Also, we're going to talk about the mark-to-market election. Now, trader tax status applies to all traders if you meet the qualifications. Mark-to-market only applies to stock and options traders. It's very limited. So we'll talk about that, and that'll help you avoid wash sales and get around the $3,000 limitation, things like that for losses. And finally, we'll talk about entities. There's a lot of information out there that talks about, oh, well, if you set up an entity, it will change your tax brackets or it'll save you money. Well, no, it doesn't change your tax brackets. It can save you some money, but you need to understand the mechanics of that before you start doing it. Just don't take anybody's advice and say, oh, and jump out and get an LLC. That's not going to work well. All right, well, let's go ahead and get into the meat of this thing. Let's talk about trader tax status. Trader tax status is a choice. Yes, it's a choice. You can choose whether to do it or not. That allows any entity, and that includes an individual, individuals, S corporations, partnerships, whatever it is. It allows them to deduct trading expenses provided the criteria are met. Now, here's what happened. I'll give you a little historical perspective. The IRS in publication 550 set up the criteria for deducting expenses. They set up the criteria for trader tax status. And basically they said you have to be somewhat dependent upon the money coming in. Either you have to live on it totally or in part. You can't take significant time off from trading. In other words, you have to treat it like a business. Here comes that business thing again. So you got to have a little bit of a business mindset. I'm not saying you have to go back and take courses at a college or anything, but you do have to have a business mindset. And so if you meet these criteria, then you can deduct expenses. However, they don't want, the IRS doesn't want anybody deducting trading expenses. You know, you could make one trade and then start deducting $20,000 worth of expenses. And no, they're not going to let you do that. However, the qualifications in publication 550 are extremely vague. And when things are vague in the tax code like that, they usually end up in court. And so what we have are some court cases that actually define levels at which a person can take trader tax status and deduct their expenses. The first court case said there have to be at least 720 trades in a year. Now, some people, that's quite easy to do. Some people get that in a month. I've got clients that do that in a week. They get into automated trading and stuff like that. But, you know, swing traders, that might be a little more difficult. But 720 trades in a year shows that you are very actively in the market. You're actually doing a lot of trading there. So the court came up with, you know, this is one criteria that you have to meet. Another criteria that needs to be met is there needs to be trading in over 75% of the trading days per year. What the court is not going to allow, or the IRS for that matter, is you to make 720 trades in 1 month and then take the rest of the year off. That does not prove that you are treating it as a business. So they also want you to be trading in 3/4 of the year. So yes, you can take some time off, but they don't want you taking a significant amount of time off. They want you treating it like a business. And if you own like a mechanic shop or a beauty salon or something like that, you're not going to take, you know, half the year off and still treat it like a business because you won't have a business. So they want you putting in that time as well. Now, the evidence for these first two are basically your monthly statements and your brokerage statements. So if you ever get examined by the IRS, you can hand them those and say, there you go, count it up. So those are easily proven if you need to. The third criteria that has come out of a court case is you have to be spending over 500 hours in trading, research, and education. Now, this one's not easily proven because it doesn't show up on your statements. So we suggest you keep some type of a log, whether it's a written logbook or it's a Excel spreadsheet or whatever it is. You use whatever you want. It's not the format that's important. It's that you make the effort to actually show that you're keeping the time. And then if somebody has a question, then they can come out and you can pull this out and say, hey, here's the time, here's my time log, you can look at it. Now, the 500 hours, not just in trading, a lot of you do research. I mean, you go out and you research the stocks or options before you invest in them. Great. But it's also education. This webinar right here, you could use that because you're talking about trading and taxes. When the last session with the gentleman that was hosting there, if you watch that, you got an hour right there. So you keep track of what you're doing. If you go to YouTube to watch a video, keep track of that. 500 hours is actually nothing over a course of a year if you just keep track of it. Now, one caveat here before we go on, the tax savings that you get depend upon your current tax bracket. I have a lot of clients that when I coach them or when I consult with them, they ask, well, is there a specific tax bracket for traders, or is there an optimal tax bracket or whatever? And no, it's actually a lot of cases, it's confined to your current tax bracket, whatever that may be. So if you're deducting expenses and you're in the 37% tax bracket, for every dollar you deduct, you're going to save 37 cents in taxes. However, if you're in the 15% tax bracket, for every dollar you deduct, you're going to be saving 15 cents in taxes. So it does matter as to your current tax bracket and how everything shapes up. But I encourage you that if you meet those qualifications, go ahead and write those expenses off. It's very important that you do that. You'll get more of a refund that way, and you're not paying as much, obviously, to the IRS. Excuse me. So this is very important that you do this. However, there are some warnings here, and that's with anything of the IRS. There's some warnings, and this is the first one that I'm going to give today. First of all, a person who deducts their trading expenses on a personal tax return must use a Schedule C. Schedule Cs are small business returns. And for a trader, they don't record the gains that you have or losses that you have, but they do record the expenses. And there's problems with Schedule C. Now, this is if you're trading personally, but also this applies if you have a single member LLC. This is one of the reasons we don't recommend single member LLCs. It kind of gets into that trap, what we're going to talk about in a little bit. But the following issues can occur. One, if you put a Schedule C on your personal return, whether it's for trading or anything else, your audit risk is increased dramatically. The IRS tracks those things. It's not a guarantee that you're going to get audited, but the IRS targets these things because they've been abused. Schedule C has been abused for decades. And it's a place where people just, put expenses, whether it's hobby expenses or whatever, and they try to get away with it. So just by using the schedule, you raise the IRS's attention. Again, it doesn't necessarily mean you're automatically going to get audited, but it is very important. And it does raise that risk. Number two, the home office deduction may not be obtainable. When you try to take a home office deduction on Schedule C, there are some severe limitations there. Only under certain circumstances can you take the full home office deduction. And if any of those problems or factors don't show up, then the home office deduction may be limited and in some cases completely eliminated. So you got problems there with the home office deduction and trading. Number three, there may be no asset protection. Now, this is not true with a single member LLC. Single member LLCs do give you asset protection, but these other things still are true for a single member LLC. But if you're trading just as an individual and you're on your personal return and you've got you got your trading portfolio there, if for some odd reason you get sued, you get into an accident or somebody gets in your property and the insurance doesn't cover it all, then they have access to your trading assets, and you don't want that either. So that could be a problem. Number four, it's difficult to justify having a W-2 job and being an active trader. I have a lot of clients I've talked to that, I've got this job out here. I'm working for this company, whatever company it is, but I'm also trading full time. And when you do that, the IRS has an issue with it. They don't like, for whatever reason, they don't like having a W-2 job and being an active trader. I haven't figured out why, but it just rubs them the wrong way, and it just kind of, again, increases your audit risk and level of difficulty with that. Now, so let me back up. So those are the four different things that trader tax status has a problem with. Now, we're going to, actually, I'm going to tell you a remedy for those here in a little bit, but when we get to entities, but those are significant problems. All right, trader tax status allows you to deduct expenses, trading expenses on your return. Now, let's go to mark to market. As I mentioned a little bit ago, mark to market election is for anybody that trades stocks and options. We do not recommend it for commodities or futures traders. There's reasons for that, and I'm not going to get into all of that, but it can really create problems if you are trading futures or commodities. So we just recommend this for stock and options traders. Any business entity or yourself as an individual can make this election, provided the trader tax status qualifications are met. That's why I started with the TTS requirements a little bit ago, the 720 trades, the trading in 75% of the trading days per year, the 500 hours in trading and research and education. I started with those because as an individual, you have to meet those before you can even apply for mark to market. Now, one thing that we've got going here is trader tax status. I emphasize that was a choice. You can choose whether to do that or not. You can actually, if you find that you met those qualifications back in 2023, 2022, even 2021, you can go back and amend your return and put those expenses on there. It's fine. That's not the case with mark to market. That is an election with the IRS, and it has to be made at a particular time period. I'm going to talk about when that's done here in a little bit. But what does mark to market do? Well, it eliminates the wash sale loss problem. Those of you who've been trading for a while understand what wash sale losses are. They're basically deferred losses. The IRS says if you trade something, a ticker symbol right now, and you get rid of it and you have a loss, and then you reposition yourself and get right back into that ticker symbol, that loss then moves from the first transaction to the second one. And so it ends up moving in time. Now, it may be just be a few minutes in time. It could be a few days in time. But what happens if you keep trading the same thing over and over again, these losses can keep moving closer and closer to December 31st. And then eventually, some of them may cross over December 31st and go into next year. Well, what does that mean? Well, that means you don't get the losses this year, so you have to pay taxes on stuff that you actually lost money on, and you hope to get that loss back next year. Well, mark to market eliminates that problem. And it doesn't really calculate wash sales at all. It looks at what your account's worth at the beginning of the year, what it's worth at the end of the year, calculates a true gain or loss, and that's what you pay tax on. None of this deferred loss or inflated gain stuff or anything like that. So it really can save some money in the short term. Second of all, the mark-to-market election eliminates the $3,000 loss limitation. Let's suppose under current, the normal cash accounting, that somebody loses $20,000. Actual $20,000 they've lost. Under normal accounting, capital gain accounting, you can only write off $3,000 of that on your tax return, and the remaining $17,000 carries forward to next year. So that's a big break. That's another deferred loss. So you only get $3,000, and the other 17 just kind of moves into next year. Mark to market eliminates that. You don't have a $3,000 loss limitation anymore. You get to deduct all the losses incurred in a single year. So if you lost $20,000, you'll be able to write off $20,000 in that year. I've written off for clients, the one I remember the most, probably over $500,000. And hopefully you guys never lose that much, but he lost it. We wrote it off, and any loss that overcame his other income was carried forward to the next year. But basically, we wiped out his taxable income, and then the rest carries forward to next year to eliminate any taxable income there. So the mark-to-market election is great for avoiding wash sales, so you know exactly what you're paying tax on, but it also is a good safety net if you lose money, so that you can actually get those losses deducted, you can get the refund back from the IRS, and you can take that money that you're saving and reinvest it. Okay, now this is an election. It is something that you have to notify the IRS of. So the IRS, the publication 550 does talk about the mark-to-market elections if you're curious about how it's made. But here's the timing. For any existing individual, which all of us are, and existing businesses, the election has to be made at the beginning of the year. So for individuals and C Corps, the first time that you can make the election, mark-to-market election, will be 2025. Because for those, you have to make it between January 1st and April 15th. And if you don't do it in that time frame coming up in 2025, you will not be able to make it for 2025 at all. And that's why you can't make it now for 2024, because individuals, we've passed that April 15th time frame. For S Corps and for partnerships, it needs to be made between January 1st and March 15th. However, there's one exception. If you create a brand new entity, for example, if you create a brand new entity this month, set up an LLC this month, you can make the mark-to-market election for that entity right away. And so you can actually theoretically, if you set up an LLC and move your trading assets into the LLC, then you can still trade for the next month and a half under mark-to-market, if that's something that you wanted to do. And there are reasons for doing that, and actually benefits to doing that as well. However, I do need to give you my second warning here, because there's some mark-to-market warnings, and you need to pay attention to this, because we have clients that haven't paid attention to this, and it's cost them dearly. So first of all, under mark-to-market, it's not advisable to hold long-term securities. The reason for that is mark-to-market looks at the account, and if you have, let's say, $10,000 at the beginning of the year, and you have $15,000 at the end of the year, mark-to-market says you had a $5,000 gain. Now we're assuming no contributions or distribution or anything like that, just whatever. Mark-to-market assumes a $5,000 gain, and you're going to pay tax on $5,000 gain. However, if that was a long-term holding and you didn't sell anything during that year, there would be no taxable gain under normal accounting. So mark-to-market can tax unrealized gains. So you don't want that. So we recommend that you keep your long-term investments as far away from mark-to-market as possible. It is a very big problem, and it can be a very big problem, and you want to keep long-term stuff away from mark-to-market. Mark-to-market is best for short-term trading. So that's our first warning. Second, it's possible in some years to have a larger mark-to-market gain than what was reported on the 1099-B. Now, 1099-B is what you get from your broker at the end of the year that shows the gains and the losses. If you make the mark-to-market election, that gain will never agree with the 1099-B. 99.9% of the time will never agree with the 1099-B, because 1099-B is heavily influenced by wash sales. And so it's not correct. And it only looks at individual transactions. It doesn't look at the account as a whole and things like that. There's all kinds of reasons. But it is possible, because what happens is those wash sales under normal accounting eventually turn into regular losses. And so they catch up. So with mark-to-market, the idea is you're trying to pay tax on what you actually did right now. And usually in the first years, the wash sales under old thing will show a higher gain or a smaller loss under the traditional accounting than mark-to-market, but ultimately it all catches up. So it can happen that in some years you'll have a higher mark-to-market gain than what's on the 1099-B, because everything's just catching up. It doesn't happen at the beginning usually, but as it catches up, it does. Here's another thing. If you make the mark-to-market election personally for yourself and don't meet the trader tax status qualifications, you will lose mark-to-market. Now, that's not necessarily true in an entity, such as a partnership or an S Corp or something like that. But on the personal level, that is definitely true, particularly because the IRS examines those returns much more carefully. So if you don't have 720 trades in the year, if you don't have the 75% of the trading days that you're trading in, or you don't meet the 500 hours in research and education and trading, you're going to lose that mark-to-market election as well. And if I had a client do that this year, he admitted it. I didn't trade a whole lot, and therefore I can't deduct my expenses and I can't do mark-to-market. And then you have to make the election all over again. So these are some traps that people do fall into that you have to be aware of. And so as long as you're aware, you can actually plan appropriately. Okay, so we've talked about trader tax status, which allows you to deduct expenses. We've talked about mark-to-market, which allows you to get around those wash sales and the $3,000 loss limitation and actually pay tax on what you actually do. So let's also talk about entities. Entities are actually our workaround for a lot of stuff. Remember all those problems I've mentioned back when we talked about Schedule Cs? There's a whole bunch of problems there, audit risk, things like that. And also the problems with mark-to-market. A lot of these problems can be cured or taken care of with entities. Now, there are a lot of entities out there. There's sole proprietorship, single member LLC, general partnership, limited partnership, multi-member LLC, S corporation, LLC, S corporation, C corporation, LLC, C corporation. What in the world do we do with these? Well, let's kind of narrow it down. We're actually going to narrow it down to just a couple. Sole proprietorship and single member LLC, we don't recommend, because sole proprietorship is putting things on that Schedule C of your personal return. We already said, that's got all kinds of traps embedded in it. A single member LLC does the same thing. You just got LLC protection, but it still puts it onto your personal tax return on Schedule C and really creates all kinds of problems. We don't recommend that. The other things here, there may be reasons for doing them, but we don't really recommend them, because we recommend going through an LLC first so you get the asset protection, so that whatever happens outside the LLC, if it's a lawsuit or something like that, it doesn't filter into the LLC, and vice versa. If there's a problem in the LLC, it doesn't come out. So we recommend setting up an LLC. But we generally lean primarily to a multi-member LLC, an LLC partnership, or an LLC S corporation. Almost never do I recommend any type of a C corporation. A lot of people look at that 21% tax rate and say, ooh, I want to do the C corporation because that's really great. Well, there's a lot of traps there. So you want to be very careful about that. And I'm listening to a lot of webinars right now about tax changes and things like that. And most people are expecting that 21% tax rate to go up very soon. But we'll see what happens with that. And I'm going to talk about that more at the end of this presentation. So I've already mentioned the sole proprietorship of the single member LLC. Don't do much for a trader. Don't go out and just set up an LLC just for the sake of setting it up. And this is one of the traps that people fall into. They hear, oh, set up an LLC and it'll really do you great. Nope. Single member LLCs do not do well for you. Now, I will add this. The type of entity that's right for you depends upon your situation. And so this is why you need to get tax consulting first to help figure out which is the right way to go. I mentioned a little bit ago, we don't recommend C corporations hardly, but this year I did recommend it once or twice, because there are certain situations there where that's the only way they could get it done. And a lot of it has to do with foreign partners and stuff like that. S corporations, we might recommend that, but that's under certain circumstances, because S corporations require the officers or the owners to be paid pay themselves a salary. And so now you got payroll company, and you've got quarterly payroll taxes and year-end tax returns and things like that. And it just really gets complicated. There are reasons for doing it, but we don't recommend it right off the bat. What we recommend to most people is right away, multi-member LLC. And you say, well, wait a second, that's a partnership, and I don't know anybody. Well, if you're married, you already got a partner right there. Easy breezy, you got a partnership right away. You say, well, I'm not married. Well, you can get a family member, or a niece or a nephew or an uncle or somebody in your family. They'll take 1% and you keep 99% of it. There's a partnership. You say, well, I don't have any family. I don't know anybody. Well, do you have a business? If you've got another business, like an S corporation or a C corporation or a single member LLC, that can be a partner in there. Then you own it all. It's just the single member LLC or whatever the other business is owns a small piece of it. You own it, and it all still comes back to you. You say, well, I don't have a business. Well, there could be, we could set up an irrevocable trust where you could save up for a family member or a charity or something, so that when you pass away, a portion of that money will go to the beneficiary. So there's a lot of ways to do this, and we help people all the time get those partnerships set up. So it is possible. So why do we recommend a multi-member LLC or a partnership LLC? Well, there's several reasons here. And some of these reasons are true for S Corps too, but I'm going to really kind of stick with the partnership here first. Before I get into the pros, I'm going to tell you what the cons are, because I want you to be fully aware of what's going on. First of all, with LLCs in most states, not every state, but most states, there's a yearly LLC fee. You have to register with the state. And it depends on what state you're in. California is $800 a year. South Carolina is $25 a year. And they range. States range in between that. There are a handful of states where you never have to pay again. You pay for the initial setup and you don't have a yearly fee. But most states you're going to pay something. Number two, with a partnership LLC, you do have a tax prep fee. You have to file a partnership tax return to report the partnership income. Now, the partnership itself doesn't pay income taxes because it's a pass-through entity, so everything goes back to the partner's tax return and the taxes paid there. But you still have to have the return prepared. And number three, there can be increased broker fees, because when you set up an LLC or any other type of business, you can't use your personal account because that's under your Social Security number. You have to set up a new brokerage account underneath the EIN of the business. And when you do that, you're setting up it as a business account, then a lot of brokers will look at it and say, they're a business, they can afford to pay a little bit more. There are ways around that. Some people keep their personal accounts open and use the free stuff on the personal side, but do the trading on the LLC side, stuff like that. So there's ways to actually make it work. But there are increased fees, but I'm going to tell you how to take care of those here in a little bit. But here's what happens with a multi-member LLC. Excuse me. First of all, here's our pros. First of all, you get asset protection. I mentioned this a little bit ago, that if there's a lawsuit outside of the LLC, the business is protected. They can't go after the assets, or at least there are state limitations on that. It does vary by state, but you do get some protection. And likewise, anything that happens in the LLC can't get out, but most traders don't get sued. So not for trading, at least. So that is one benefit. Another benefit, and most people don't realize, is that when you form an LLC, doesn't matter whether it's single member or multi-member, you get to choose how it's going to be taxed. So if you form a multi-member LLC, we generally recommend you start off as a partnership. And you go for a few years. And then when the circumstances arise, things are going really well, then all we have to do is file a piece of paper with the IRS and say, hey, we are electing to be taxed as an S corporation now. You don't have to change anything at the state level. The only thing that changes is your tax form with the IRS. So everything stays the same except for your tax form, and you're treated like an S corporation in that case. And then in a few years, if you want to go back, you can do that. You can change this every few years. That is particularly important because as tax laws change, one form may be preferable to another as far as tax preference. So let's put it that way. So you have the flexibility there to change. Number 3, there can be a reduction. In fact, there is. I'll just say it is. There is a reduction in IRS scrutiny. I mentioned a little bit ago with Schedule Cs that they are audited like crazy by the IRS. Not guaranteed you're going to get audit, but they do have a high audit percentage. When you go into a partnership, and for that matter, an S corporation, the audit rate is super, super, super low. And so you get rid of really the IRS scrutiny by doing this. And that's something that a lot of people like. Number 4, the home office deduction. I mentioned with the Schedule C that the home office deduction can be limited, that matter of fact, it can be eliminated altogether. When you're talking about a multi-member partnership or an LLC partnership, that home office deduction opens wide up. And most people can get at least $1,200 a year because you get a percentage of what you're already paying, home mortgage interest, real estate taxes, or if you rent, a percentage of your rent, insurance, all your utilities, including cell phone and internet, HOA dues, repairs and maintenance, your lawn care, things like that. We can take a percentage of that and write it off. And that it can be very beneficial too. In fact, I'm going to come back to it here in a second. Number 5, it solves the W-2 trading issue. I mentioned a little bit ago that if you trade on your personal return and you have a W-2 job, you're a full-time trader, the IRS doesn't like it. Well, what happens here, if we form an LLC partnership, the trading then moves to the partnership. You still got your W-2 on your personal job, and then when that partnership trading stuff flows back through to your personal return, it looks like you're investing in a business. It doesn't look like you're actually being a full-time trader. So it solves that problem with the IRS. So that's a really good thing that happens there. It also solves the mark-to-market long-term, short-term dilemma. I briefly touched on this a little bit ago, that you do not want long-term holdings like more than a year or whatever. You don't want those under mark-to-market because it will tax the unrealized gains. So one way to separate that and get as much distance as possible is that on the personal side, you keep your long-term investments. Stuff you're going to keep 1 year, 5 years, 10 years, or whatever it is. And then you do all your short-term trading in the LLC underneath the mark-to-market election. And that gives you the best of both worlds because you don't lose the long-term capital gains rate for the long-term stuff, which caps out at 20% right now. And you still got the short-term stuff in a tax-advantaged situation there. And number 7, the tax savings can pay for your LLC. A lot of people balk at the extra expenses, the yearly LLC fee, the tax prep fee. But if you actually go and do a multi-member LLC, the tax savings you get from deducting the extra expenses can pay for, the refund will pay for the extra LLC expenses. Let me show you. Let's suppose you've already got trading expenses, and one I'm going to come back to is that home office deduction. The refund you get from deducting those expenses will often pay for your LLC fee and your tax prep fee. And though you don't have any extra fees out. It really pays for itself. Here's an example. Suppose a person lives in Illinois. The yearly LLC fee is $75 a year. And let's suppose a tax prep fee is $600 per year. So you got a total of extra fees of $675. Now, let's assume the person's in the 35% tax bracket and Illinois tax is a flat 4.95%. So you get a total of 39.95% in taxes. If you do the math, you'll find out this person needs at least $1,015 in trading expenses to get the government to pay for the multi-member LLC. You say, well, wait a minute. That's $1,000 in expenses. Well, keep in mind what I said, that home office deduction a little bit ago, stuff you're already paying for and not deducting, that can give you about $1,200 or in a lot of cases more in deductions. So that takes care of the trading expenses right there. You pay for your LLC. Not only that, you get your tax prep fee is going to be deductible now. Your yearly LLC fee is deductible. So all of that plays into this so that you actually get the government to pay for your LLC. All right, so that is entities. Again, you want to talk to somebody to make sure that you get the right entity set up and get it set up properly. There's a lot of things in setting up LLCs. You got to have operating agreements, you got to have an EIN from the IRS, setting up brokerage accounts, things like that. And we do that. Traders Accounting does do that, but other people do it themselves. But you got to have it set up properly. All right, let's go back to our summary and talk about all three of these things. And then we're going to talk about the future a little bit. First of all, trader tax status allows you to deduct trading expenses if you qualify. So you got to meet the three criteria: 720 trades per year. You got to have trade in 75% of the trading days per year, and you have to have 500 hours in trading research and education. But if you can deduct those expenses, then certainly you can start getting more money back from the IRS. Number two, the mark-to-market election allows stock and options traders to pay tax on what was really earned or write off entirely what was off. And frankly, both of these are paying attention to that cash flow. We're not paying attention to the cash, the incoming cash, which what you do with trading, but we are trying to stop the cash from going out in taxes. And so we're trying to reduce our tax liability so that we retain some of that capital for ourselves. And finally, forming an multi-member LLC particularly provides asset protection, decreased audit scrutiny, which can be a major deal because IRS audits, even if you got a perfect return, IRS audits take a minimum of 15 hours at least out of your time to defend. So it's a problem. That's even if you don't hire anybody. So just an IRS examination can create all kinds of problems for you. And your LLC could be free. If you have enough deductions, and most people will, then you'll get the LLC, the government to pay for your LLC. Okay, so some things to watch out for because there are some other traps. And this is kind of my third warning, I guess. I didn't think about it until now, but things to really watch out for in trading you have to be careful of. One, prop firm trading changes everything I've talked about. For those of you who are not familiar with prop firms, that's basically you are signing up with a firm, you're taking their challenges, you're trading their money once they accept you, but then you are working for them as an independent contractor. You're not getting gains or losses from them. You are working as an independent contractor. And so now all of that stuff has a totally different tax situation. And matter of fact, increased taxes. So you have to be aware of that. Again, consult with somebody on that if you plan to start trading through a prop firm. Number two, and this kind of came up in the last session, I was listening to a little bit, some ETFs like SPX are treated like futures contracts. There are about 10 ETFs, and the biggest one is SPX. Matter of fact, somebody mentioned in the last one VIX, the volatility index. They are treated like futures contracts instead of being treated like regular stocks. Now, why is that? Well, this handful of ETFs are traded through Chicago. They're not traded through New York. And what's in Chicago? The commodities exchange, where the futures and the commodities are traded. So SPX, VIX, and a few others are traded through Chicago. Therefore, they are treated like futures contracts and have a completely different tax structure. Now, one of the ironies here is, well, what about SPY? Well, SPY is traded in New York, and that's treated under normal stocks and options, and that can be under mark-to-market, while SPX can't. So you have to be aware of where your trading or stuff is trading, and you have to be aware of what's going on, because I have clients every year that get surprised. I say, well, all I've been doing is trading ETFs, and yet I've got all this 1256 contract or futures contracts on my 1099. And I said, yep, you were trading SPX, weren't you? Yeah, well, that's why. And so you got to be careful about those ETFs and where they're traded. All right, number 3, trading other people's money or even giving them advice can create major problems. A lot of people come to us and ask, well, I've got friends that want me to invest their money, and I've got my family wants me to invest their money, and my advice is don't do it. That can get you into a whole bunch of trouble with the SEC, the federal regulations, and state regulations. There's the 3 of them have to be met. And you probably don't have a broker's license, and you need that. You need special licensing in order to do that anyway. You can't even give them advice. For example, you'll notice that, listening to Jeff and the other presenters talk, they don't tell you what stocks to invest in or options, because they can't. They're not licensed to do that. I can't come on here and tell you to invest in alpha, beta, gamma stock. And I'm making that up, obviously, because if I do, then I become an advisor, to a stock advisor, and I've got to have special licensing for that. If you start telling other people what to trade in, you give them specific advice about what to trade, now you have to have a license for it, and you can run into some major problems. All right. The last one is what's on a lot of people's mind right now, the election. A week ago yesterday, we had an election, obviously, and things have changed. At least the government is going to change considerably. So what's that mean for us as traders? Because I do trade myself. Well, as traders, nothing is going to change for 2024. The lame duck Congress is coming in. There's no tax legislation, and probably couldn't get passed anyway, because there's just, in a lame duck session, there's all kinds of confusion. So 2024 is done as far as tax laws. However, in 2025, you're going to have a Republican president, a Republican Senate, and a Republican House of Representatives. I estimate that the Senate is going to be busy confirming appointees in the first part of the year. However, I think the Congress, the House of Representatives, is going to be focusing on tax laws, because we have the TCJA Act expiring next year. Now, those of you who don't remember what that is, the TCJA was set into motion back in 2017. That is what gave us the higher standard deductions, the lower tax rates, the lower tax rate down to 37%. It gave us bonus depreciation, and there's a lot of things that it really helped out with. All of that's set to expire at the end of next year if Congress doesn't do anything. So, which means if it expires, highest tax rate goes back up to 39.6%. You no longer have the higher standard deductions, and we go back to a lower standard deduction and personal exemptions. There's no bonus depreciation. That's actually being phased out. It's a little bit different, but you get the idea that things massively change if they don't do anything by the end of 2025. So I think Congress is going to start looking at some major tax reform next year. So make your plans for 2025, but don't set anything in super stone like you can't budget, because things, I don't mean budget, but I mean you can't budge on it, because things are going to change, in my opinion, over the next year. So keep an eye out for what's going on in legislation. So once again, we come back to our contact information, our website, www.tradersaccounting.com/metastock November 24. So MS 1124. If you want to get that free ebook, which describes everything I've talked about so far, and then some. Our phone number is 800-938-9513, and our email is learn@tradersaccounting.com. Now, what do? I mean, let me give you an idea of what Traders Accounting does. We provide consulting. We can talk to you and figure out what's the best form for you to set up to save on taxes. We can talk to you about taxes and retirement, things like that. We can set up an LLC for you. We do that all the time for people. We have a bookkeeping service that helps keep track of gains and losses and expenses so that people know how their business is doing on a month-to-month basis. And of course, we do tax returns for every kind of entity. We do it for personal, we do S Corps, we do partnerships, we do C Corps, we do trusts, whatever it is, we can do the tax return for that. So if you need help, please give us a call. And we're more than willing to help you out and be able to accommodate you and help you to save some taxes. So I'm going to have Jeff come back in here, and we're going to answer any questions that anybody might have real quick if he's got enough time.
I've got, well, yeah, we've got a couple. Mike says, is there a minimum number of years that you have to keep traders tax status?
No, if you're trading personally, you can do trader tax status for 5 years, and then you just don't meet the qualifications anymore, and you don't have trader tax status. However, as I mentioned earlier, if you have mark-to-market on top of that, and you lose trader tax status, then your mark-to-market election goes as well. But there's no requirement that you keep it.
Okay. Is it pretty easy to get out of if you want to revoke it?
Trader tax status just automatically revokes if you meet the qualifications. If you still have trader tax status and want to get rid of mark-to-market, then you just have to reverse the election. It's called revoking the election with the IRS. And that's not difficult to do either. Again, it's got to be done at the beginning of a year.
Nim says, thanks. I have a single member LLC. Is it easy to change it to a multi-member LLC?
It should be fairly easy. You have to check with your state, depending on the state you're in, because some states, when you set up an LLC, you have to list whether it's a single member, or you have to list the members, let's put it that way. And so if you got one member on there, it's listed as a single member. If you got more than one, you got a multi-member. Other states don't care. You just have an LLC. So you have to check with your state to see if there's anything you need to do there. Call the Secretary of State's office. But once that the state is satisfied, you may have to fill out a form if you got one of those states that cares. Then it's just a matter of finding a partner and then filing the tax return as a partnership. And then you're good to go. It's really not super difficult.
Thanks for the question, Nim. Let's see, Bill in YouTube says, what about selling at a loss?
I'm assuming he's talking about selling securities as a loss, right?
I assume so too, yeah.
Yeah, if you don't have the mark-to-market election and you have a loss, an overall loss, because we always add up our gains and we add up our losses to find out which one's more dominant, if you will. And then if you have a net loss, then you'll get, under normal accounting, you get $3,000, and the rest of the loss carries forward to the next year. However, if you've got mark-to-market, you get to write off the entirety of the loss in the year in which it was incurred.
Right. Okay. Those are all the questions, Jerry.
All right. Good questions. I appreciate it.
Let's see. Okay. I want to say thank you very much for coming in here, spending some time with us. I appreciate that. Great session as always. You did a great job.
Thanks. Well, it's good to be here, and I appreciate you having me.
Great. Let me go ahead and make me the presenter. I'll show my screen. Okay. Thank you very much, Jerry. Really appreciate it.
Take care. See you all later. Bye.
All right. We'll just kind of go on. All right. Here we go. Oh, before we get into this, tomorrow we're going to start 10 a.m. Serge Berger is going to come in and talk about his momentum system. That's very, very cool. Jake Bernstein, Brian Lauder coming in after that. Steve Primo after that. Great lineup chat. John and Jack Kosar from Asbury Management are going to be here. Oh, look, I'm going to talk again. Cool. we'll have David Landry finish us up tomorrow as well, which it's been a while since David has spoken, and he does such a great job. I'm really glad that he accepted the invitation this time. So tomorrow we've got another full day. In terms of wrapping up and putting a bow on today, let's go ahead and I think somewhere down here, yeah. Thank all the sponsors. Thank you, Stocks and Commodities, for sponsoring the event. We appreciate that. Thank you again for CMT. Of course, we're Metastock. Trade Thirsty, CMT Association, the Traders Forum. If you haven't joined the Traders Forum yet, you should. TheTradersForum.com. You can come chat with everybody, talk, go through some lessons, watch some more videos, all that kind of stuff. Again, though, if you haven't tried Metastock, it's a great software program. If you go to metastock.com/conf-promo, metastock.com/sales-chat, or give us a call, 800-882-3040. I'll be happy to answer any questions that you've got. Thank you very much. Oh, Anna asks, when will and where will the recording be posted? It's being posted right now. Actually, all the recordings for all week, we just stream them straight to YouTube. If you go to youtube.com/metastock, they'll all be there. So with that being said, thank you for being here. Hope you enjoyed all of the sessions today, or the ones that you were able to attend. Stay healthy, stay well, stay good. Take care of yourself. I'll see you tomorrow.